Good morning, everyone. Good morning. My name is Travis Plunkett. I am a Senior Director at the Pew Charitable Trusts. Thank you for joining us at Pew's Conference on Financial Services and the Post Office. Our goal today is to examine from every possible angle the question of whether America's post offices should follow the lead of other countries in offering financial services targeted to consumers who don't have access to affordable mainstream financial products. These products could include small dollar loans, bill payment services, payment transfers to other countries, or remittances, prepaid debit cards, and even possibly savings and checking accounts. You're going to hear a lot more about our plan for the day after our first session from our Executive Vice President, Sue Urahn. So let me cover a few logistical and housekeeping issues before we dive right into the agenda. First, if you're looking for Wi-Fi access and you're here at the conference, on every table is the guest name and the password if you need to access it right now. Next, we'll be streaming the entire event live on the web, and we encourage you to follow it on Twitter or tweet about it at #POBanking, which is mentioned carefully throughout our materials and in the room. That's #POBanking. If you've not done so already, please turn off your cell phones for the silence your cell phones for the duration of the conference. And if you need bathrooms, you can proceed to the right outside of the room. Look for the exit signs. They're on either side of the elevator corridor. If you have any questions about the logistics for the conference, I'd like to ask Urahn Bongard, our logistical coordinator in the back of the room to the right. You can ask Urahn. You've already met Susan Weinstock, our lead conference organizer and director of consumer banking. If you have questions about the agenda, talk to Susan. Finally, I'd like to note one important scheduling change. Senator Elizabeth Warren will be speaking at noon instead of 12:15. Okay, that's the logistics. Onto the program. We're excited to be releasing new research to open the conference. First up will be Alex Horowitz, who will provide an overview of the results of a national survey on Americans' attitudes about the post office and financial services. Alex is a research officer with Pew, working on our small dollar loan team. Next, we'll hear from Clint Key, who's a research officer with our Family, Financial Security, and Mobility team. He's going to talk about the results of a National Geographic analysis Pew conducted of where post offices are in relationship to the financially underserved and also in relationship to banks. Let's ask Alex to come up and get started.
Morning. So Pew conducted a nationally representative random digit dialing survey. It included cell phones and landlines, English and Spanish, at least 6 attempts per phone number. There were 1,626 adults in the sample, fielded from May 28th to June 18th. Margin of error is 3 points. This was about the Postal service offering financial services. You should note it includes an oversample of adults who do not have a checking account or they've used alternative financial services in the past year. That means check cashing, bill pay, payday loans, or regular use of a prepaid card. They're identified throughout the slides as AFS unbanked. I will call them that for short as we move along. Of course, this oversample was weighted down to its proper proportion in the population. About 30% of people fit into one of these 5 categories. So feelings toward the Postal Service. 74% of the public expresses positive feelings toward their local post office branch. Among AFS unbanked folks, that's 76%. You'll see 52% of AFS unbanked expressed very positive feelings. Toward the U.S. Postal Service overall, 71% positive among the general public. 77% positive among AFS unbanked, includes 50% very positive. So for context, are these high numbers or low numbers? Well, feelings toward check cashers, bill pay stores, 21% positive among the general public. Feelings toward payday lenders, 9% positive among the general public. The bank or credit union branch you visit most often, that particular item was only asked of folks who have a checking account, 82% positive. Feelings toward credit unions will see 52% positive, banks 56%. Letter carriers who deliver your mail, 78% positive, including 60% who said very positive. And that's compared to the 74 and 71 you saw on the previous slide toward your local post office branch and toward the U.S. Postal Service overall. It's not that everyone else said negative to each of these questions. Some of these items had lower name recognition than others, so you can see some neutral feelings or don't know. But in terms of understanding positive views, you'll see the Postal Service does pretty well here with letter carriers at 78, local post office branch 74, U.S. Postal Service at 71, and we see high numbers among AFS unbanked folks toward the Postal Service as well. So in terms of actually entering branches, you can see 26% of the public said they visited a post office branch regularly in the past year, 58% occasionally. So that's 84%, 5 in 6 Americans say they visited a postal branch in the past year. 1 in 6 did not. Among AFS unbanked folks, 77% visited regularly or occasionally in the past year. So in terms of thinking about the OIG proposal and whether people are making it into post offices and whether this population is that's targeted for potential postal financial services, people using alternative products now, or the unbanked, 77% getting in the past year. Customer service. Your local post office branch. Each of these items on the slide was asked only of people who have used one of these services. So people who have been to the post office, 76% give a positive view of customer service. That's 77% among people who use AFS or are unbanked. Only higher score we see here is among people talking about their bank or credit union branch that they visit most often, 85% positive on customer service. Check casher you visit most often, so this is among people who use check cashing, 58% positive. Bill pay, so similar vendor, similar stores, often the same, 57% positive. Among people who use payday loans, 41% give a positive review of customer service at the payday lender they visit most often. So in terms of thinking again about the OIG proposal, numbers look pretty strong in terms of postal customer service views among people who use alternative products or do not have a checking account now. We're going to move on to the next section, talking about views not of overall feelings or customer service, but products and whether people favor or oppose the Postal Service offering products. So respondents were asked, as you may know, the Postal Service offers money orders in branches. Do you favor that, oppose it, or doesn't it matter to you? 7 in 10 say it doesn't matter to them. So this is context for thinking about how we should evaluate these answers. Postal Service offers money orders now. 7 in 10 say that doesn't matter to me. This isn't something that affects my life. It doesn't resonate as an issue of importance to the general public. Among people with an opinion, overwhelmingly favor. 30% say I favor that, 1% oppose. So how to think about financial services at the post office, this is the answer we get on the baseline of what the Postal Service is doing now. This is the core proposal. Asked without giving prior information, if the Postal Service offered prepaid debit cards in branches where customers could deposit checks or cash onto the cards, use the cards for purchases, or withdraw cash at an ATM, would you favor that, oppose it, or wouldn't it matter to you? Because, of course, the basis of the OIG proposal is centered around prepaid debit cards and using these as transaction accounts. So where do people shake out on this issue without being given more information? 27% say, I favor that. 10% oppose. 63%, this wouldn't matter to me. Comes in similar to the money order situation where people are saying this doesn't really resonate. This is not a top-of-mind issue. probably that this wouldn't affect their life. Among people with an opinion, does pretty well. 27% favor, 10% oppose. Among AFS unbanked, does better. 38% favor, 9% oppose, but still we see a majority, 52%, saying wouldn't matter to me. Among Republicans, again, majorities say wouldn't matter, but of those who have an opinion, most favor it. Same with Democrats. Independents as well. So looking across these 5 groups at the bottom, see, majorities say that this wouldn't matter to me. So if we're thinking about this as an issue that's going to stir up a lot of interest, sentiment, stir passions, that's not where the public is. Most people saying that this is not an issue that would matter to them. Of people with an opinion, they generally like it, and that's true across all of these groups. So if banks or credit unions began operating a window at post offices where customers could open or access checking and savings accounts, would you favor that, oppose it, or wouldn't it matter to you? Remember, this is asked of everyone, so same idea, trying to get at sentiment and whether this issue resonates. Similar results, favored by 2 to 1 if people have an opinion, but again, a majority say this wouldn't matter to them. So even if it's banks or credit unions and not the Postal Service providing products, doesn't seem to be a big shift in whether it matters or not. Among AFS unbanked, favor it by 3 to 1. Majority still say wouldn't matter. Republicans also favor, but majority wouldn't matter. Democrats, same situation, independents as well. So once again, same idea, but with banks or credit unions offering the products at postal locations, majority saying it wouldn't matter. But among people with an opinion, they basically like it. If convenience stores offered some postal services, such as weighing packages, postage, and drop-off boxes, would you favor that, oppose that, or wouldn't it matter to you? So getting at a different idea, but seeing whether postal services offered outside of postal locations are popular or resonate. Pretty popular again, favored by 4 to 1, but a big chunk of people, again, saying this wouldn't matter to them. So important to keep in mind as we're thinking about this as an issue of general interest. Among the AFS or unbanked, very similar results. Republicans, Democrats, independents. Each of them gives fairly similar answers on this. People generally like the idea if they have an opinion, and a big chunk say that it wouldn't matter to them. So giving people now a very quick summary of the arguments that have been made around the post office expanding financial services, read 2 statements and asked which comes closer to their point of view, trying to summarize very quickly the positions that have been articulated. Statement A, providing financial services at Postal Service branches will expand access to safe financial products for low and middle income Americans while providing a new source of revenue for the Postal Service? Or is your view closer to statement B? Providing financial services at Postal Service branches will divert resources from mail delivery and give the government-run Postal Service an unfair advantage over privately run companies that already offer financial services. These were, of course, rotated. And public comes out closer to statement A, the position supporting the expansion of financial services at post office branches by 58-32. Among independents, Democrats, and Republicans, there are splits, though they're not very large. Majorities of each group agree with statement A, but not by overwhelming margins. Among AFS unbanked, similar. 64% agree with statement A, 29% with statement B. So after being read a very quick summary of each position, the public does come out closer to expanding financial services at post offices, which is consistent with the uninformed trial heat earlier, where we saw more people favoring this than opposed, but not overwhelming results. Now, as moving on to views of this as consumers. So if post office branches offered, fill in the blank, the ability to deposit a check on a prepaid card, pay bills, get prepaid cards, obtain small dollar loans, each of these were asked separately, how likely would you be to use or purchase it? In the general population, not a ton of interest. Between 1 in 6 and 1 in 4 say that they would be likely to use each of these. Majority say not at all likely for each of the 4. 58% not at all likely to deposit a check on a prepaid card, 54% not at all likely to use bill pay, 56 prepaid, 65 small dollar loans. So we're thinking of this as a matter of general consumer interest. Will people flock to use alternative financial services in the general population? Looks like there is a market here, but it's limited. Majority say they're not at all likely to use these services. That changes when we look at people who are already using alternative financial services. Very different results. If a post office branch near you offered, and fill in the blank, check cashing, prepaid cards, bill pay, payday loans, each of these was asked separately, and only if people who already use the products. How likely would you be to use it? So if this were offered at a lower price than other providers, how likely? Among check cashing customers, 81% said they'd be likely to use check cashing at the Postal Service if it were offered at lower cost. 59% among regular prepaid card users, 79% among bill pay customers, 71% among payday loan customers. So it does look like there's quite a bit of interest in using lower cost postal financial services if they're made available among people who are already using products like this from non-bank providers. This question was asked only of people who do not have a checking account. If a bank or credit union had a location at the local post office where you could access bank accounts, would that make you more likely to open a bank account or not? 38% said make them more likely to open an account. 58% say not more likely. So worth keeping in mind if we're thinking about the unbanked and whether this would encourage use of a checking account. If we're made available at the post office, that 38% say more likely, 58% not. A couple of caveats in these next two slides. If we're thinking about cost as the primary reason that people are going to move to the post office if lower priced financial services are provided there, this question was asked among bill pay customers and check cashing customers. Only 3 in 10 say that cost is what's most important in deciding where to pay a bill or cash a check. So if lower cost alone is expected to bring in customers, it looks like 7 in 10 are prioritizing something else. Location is going to be important, as you'll hear about from Clint. And among payday loan customers, very similar results. Only 28% say the fee charged is the primary determinant of where they choose to get a loan. So there are other factors going on here. Price sensitivity is not high enough to steer most alternative financial services customers to the post office if services are provided there at lower cost. Wrap up. So Postal Service, your local branch, including customer service, letter carriers, all viewed quite positively. That's true among the general population, and it's true among users of alternative financial services. Majority of people in the general population do not see postal financial services as mattering to them, doesn't resonate as an issue. But of those with an opinion, they favor it. And that's true of Republicans, Democrats, and independents, and especially true of people who use alternative financial services or who are unbanked. There's little interest in using alternative financial services at the post office in the general population among people who don't already use them. But if that group is narrowed and we look at people who are using alternative financial services now, if lower priced ones are offered at the post office, most AFS customers say they would go there to get them at the post office instead, with the caveat that lower prices alone are unlikely to be the driver because 7 in 10 are focused on something other than cost in deciding where to cash a check, pay a bill, or get a payday loan.
Just want to mention, if you've got questions for Alex and Clint when they're done, there will be plenty of time to ask them. After that, we'll hear from Sue Urahn with Pew, Representative Issa, and the author of the Inspector General's report that Alex has referred to, Dave Williams. And now Clint Key.
Good morning, I'm Clint Key. I'm a research officer here at Pew. I work on savings and financial security, and I also do some work with our consumer banking product. When the Office of the Inspector General released their report in January, like most of you in the room, we read it with great interest. And while some of the other panels later today are going to take up interesting and important issues related to the economics of the post office, some of the legal structures around what may or may not be permissible under current law and under future potential law. What we were primarily interested in, for our purposes and for our research, was how postal banking might fit into the landscape of financial services that are currently being used by Americans. And to do that, we wanted to start with an overall view of what financial services look like for the American public. We start with banks, and we find there's an enormous amount of consumer choice, and this shouldn't be a surprise to any of you, in banking in the United States. There are over 6,000 different banks operating almost 95,000 branches in the U.S. That's the 50 states plus D.C. Our friends at the FDIC helpfully provide a list of all of these branches complete with locations, and so we're able to see where they are and how postal branch locations may fit into that picture. There's a widespread perception, and an accurate one, that banks are closing branches, but not at the rate that you might think. Some banks are closing, some banks are opening. On net, relatively few bank branches are closing compared to the bulk of branches that currently exist in the country. Beyond banks, consumers have substantial other options for the provision of their financial services. There are 20,000 or so credit union locations. We chose not to include those in our study. Many credit unions have membership restrictions. Even if a person is close, if the credit union is convenient, they may not qualify for membership based on other criteria. And then there are a myriad of other alternative financial services providers like those that Alex was talking about, check cashers, bill pay, payday, and title loan providers. Those services, while they're widely used, are costly to consumers and aren't considered part of the financial mainstream. And the goal cited in the Inspector General's report was bringing consumers into the financial mainstream through the provision of services. Beyond that, there are ATM networks, online and mobile access programs, lots of ways for people to access their account. We chose to focus on bank branches for a couple of reasons. First, the FDIC's research has shown that when people interact with their financial institution, they're more likely to do so at the bank branch than through an ATM or through the bank's mobile network. And there are certain core functions that are much, much easier and sometimes only possible at bank branches, and in particular, opening accounts. In most banks, to open an account, to get that foot in the financial services door, you have to physically present yourself at a bank branch. In the U.S., in spite of the myriad banking options, there's a substantial population that's unbanked and underbanked. The FDIC estimates that 8.2% of households have neither a checking nor a savings account or outside of the financial mainstream. And additionally, about 20% of households who have checking accounts are also users of alternative financial services whose needs presumably aren't being fully met by the banking system as currently constituted. If this were just a matter of consumer choice, if people looked at the marketplace and decided for themselves in a free and open market, I'd rather use alternative financial services, I'd rather be outside of the financial mainstream, it wouldn't be an issue. Where we grow concerned is it doesn't appear that that choice is free and unconstrained for the U.S. population. Institutional factors and social factors create differential levels of access to different populations by social group, by economic group, and as we're going to show in this program, by geography. There's a huge amount of heterogeneity across states in the rates at which people are unbanked. In New Hampshire, less than 2% of households are unbanked, whereas in Mississippi, over 16% are. And even within states and within localities, there's differentiation. In Florida, just over 7% of households are unbanked, whereas in the city of Miami, over 1 in 5 households aren't part of the financial mainstream. Proximity is one component of access, but it's not all of access. Hours matter, the friendliness of staff, other factors, the costs, all matter for the choices that people make financially. But proximity is a good starting point, we think, for setting up an analysis of baseline level of convenience, level of access, that, as Alex noted in our research and is found in the research of others, tends to drive access, tends to drive use among populations. We found that about 3.5 million Americans live in census tracts, and just for the time being, let's all stipulate that census tracts more or less are equivalent to neighborhoods. I'll talk a little bit more about it later. 3.5 million Americans live in census tracts that are more than 10 miles from the nearest bank branch. Additionally, in urban areas, areas with more than 5,000 persons per square mile, there are over 3 million Americans that are more than a mile from the nearest bank branch. So there's a substantial portion of the American public for whom there isn't a convenient bank branch location. Now, we took a look at, after the Inspector General's report, at whether or not post offices could fit into this picture, could change the level of access that the population, particularly underserved populations, enjoy to financial services. First, with the geographic distribution of post offices, as we get into the analysis as I show you some of the maps, it should be noted that post offices weren't located to provide financial services to underserved populations. Post offices were located with an eye towards providing mail services, towards delivering the mail. And to that end, zip codes, the underlying logic of postal delivery systems, reflect the patterns that post offices use to deliver the mail rather than underlying social geographies. That said, the post office has over 31,000 locations. If the post office were a bank, it would have a branch network about 5 times larger than that of the largest commercial bank in the U.S. currently, an order of magnitude more locations than the largest bank. In the U.S., there are about 74,000 census tracts. The U.S. Census Bureau draws census tract lines with 2 goals. First, they want to make them broadly equal in population. Each one has around 4,000 people as a goal. They range from 1,000 to 8,000 because people are hard. The second purpose that the Census Bureau brings in when they draw census tract lines is they want to capture patterns of life. They want to reflect in their boundaries the ways that people live. So to capture neighborhoods, to capture patterns of commuting, patterns of shopping, patterns of social interaction. And so while it's not a perfect approximation, when we think about how people live their lives, how people execute their day-to-day tasks, census tracts tend to be the level of geography that most closely reflects that. And over half of census tracts in the United States don't have bank branches. But nationally, relatively few of those that lack a bank branch have a post office, only about 17%. Nearly half, 45% of census tracts don't have a bank branch within 1 mile of the census tract, and less than half of those have a post office. But when we get into larger rural areas, we find that there are 10% of U.S. census tracts nationally, 10% of the 74,000, that don't have a bank branch within 5 miles of their population center. And among these, more than 3/4 do have a post office that's closer to them than the nearest bank branch, or than the nearest bank branch is. And that brings us to our goal, which is to put a little bit of analysis on what it means to have access. And the first point that we want to make is that a mile isn't always a mile. A mile has a social meaning that may be different in some contexts than in others. Right now, here in DC, to be a mile as the crow flies. I'm assuming most of you are from DC, so for those of you who aren't, just ignore this next little bit and superimpose whatever your geography and your home place is. A mile from here is the Whole Foods at Logan Circle, or the U.S. Capitol building, depending on which way you go. It's a place where you could walk to it, but you're probably not going to access day-to-day services, like banking or like the post office, for that matter. The meaning of geography, the meaning of distance, is conditioned by many social factors. Modes of transportation. If you're using a car, distance matters much less. Infrastructure matters, the presence of sidewalks. If a person's walking, the presence and direction and frequency of public transit. The availability of parking. All of these things condition how people go from place to place and what a distance means in the social lives of people. I wanted to start with Washington, D.C. We are right there. I'm never going to hit that screen over there. I apologize. We're at the bottom right of the little red cluster of dots. So let me walk you through, orient you to the map. Red dots are bank branch locations. Green dots are post office locations. The black lines are U.S. census tracts, the tract boundaries. The tracts are shaded by the percent of the population living in that census tract that's in poverty. As the colors grow darker, it indicates a larger proportion of residents living in poverty. So a couple of things of note about the map. First, while there are a huge number of bank branches relative to the population in DC, obviously, and we wouldn't expect them to be, they're not randomly distributed across the physical plant of the city. They tend to be concentrated, not surprisingly, in the business district in downtown DC, and along major thoroughfares. You can easily identify Wisconsin and Connecticut avenues leaving the city to the northwest by the presence of banks. And we see in DC swaths of territory that don't have banks, both east of the river, in the bottom right of the picture, but also in northeast DC in the top right of the picture. Places where populations aren't particularly close to bank branch locations. What's notable here is that in those spaces that aren't particularly close to bank branch locations, in some there are post offices, in others there aren't, reflecting, as I noted earlier, that post offices weren't located to provide these financial services. And in urban areas particularly, it seems in our modeling and in our analysis to be largely a matter of chance whether a post office is located in an area that is underserved by banks. The city of Miami is next. We chose Miami because it's the city with the highest proportion of unbanked residents in the country. And we see a similar pattern to DC. In the very center of the picture, in the urban core of the city, we see a big swath of very low income, high poverty census tracts with very little coverage by banks, also relatively low coverage by institutions in the Postal Service. Cleveland has about 16% of its population who is unbanked. We see two large bank deserts in Cleveland, one extending down from downtown towards the southeast, one extending out towards the northeast. Cleveland is interesting because one of the bank deserts, you'll notice in the bottom, or in the center of the screen, has a post office smack in the middle of it. The other hasn't. And this is typical of what we see in urban areas. Some places that are underserved by banks have post offices that would fundamentally change the level of access, financial access, if postal banking services were provided. Other places, it wouldn't meaningfully change the level of access that the population enjoys. When we think about populations that are underserved, whether we're talking about food deserts, whether we're talking about banking deserts, whether we're talking about access to health and other social services, historically it's been cast as an urban problem. Cities that are isolated in the urban core, but increasingly there's a recognition that levels of access are also problematic in suburban areas. This is the city of Chicago. Chicago's outlined in green. The weird little nub off to the east of the city is O'Hare Airport, which the city claims for itself. Now, you'll notice out in the Chicago suburbs, there's a huge number of banking institutions. But what I want to highlight is the spaces in between them. While a community may have banks in suburban areas, particularly around Chicago, there isn't robust access to public transit. Many of the roads are large thoroughfares that aren't amenable to walking. There's a lack of sidewalks. And so being 1 mile, 2 miles from a bank branch in a suburban area, even though you can get to a lot of bank branches, still may leave a household with relatively low levels of convenience and access to financial services, similar to a household in the city that may be closer to a bank branch physically in terms of location. Now, this is central Mississippi. Mississippi is the state in the union with the highest proportion of households who are unbanked. Central Mississippi historically is one of the poorest regions of that state. And you notice that this picture is different. And what makes this picture different is that the proportion of post office locations to bank branch locations shifts. When we look in urban areas and we look in suburban areas, we see a lot more red in the picture than we see green. When we start to look at rural areas, we see a lot more green than we do red. The cluster of banks in the bottom center is Jackson, Mississippi, but outside of Jackson, Mississippi, in this region, we see a greater coverage of space by post offices than we do by banks. And this is something we see consistently in rural areas. This is rural West Texas. San Antonio is at the bottom right, if you know the region to orient you. And everything's a little bit bigger in Texas. We see bigger open spaces, but we see a similar pattern of coverage of bank branches relative to post offices, where, again, in rural areas, there are relatively more post office locations than there are bank locations, particularly in the big open spaces. And to the biggest of open spaces, I'm originally from Montana, and I always try and find a way to put us into slides, because there aren't very many of us, and we need all the attention we can get. But Montana is illustrative here because it's a relatively not unpopulous state. There aren't very many of us. And it's a state with big geographies. And what we see when we look at the center of Montana is a several hundred mile wide bank desert. You'll notice the scale switched from miles to tens of miles. Now we're in hundreds of miles. So there's a place in Montana just to the east of Roundup along Highway 220 south of Fort Peck Reservoir where people actually live, and you can find yourself more than 75 miles from the nearest bank branch. To get to the nearest bank branch, you have to drive past 3 or 4 post office locations. And that's something we see in the big rural spaces around the country repeatedly. Now, just to reiterate, proximity is only one aspect of access. It's a necessary condition, but it isn't sufficient to make banking services, our postal services, or any other type of services convenient to a population. There are places in the U.S. with relatively limited access geographically to bank branches, and in some of those spaces, we see that There are post offices that fill gaps and that may be more convenient in terms of access than bank branches are. But the significance of that distance varies substantially from place to place, and even in some cases within places. Alex and I look forward to your questions. There are going to be microphones circulating through the room. If you could be sure to identify yourself and your institution and to ask questions rather than statements. Fair enough? Great. Thanks. Questions?
We actually have a question via Twitter.
Oh.
Alex, for you, wondering whether or not you have any demographic information about folks who support postal banking and the underbanked.
Sure. You can give more complete demographics, but as you saw from the slides, there were relatively similar numbers among the three political affiliations included in there: Republicans, Democrats, and Independents. And support among people who use alternative financial services or are unbanked. Those numbers mirror the general population pretty closely. For demographics of people who use AFS or who are unbanked, there are already pretty good sources out there with coverage on that. But if there's interest in the 800 people who comprise this sample, who use AFS or are unbanked, we can give someone that information as well.
Yeah. Nancy Pendis, the Urban Institute. Do you have anything on the age breakout of the population you surveyed?
Sure. I mean, we can give you that. It's going to look like the census overall because it's a regular omnibus survey. So it was fielded by Social Science Research Solutions and is in the field every week. So it's going to look like the population at large, but you can certainly give those demographics if there's interest. It'll look just like the census.
Just wondering if maybe younger groups are more into electronic rather than place-based services.
Okay. Yeah, I know that there's some material on that from the Pew Research Center from their work on the internet and mobile services. We don't have anything on that in particular in this survey.
Hi, Cecilia Frew from Visa. Question for Clint. Were you able to identify alternative financial services overlay? Like, so locations, I'm going to imagine it would look very different in the urban area than the rural area.
We suspect that's right. We couldn't find a comprehensive list of all alternative financial services providers. And then many alternative financial services, particularly prepaid cards, are sold in gas stations and convenience stores, and the map would have expanded dramatically. We couldn't find a comprehensive and comparable list. If someone has one, we would love to see it.
Any other questions?
Just a quick one. This is Dan Gorn from the Federal Reserve. What would happen if you overlaid credit union branches on your map?
It looks very similar. Banks and credit unions tend to be located in similar areas, and we actually did versions of it with credit union overlays. We got credit union data and geocoded it ourselves, and it didn't meaningfully change the analysis. It made my map very, very busy.
Hi, this is Ruth Goldway with the Postal Regulatory Commission. When you looked at the number of bank branches and the decline in their number, did you see any patterns as to where the banks were closing? Were they closing more in rural areas or in underserved population areas? Could you find a pattern?
We didn't look for a pattern specifically of change in bank branch location over time. The data are available, and that would be a very interesting research project for someone to undertake.
Hi, Brian Tate with MBPCA. Quick question. Just want to know your thoughts about some of the discussion in Congress about possibly shrinking the footprint of some of the facilities in the Postal Service system.
Pew doesn't have a position on the geographic footprint of the Postal Service. Changing that footprint, either expanding it or contracting it, would obviously change the data presented in the analysis.
Yes, Alex, Bob Levy, National Association of Postmasters. In your data, were you able to differentiate opinion by urban versus rural versus suburban?
Sure. I have those crosstabs. I didn't include them in the slides, but if there's interest in those numbers, they're easy to pull.
Anyone else? Questions?
I should have mentioned also the survey results don't have implications on the feasibility of postal banking or policy implications about how products would work, but does indicate that there is a market among people who use alternative financial services or are unbanked currently.
Okay, thank you, Alex and Clint. Pew will be publishing a convening from this conference, which will include results from the polling that you've heard about and from the geographic analysis, and provide a lot of information about comments that are made today and the context for this discussion. Next up, we have our Executive Vice President, Sue Urahn, who will run through the rest of the day with you and also introduce our first keynote speaker.
Good morning. I'm going to talk very slowly while we wait for the gentleman whom I'm introducing. I am Sue Urahn. I'm the Executive Vice President of the Pew Charitable Trust, and I oversee our work in government performance. Just a few points about Pew that might be helpful for those of you who don't know us well. We are a nonprofit based here in Washington and Philadelphia. Those are our primary offices. But we also have offices in Brussels and in London and a few other places around the world, primarily for our environment work. We work on a very wide range of issues, and those include work on the environment, we work on elections, we work on sentencing reform, we work on home visiting, we work on, basically if you pick an issue, there's a decent chance that we work on it. We have a range of health issues. But the thing that ties all of our work together is that we are completely nonpartisan, we are objective, we do a great deal of research, and everything that we do is based on facts. And it's a lot of why we have brought you all here today, because any kind of an interesting issue that looks like it might have some opportunity to be helpful in some arena is one that we like to take a look at. Much of our work is research-based. We also do advocacy. We like to say when the facts are in, we move from a research position to advocacy. All of our policy positions, we tend to work to get bipartisan support for them. That's generally the only way they're going to move forward anyway. But we do tend to wait until the facts are in before we move to an advocacy position. So on that note, let me welcome you to Pew's conference on the pros and cons of having the Postal Service offer financial services. Now, as you may know, Pew's been studying and reporting on various financial products for several years now, and that includes checking accounts, credit cards, prepaid cards, and payday loans. We've looked at the use of these products, and we have advocated for making them safer and more transparent. And there again, because the research showed very clearly that there were directions that we thought policy should take. So like a lot of others, we were very intrigued this past winter when the Postal Service Inspector General released a report recommending that post offices offer banking services beyond the money orders that they already provide. Now, this is not a new concept. The Postal Service has offered savings account from 1911 to 1967, and postal services in many countries currently provide a range of banking and financial offerings. Now, Pew has no position on this proposal. From our perspective, there's a lot of questions to be answered before any positions could be taken, at least in this institution. But we thought that we could contribute to the policy discussion by bringing together all of you. So we have policymakers, we have stakeholders, we have thought leaders with a range of diverse perspectives, areas of expertise, and points of view, all of which can contribute to taking an in-depth look at this issue. Our goal here is to answer fundamental questions about whether the proposal on the table could achieve the two goals that were identified by the Postal Service Inspector General. First of all, can it offer services to financially underserved consumers who do not have access to affordable, safe financial products? And can it increase revenue to the Postal Service to have it remain financially viable? Now, as you can see from the agenda, we have an impressive list of speakers, panelists, and moderators to help us examine these issues. So, first of all, many thanks to my colleagues Alex and Clint for opening the conference with new research on public views of this issue. Next up will be comments from Chairman Darrell Issa of the House Oversight and Government Reform Committee. We'll close the day with Tom Davis, a former chairman of that committee. Our lunch speaker will be Senator Elizabeth Warren, who sits on the Banking Committee. And this afternoon, we'll hear from Ruth Goldway, who chairs the Postal Regulatory Commission. Now, each of the three panel discussions are going to tackle one of the key policy questions on the table. This morning's panel is going to take a look at the potential impact of postal financial services on financially underserved consumers. This afternoon, the panel discussions are going to assess whether there are international postal financial services that could be instructive to us as we are looking at this issue, and whether there's finally, whether there's a business model that works for this proposal. At the end of the day, Travis Plunkett, who's our Senior Director of Family Economic Stability, is going to wrap up by identifying common themes and important questions that still need to be answered, and policy issues that are going to have to be considered. And throughout the day, we hope to hear a lot from all of you and a lot from folks who can reach us on Twitter, because we'd love to have a dialogue. All of your perspectives are really going to inform this issue as well. And now I have the pleasure of introducing Congressman Darrell Issa, who brings a unique and critically important perspective to this issue. He's the chairman of the House Oversight and Government Reform Committee, which oversees the Postal Service. In 2011, he co-sponsored the Issa-Ross Postal Reform Act, and he's taken the lead in moving postal reform legislation in the House of Representatives. We are enormously grateful that he took the time to join us here this morning and provide important insights on this issue. Congressman.
This is a serious subject, and I hope you'll bear with me in perhaps a little cynicism as I take the serious subject and break it down into what I think are going to have to be your discussion points throughout the day. The first question is, are there communities that are underserved in their financial needs? And the answer, of course, is yes. That's an inevitable yes. Do they correspond with the post office locations? The answer is sometimes, sort of. Because when you look at the pure physical building, in many, many, many cases, the exact neighborhoods we're talking about do not have the postal facilities that would match the actual needs. A place that dispenses money and has sit-down locations for the discussions of either a payday loan equivalent or a longer-term need, or for that matter, just general banking needs, very clearly is not necessarily what the storefront of a post office looks like. But that, of course, is simply an investment issue, so we'll set that aside. Do the postal employees have the skills to be involved in the financial activities beyond the exchange of dollars for money order, or perhaps in the reciprocal money for cash for money orders? The answer, of course, is no. Is that in the history of the U.S. banking, or the U.S. Postal, is banking a major part of their history at any point beyond, if you will, the money order portion that was slow, laborious, but did occur? And the answer, of course, is no. So the real question is, do we take an enterprise, the United States Postal Service, and repurpose it for this purpose? And that's really the only question that Elizabeth Warren and others are asking. Now, the amazing thing is there are, in fact, pressures that have been placed for years on banking to push more into these communities. And they've been cajoled and pushed into it, and in some cases they've responded. There are enterprises, and I will mention payday loan lending institutions and check cashing institutions that have responded to where there is a void. And I think for anybody who wants to do some serious, if you will, window shopping, you simply have to go to areas where you see payday lenders and check cashing facilities, and you'll generally see an absence of similar banks in many cases, but not all cases. So the first question is, what are the payday lending institutions responding to? And do they make a lot of money? And if the Postal Service repurposed, had the investment, and got into it, would they in fact be able to make money? And I think the lead was very honest. Is there money for the government to have in investing in new labor, new facilities, or at least repurposing facilities to in fact be banks with some purpose? And there, I think, is in fact the rub. I've overseen the Postal Service in both the minority and the majority now for a decade. And what I've discovered is they are slow, irresponsive, highly unionized, reasonably good at what their core function is, but very resistant to any change, any flexibility. They are an organization that at present you cannot fire, you cannot reduce in force, you cannot lay off, and you cannot force into retirement. And I want to make sure that's understood. The current Postal Service, the rank and file, cannot be let go, even if they're 75 years old, in poor health, and in a location where a post office has been closed. Is that the flexible model one would have if what you want to have is to get people to go into specific areas, underserved, and perform a function? And if that function is no longer needed for any reason, move them flexibly to the areas in which they are needed. So the first question, as someone who's overseen the post office, is this the right base model on which to build? And I think the answer there is pretty evident in any reasonable look, that you would be building almost from scratch. You would be building new facilities, or at least repurposing or moving both the Postal Service operation and this new operation to a new facility. So you have no base in facilities that truly are ready to accommodate. You have no workforce that's able to accommodate. Even if the workforce were willing to accommodate, the current work rules do not support this. Lastly, who are the customers? And I think as you go through the day, and my good friend Tom Davis, truly my mentor, will I understand, end this. One of the real questions I think that we all have to ask is, who will come for the service? And what is the purpose? And I think that that's where Elizabeth Warren, if you will, the bookend to Darrell Issa in many ways, in her politics, she really does understand what she wants. I believe that her suggestion and those who are working with her want a highly subsidized, government-fed way to provide, if you will, financial services to the underserved. And if that's the purpose, then I hope Elizabeth Warren will be forthcoming. Because if our goal is to have banking services for the underserved that is subsidized, then in fact we can do it better, we can do it targeted, and we can do it in the areas that are determined on a flexible basis to be in need. And I think that's the biggest pushback that I have here today. I know the Postal Service that I've overseen for a decade. I know their strengths, which is they are honest people who, for the most part, deliver your mail. It isn't open, it isn't read, your checks don't disappear. They do, in fact, deliver with high reliability. We'd all like it to be higher, but high reliability, and that reliability has been increasing. But they lack all the other skills and assets in order to do what they're being asked to do. And quite frankly, it is disingenuous to believe that the specifics of the underserved community are highly profitable. Now, I want to close with just a couple of more thoughts that are important to understand. There is a community that responds to this, the check cashing and the credit card, and the payday lending community. Now, these are often vilified, regulated in every state, and were further regulated under Dodd-Frank. So we have highly regulated entities who do this, and it's quite a fractured group of owners and companies throughout the country. Today, this administration, under what's called Operation Choke Point, is aggressively trying to take away their bank relationships so that, in fact, payday lending and check cashing organizations are driven out of business. If you Google Operation Choke Point, hopefully the first search that will respond will be our 7-page plus report on it. If not, keep looking down, you'll find it eventually. The fact is, we have an organization or group of organizations that are responding to this. Maybe they're not doing a good enough job. Maybe, in fact, we need more government oversight on them. Maybe. But the entities exist, as do some of the banks. I think that the real question is, what is the post office? What does it need to do? And I'm this time going to absolutely close with a simple answer on the post office. The post office can, in fact, deliver some $60 billion worth of flat mail and packages and break even, delivering to every point in the United States, including its territories and non-contiguous states, and transfer for delivery anywhere in the world to other postal systems and do it without costing the taxpayers a penny. They can do that. But today they're losing in the range of $8 billion a day. They're losing it in the old-fashioned railroad retirement sort of way. They're simply defaulting on payments for their future retirement and health benefits, so that, in fact, unless they grow dramatically overnight in some new area, they will need a $100 billion plus bailout by the taxpayers with their current run-up debt. So I close with this. If you have an organization that has a median age of its workforce of 60, it has facilities located often in the wrong places and too many of them. It has been losing high single-digit billions of dollars every year. It has a labor force that is not responsive to change. In fact, it has a labor force that has union protections against change. It needs to be right-sized and reduced, and many of the reductions have to occur in the very communities that, in fact, Elizabeth Warren says are underserved. Would this be the organization, if you chose for there to be a program to respond to this need, would this be the basis under which you would build this new financial sub-enterprise that responds to need for financial services in underserved communities? So as a liberal Republican in the Teddy Roosevelt sense, I will not tell you today that we need to ignore the problems of financial access throughout America, including the communities that Elizabeth Warren speaks of. The question is, would this be the platform on which to build? And hopefully, as you go through the day, understanding the post office and the need, you'll see that they don't really come together, and coming together should be an honest approach that the Elizabeth Warren's proposal will need financial subsidy, and it should build on a base based on need and response, if at all, and certainly not built on a 60-year-old workforce that's in the process of downsizing that has 20 or 30 or 40 years of service unrelated to this. So you might note that I'm less than favorable on the proposal, but that I do believe that this kind of a conference to look both at, is the post office viable for this, but also, is there a need, is it being answered, and could it be answered better through either public or private intervention? I think that's fair to do, and I thank you all for doing it. Thank you.
We have time for a couple questions here. Anybody has them?
I'm told I didn't speak long enough.
And you left a great deal of doubt about your opinion. So, questions? Anybody?
By the way, I love the institution of the post office. I believe the Postal Service, if it were not there, private sector would not answer all the needs. You go to an Aleutian Island in Alaska and ask how would they get their service, and the answer is they would probably take a boat downstream to pick it up, and it would be at their expense. So there are things that a universal service entity does, whether mandated by monopoly or in fact put together by acts of Congress, that are important. And I hope that no one loses track of the fact that fixing the post office or the Postal Service is extremely important, because it does meet the needs of people way up country roads that otherwise wouldn't have service.
Question back here.
Yes, sir. You've got the mic. You've got the power.
Hello. Congressman, one question. I'm Alexandre Berthaud. I'm from the UN agency that works with the Post, the Universal Postal Union. And my role is to see what is happening around the world in terms of postal financial inclusion. And
so you want to talk about DHL here?
No,
maybe not so much.
That's logistics. But I work on the financial side, financial services side. And what you just mentioned, a post office that is highly unionized, that is aging, that this is what most other postal operators around the world look like. But still, you have cases like France or Italy, and I would like to take the case of Italy, where you had back in the 2000s, this was, well, in the 1990s, this was the worst postal operator in Europe. They were losing in the hundreds of millions. Today, it's making $1 billion profit, and it's a highly diversified postal operator. What happened is they put a good CEO that just sat down with the unions, changed the whole thing, got new people, retooled the Post, and now just the financial services part is making more than $500 million in profit. So don't you think that, although I understand there are very big challenges, that based on other examples out there, there could be a way, if we had the right, people at the helm, and if we had the right, investment. It's an investment, just like a business. They invested a little bit, and now the government is making a lot of money.
Well, we're investing $8 billion a year in a losing operation. So without responding to, if you will, sort of what I always call the Swedish model, which is it works somewhere else and there's always some place something works, I have to tell you, your concept that we get a good CEO, they renegotiate, Congress gets out of the way, and we fix the Postal Service so they, in fact, are right-sized, have the right distribution, the right partnering, and they're at least at a break-even while delivering at a postal rate that the customer is willing to pay. That part I completely agree with. But before you add a new enterprise that requires new facilities, new investment, and new workforce, you certainly would want to fix the others, because the one thing I know is if you put in this new mandate, it would be the same unions, the same rules. We'd be retraining the workforce or hiring new at a rate which would be not based on whether or not that's the going rate for that type of enterprise, but it would be based on historic postal rates. So I think your point is extremely good. Look at Italy, look at other places and look at Germany and ask, can we fix the post office using models that should work? And once we do that, are there other enterprises which then the post office could be competitive? But nobody in Silicon Valley or anywhere else looks for a model that's losing 10% on revenue and says that's where I want to start a new venture. They don't look and say, I'm going to put my $500 million into an $8 billion sinkhole every year. Because they know exactly where their $500 million is going to go. It's going to go to next year's losses. But I think your point that we should probably look at other countries for our fixes is extremely good. Other questions? Yes, sir.
Can we get a mic here?
I do want to use this one.
Andrew's right there.
I just will pick it up. Yeah, okay. Well, I'll go back here then. Okay, yeah. Well, interesting speech, Congressman.
I was bored to tears, actually.
Well,
but I've made the speech
like
before.
Churchill, you didn't have a note. So the
who you are and where you're
oh yes, Michael Crew, Rutgers University. And when you were talking about the Postal Service, you reminded me a lot of Rutgers University. Almost all you said about the Postal Service you could say about Rutgers University. And I'm one of the examples.
Are they pissing away the endowment right now?
We never had an endowment. Our endowment was from the state. It was, I'm a 72-year-old. I'm one of the
Just a child, just a child. We're all young.
Bogus, right? Well, I guess your approach, you're a successful businessman here in Congress, and you're looking at this, in the cold light of a businessman, but you are open to this idea of, a social problem is here.
Sure.
Now, the way you describe the Postal Service, it does have a lot of good features, but would its problems be solved? Could we have a kind of Postal Service that you would envisage if it were privatized? And that would probably not include a postal banking operation.
Well, Michael's question's a good one, and it's a little off topic. You knew that, but it's a good one, and since I have your attention and I have my own mic, the Postal Service is not privatizable beyond where they are today, because in a sense, with the exception of some very small restrictions, and one of them is the 6-day mandate for delivery, which every year they keep renewing, and the other one is we do underfund, but we do fund delivery to the blind and the deaf at no cost. But with the small exceptions, basically they're already an autonomous, private-like organization. So in a sense, they can do most of the reforms, and you'll be hearing from an oversight member that actually has a vote on those things. So I think when you look at that, they already have a model of their own board of directors with a great deal of authority, including union contract negotiations. The question is, have they had that last part, Michael, that is so important, which is the freedom to fail? Have we simply said, we will not backstop you if you are reckless in your spending, so that the unions realize that the viability of their pension and the viability of their future jobs is based on right-sizing the post office? And that perhaps is where your suggestion of the next step needs to go, which is make people have real skin in the game for their decisions, which they haven't had up till now. That's part of what our reform tries to do, is it further empowers them, even puts an oversight board in, similar to what we had in the District of Columbia when they were pretty reckless with their funds. Would I approve of privatizing and creating, if you will, a private monopoly? I'm as free enterprise a person as you'll ever find, but because I know that I have to insist that they deliver to that rural location, that they deliver to that Aleutian Island, and they do so at a fairly unified cost, the mandate on that private enterprise and the mandate on the public entity but spun off as independent wouldn't be very different. The one difference is basically that freedom to fail and responsibility if they make investments, like, coming back to the point at task, like the financial services area. If they make an investment, they do so based on knowing that there's a reward, but there's also a risk. Today, that doesn't exist in the post office. So, Michael, I appreciating your asking it, because I do think that's the point, is the most crony capitalistic thing I've ever seen, besides the post office, would be organizations like Freddie and Fannie, where they had all the ability to pay millions of dollars in bonuses, but all of the downside was on us. What was wrong with Freddie and Fannie is they didn't have to look at the abyss, therefore they put the risk on the taxpayers. That's where the reform needs to happen, and whether it's true privatizing or simply reforming these GSEs, if you will, remains to be seen, and perhaps that's where European models and others could be looked at. But thanks for the question. One more question?
One more question.
Yes, young lady already has the mic.
No, she has the mic.
Okay. Are you going to give it to somebody? Okay. If there are no more questions, you could go on to smarter people. Yes, ma'am. Ruth, what is your question?
Thank you, Congressman Issa. I thought your speech was very interesting and really spelled out the issues that we have to think about very clearly. But one of the things I think you didn't focus on, and it's a concern I have, is that you focused on the delivery of the mail, but you didn't really focus on the retail network. And that is, from a business point of view, a significant investment that the Postal Service has and is obliged to maintain in the same way that it is to deliver mail to the Aleutian Islands, it has to have post offices in rural areas, et cetera. So I think one of the reasons for this discussion is to see how to make that particular portion of the Postal Service more viable. What do you do with a retail network? And you are a business person, and I thought perhaps you might separate out that portion of the Postal Service and talk about it a little.
Well, you know, I always tell people government enterprises are simply private businesses with more burdens and bureaucracy. So when we look at, and you mentioned the retail part, the post office has retail locations that their cost of operation are roughly the same as their gross stamp sales. No enterprise would say we consume all of the revenue for the entire process of delivery on the retail sales that we get, the gross revenue at there. So part of it would be you would right size that, and that's what the Postal Service in some cases wants to do. I'll give you an example, and I'll give everyone an example that might help. It costs about 2 cents to print a stamp. It's a little bit more burdensome when you want one of these special stamps. You know, we all want to support breast cancer or save the tiger. Unfortunately, those mostly lose money. They give a certain amount that you've allocated, but they also lose money on the operation. But your basic stamp, your mass-produced forever stamp, cost about 2 cents to print, and then it cost a variable amount from 100% to a smaller percentage to actually deliver to you based on whether you buy one stamp or many stamps. If you go to one of the outsources, Pitney Bowes and Stamps.com being just two examples, they deliver 100 cents on the dollar directly, a wire transfer basically every day to the post office. The post office's gross and net exactly match in a line item coming in, and they find a way to deliver other services and make other revenue. And that would be a classic example where I appreciate the retail, but a good example is when you start a small business and you see who you're going to partner with. In huge numbers, small businesses have partnered with Stamps.com or Pitney Bowes, one of the other services, because they're able to give them all the services they want for their delivery of Amazon-type products or whatever they're selling. The ability in a connected world to get your stamps and prepare your shipment, even if you're an individual just shipping one box or one letter, now is an online service. And whether we like it or not, that means that retail locations will be less efficient because more and more people have the ability to do it for them in a more efficient way, and for the post office alleviate virtually all, if not all, cost. So you go back and say, okay, those retail locations, what is their real purpose? You can go there and get a passport. You can drop off your package, but you can drop off your package, you know, at any mailbox. You can even have it picked up by the postman, which is an extremely efficient way to, if you will, backload. So if you're right-sizing in a private enterprise, you called me hard-nosed businessman, and I truly appreciate that. Well, if you would, I'd appreciate it. But the whole point is that those decisions of right-sizing are exactly what the post office has to do. What's the maximum customer service, meeting the universal access mandate? They will lose money on those retail locations almost no matter what we do on average, versus a hard-nosed businessman would simply say, I'm going to take what I get online because I can get 90% for a fraction of the cost. So there will be an inherent service component with some loss. The point is the Postal Service free to balance that, to balance the service to communities with, in fact, the cost of some of these facilities? And there's a number of proposals, and I'll just give you some quick ones. First of all, do you want to have your next package you order through an Amazon or someone else, do you want it delivered and left on the stoop of your house, or do you want it in a secure mailbox? Would you believe, most of you will probably believe this even though it's counterintuitive, if we provide at the Postal Service's cost a secure delivery box somewhere in your community close by, and we put all your mail in there, we save money and you get your package dry and secure, versus the cost of taking it to the stoop. And yet, nominally 30-some million Americans still get the guy traipsing up to their door, which is nice when a letter goes in the chute, but not so nice when it doesn't fit in the chute. So there are also changes that need to happen. So the answer to your question is absolutely. We need to retain necessary investment in retail locations, including postal mailboxes. On the other hand, we also need to make all those other customer service friendly decisions, especially if it either adds value that the consumer might be willing to pay for, or even better, if in fact it's a win-win because it adds value and saves money. And those are a part of, and this I know when you Google it, you'll get first, our reform bill that we've worked out, that we're trying to work with the Senate on to encourage the post office to do what they know is right, to provide better product at a lower cost. Again, once they do that, then they are in a position to be an efficient entity to look and say, are there areas that they could expand into? And I'll just close with one thing, because Jason Chaffetz, I saw him on the way over, and it reminded me that he endlessly tried to say, why is it we hire brand new people for the census every year when, in fact, we have 500,000 postal workers, and a great many of them go to every location once a day, 6 days a week, on behalf of the American people. There are things that Postal Service employees, trusted, longtime federal employees, could do that in fact would be helpful and the government would be willing to pay for, or private enterprise. So I'm closing with an optimistic, the Postal Service can deliver a better product, do it within guidelines of similar prices today, allow their aging workforce to retire without having to be replaced. We can fix the post office, but don't assume that just somebody's idea of a new business model is going to add anything to the bottom line of the post office. I'm quite sure that when you do the arithmetic, the incremental increases, even if there's a gross profit, would not fall to the bottom line at the Postal Service. And I know that's what you're here for today. Thank you so much.
Thank you, Congressman Issa. We're now going to have a transition to Dave Williams, who should be coming in any second now. Dave is the Inspector General for the U.S. Postal Service and has been so since August of 2003. He oversees a staff of more than 1,100 employees who conduct independent audits and investigations of the Postal Service and look for potential areas where the Postal Service could be more economical and more efficient. He's the second person to assume this role since it was created by law in 1996. He reports to the Postal Service's 9 presidentially appointed governors and serves for a maximum term of 7 years. You might say that Dave is a professional inspector general. He's served in this role under 4 different presidents and for 5 federal agencies, including the Nuclear Regulatory Commission, the Social Security Administration, the Treasury Department, and the Department of Housing and Urban Development. In March, Dave was honored as one of the 2013 Federal Computer Week's 100 leaders from government, industry, and academia who had a greatest impact on the federal IT community. He's also been recognized as one of Fierce Government's 2013 Fierce 15, a recognition of federal employees and teams who have done particularly innovative things. On January 27th, his office released their report providing non-bank financial services for the underserved, which is the basis for our conversation today and for today's conference. And we really appreciate him joining us today. And I think he's... and there he is. So, Dave, thank you for joining us, and please welcome to the podium. And we'll take questions afterwards.
Yeah, thanks, everybody. It's great to see you, and I know a bunch of you, so that's all good. For those of you that I haven't been able to meet yet, I'm the Inspector General of the Postal Service, as Susan said. Our job is to make recommendations that improve Postal Service's effectiveness and efficiency and better serve the American people and business customers so that ratepayers don't end up paying for inefficiencies. The Postal Service, by the way, takes 0 tax dollars. The ratepayers contribute it all. We have a pretty simple idea that we wanted to present today that we believe would serve Americans and commerce and provide a far-reaching and inexpensive platform for innovation and innovators just starting out. Like a lot of simple ideas, it spreads and broadens, and it sells itself the moment it is introduced. But also, progress can be disruptive, and creative destruction is painful, and we know about that, and we're sensitive to that. The simple idea that I have for you today is to provide affordable financial services to Americans who lack access to them. Also, to make our widespread network available to those who need to use or exchange financial instruments, which will allow customers to move among physical currencies like cash and money orders and checks, and digital currencies, prepaid cards and credit cards, and rapidly evolving debit cards. In order to upload cash to debit cards, download debit cards to money orders, for instance, to pay your rent, to cash paychecks, and to reload prepaid cards using cash. It's not a particularly original idea. Most postal operators around the world already provide financial services. The U.S. Postal Service is the notable exception among industrialized nations. It provided financial services in the United States until 1967, when banks began paying interest rates that were higher than the Postal Service was allowed by law. Further, the Postal Service already sells money orders, international remittances, runs a huge cash retail business. It also sells insurance on mail and parcels, and it has for years, and we already cash treasury checks. So our white paper considered the concept of the Postal Service expanding those non-bank financial services in order to meet 21st century needs. Since the paper's release in January, we've been approached by many groups in the financial industry and small startups, consumer groups, and local and state governments interested in trying it out together. Before I explore the idea, though, I would like to talk about the size of the problem. Financial inclusion in the United States is not trivial. 68 million Americans are financially underserved. They don't have bank accounts. They rely on services such as payday loans and check cashing exchanges that today are very costly. Additionally, 74% of the people who need to use check cashing agencies oddly have bank accounts, a bit of a mystery. The average underbanked family spends nearly 10% of its income on financial fees and interest, which is just about the same portion as the average family spends on food. 59% of our post offices, 17,000, are in zip codes where there are either no bank branches or a single bank branch. Also, since 2008, banks have shut more than 1,800 branches, 93% of which were in low, median income areas. In 2012, the underserved collectively paid $89 billion in fees and interest for access to alternative financial services. So yes, there's an issue. Many Americans trapped on the fringes of our financial system are looking for solutions. Some of the alternative financial services that have sprung up are clearly abusive to these isolated citizens. These abuses disproportionately target the elderly, the young people, the poor, and our military. Payday loans can trap customers in an endless cycle of borrowing against future earnings at outrageous interest rates averaging 400%. More than 80% of payday loans are rolled over or followed by a loan within 2 weeks of its having been made. There is good news, though. The markets are trying to rush in with new products, and innovators are developing new products. Some of the new prepaid cards, the debit cards, include many characteristics of checking accounts, for instance. Bill payment features and checks and saving features, and the ability to set up sub-accounts for family members and students. They have low fees and allow for free cash uploads, enable direct deposit of paychecks, free ATM withdrawals within network, and deposits made through mobile phones, as well as features that encourage savings and enable interest to be earned on account balances. But problems still remain for these in making those innovative products known and available and to enable their use. Here's where our idea comes in. The Postal Service could provide digital and physical platform for making world-class financial products and services available to everyone. Prepaid cards and identity services, money orders, and a host of rapidly evolving financial instruments that could provide a critical link for millions of Americans who have no alternatives to check cashers and payday loan firms. With its presence in just about every community, the Postal Service is everywhere. The platform would be open to everyone, banks and credit card companies and credit unions and other institutions, and they could offer these products alongside one another competitively. Post offices would be available to enable their use and their exchange. And the Postal Service has my office and the Postal Inspection Service to investigate provider fraud and deceptive practices where abuses are found. To have your products on the postal platform, you would need to clearly identify its attributes, the fee structure and interest rates, and new features such as savings functions. Customers walking into a post office or accessing services online through USPS.com would see a chart of the products transparently displayed. You could compare features and select with a click of a button. The platform could also have a certification process. For example, prepaid cards and small loans and other products offered through the postal platform could be approved as meeting industry standards and using guidelines of the FDIC or the financial industry. If you walk into a post office looking for a product, you know you won't encounter deceptive sales practices. You can upload or reload a debit card, redeem or exchange a prepaid card for cash or money orders when you need them, with no worries that there's somebody there trying to lure you into a trap or push you toward an abusive product. The Postal Service is trusted and it's not conflicted. The Postal Service would also enable the use of these world-class financial instruments at minimal cost. This would offer a simple and convenient way for consumers to convert or redeem a financial instrument. These transactions would reduce economic friction, which only serves to slow transactions, heap non-value-added costs on products. Instead, they would serve the interests of customers and support business transactions. The Postal Service would charge businesses to be part of the digital and physical platform, also at minimal rates that would greatly encourage entrepreneurs who are just getting started. The Postal Service pricing structure is set simply to meet the cost of keeping universal access for Americans available. Since overhead for these financial services would be shared with traditional postal services, the prices would be especially low. The platform would enable access to trusted postal and financial services everywhere. You could walk into a post office and take advantage of new prepaid cards that might enable savings or automate debt payments with each card use, upload or reload funds onto a debit card, cash your check, or tax refunds, benefit checks, convert your debit card, as I said, to cash or money orders, and use debit cards to engage in e-commerce, where people without financial services or cannot go today. Let's take a step back and look at the historic role of the Postal Service as an enabler of commerce. It isn't a new role for the Postal Service. Supporting commerce is one of its founding missions. There are three parts to supporting commerce: communications about the products and transactions. Number two, the payment for the product and the delivery of the product. The Postal Service has two of those down pat. But in recent years, it's lagged in the payment element. Its financial products do not enable e-commerce or financial instrument exchange. It's long been a leader in paper money orders. We've issued 103 million of them last year and just about every year. But for e-commerce, you need digital currency. This unintended consequence of the digital age has separated citizens from commerce and commerce from citizens. The Postal Service already enables e-commerce in other ways. There wouldn't be e-commerce without parcel fulfillment and returns. The online orders that you make aren't going to beam themselves to your house, and if the shirt doesn't fit, it's not going to somehow get it back to the store that you bought it from. Those all require parcel delivery. In addition, the Postal Service was placed into the parcel service business in the early 20th century as a result of commercial abuses and rigged systems that killed innovation and undermined efficient market forces. Businesses that were not part of the collusion were being killed off by shippers conspiring with the railroads and business elite who did not want there to be competition. Congress, driven by broad public and commercial demand, determined that competition from a neutral public infrastructure was the only way to keep colluding express delivery companies in check. Delivery prices plummeted the moment the Postal Service began offering these services. Also, years ago, the Postal Service expanded into rural delivery to provide opportunity and full lives for those living outside the cities who were isolated. Market competition among financial products on this postal platform, I believe, would devour today's predatory abuses directed against isolated citizens who have no other option. To be clear, people do need immediate cash, and they have bills and family needs and unexpected expenses. Those are legitimate and those are very real. But for people on the edge, the most practical way to get money is through check cashers and payday loans. For many, those turn out to be financial traps from which escape is extremely difficult. People need options to meet their needs in order to keep costs down, and this doesn't involve a great deal of money. Such options would make a huge difference for people. On average, the people that filed bankruptcy were just $26 a month short of meeting their expenses. Understandably, the payday loan business and perhaps even some traditional banks are nervous, and not just about this proposal, and I'm sympathetic to that, I honestly am. Creative destruction from the digital age is still raging on, and nobody wants to be the next Blockbuster or Tower Records store owner. Trust me, the Postal Service knows all about this. We've had creative destruction pointed directly at our heads for the last 10 years. But the Postal Service never once asked that letter mail be preserved at the expense of email, Facebook, Twitter. That would only harm the nation and its businesses and its people. Well, so would preventing access to financial services in order to protect abusive predators. Nobody has the right to deprive Americans of technological progress or e-commerce access or force citizens into the hands of predators. $89 billion in fees and interest that buys nothing, not food and not clothing and not shelter. Bad for Americans, terrible for American commerce. The current generation of payday loans and high-fee cards and stodgy payment processing procedures are coming under pressure because they cost a great deal of money, and they cause friction, and they retard the velocity of money in the engines of commerce. However, where people have no choice, payday loans and prepaid cards can be very lucrative for providers and will only be reformed through competition and efficient market forces. The beauty of the postal platform would be that it would be a truly evolving marketplace. As new services develop, they could be more widely offered, and they could be used anywhere. A lot of opportunities come to mind. Managing lump sum income and volatile income for people who get a huge percentage of their annual income at once, either earned income credit refunds or freelance work. Come to mind. Imagine what it would be like to manage your entire annual income in one lump sum when you lack financial planning skills. New financial products can turn those huge sums into monthly or weekly releases and encourage savings. Also, people getting government benefits need access to ATMs that don't charge high out-of-network fees to withdraw cash and to encourage savings. The ATMs could go into every single post office in every community across America. What American taxpayer would agree to have the dollars that they're trying to send to poor people diverted to and siphoned off by check cashers? Older Americans who are often the victims of abusive practices or fraudulent scams would have a trusted option in dealing with customer representatives that have no conflicts of interest. They're there only to serve. We believe this value proposition will also turn post offices into bustling community centers that they've traditionally represented. They've always been the centers of life in small towns and in city neighborhoods. The Postal Service could serve the 21st century citizen and not become an insect in amber, unchanging and stuck in time as messaging and logistics and financial services evolve beyond traditional correspondence. You're going to hear that this proposition is not competitive, is anti-competitive, but in 17,000 locations, the competition has left. And when they left, there was no General McCarthy promises, I shall return. They're just gone. And millions of Americans are left to predators who thrive where normal access has been cut off from isolated Americans. Predatory practices can't survive where people have choices. Innovators thrive where there are free market forces, especially when they're given low-cost network access to the public. And conversely, new products can't survive if they aren't recognized by financial institutions or if their fee for use is prohibitive. So new products have to reach people in commerce and be usable. Access to financial services is essential. The Postal Service, with its presence in every community, could bring world-class financial products everywhere that Americans need them. And that's our simple proposition that we have for you today. Thanks very much.
Great. Thank you,
Thanks.
I think we have time to take a couple of questions. If you could identify yourself and your affiliation, that would be great.
Sure. Good morning. My name is Lauren Harris. Thank you for your remarks on the W.K. Kellogg Foundation. At the top of your comments, you mentioned that several communities across the country have expressed interest in piloting and testing this approach. Can you say more about what that interest has been and what latitude the Postal Service has to begin testing and demonstrating the viability of what you proposed? Thank you.
Yes, I think some of the I don't want, because of the third party involved. I'm not sure I should feel really free, but definitely banks and credit unions. There was a state. There were some communities. There was a motion on the part of that was adopted by the U.S. mayors within the last couple of weeks in their annual meeting. So there's been a lot of interest in coming to us. With regard to what can be offered, today we believe ATMs could be placed there. There's already some check cashing that's occurring. Prepaid cards that are not reloadable are all things that are available. With the Postal Regulatory Commission's examination and approval, there's another band of services that could be made available that would include reloadable prepaid cards and some of the other things I discussed, probably for loans and others. Other of those more sophisticated variations on the new debit cards, it would require congressional action. Thank you for the question.
Andrea, right here. Do you have a question?
Good morning, sir.
John Anderson, Canadian Center for Policy Alternatives. I want to congratulate you on your paper. I found it extremely important, and it's also important in Canada where we have this similar debate around this issue. I was wondering, though, and I did a study on postal financial services, why you limited it to certain financial services and didn't recommend full postal banking, as is the case in many European countries.
Mm-hmm. I think we felt where financial services were being adequately provided, or whether they were sufficiently sophisticated that it would require an enormous change in the character and the DNA of the Postal Service. We felt that that would be a place that we didn't need to go and ought not to go. Where it was an easy step, and I don't mean to minimize the difficulty in instituting this. There are some complications. These felt very comfortable, very familiar, and very similar to what we did. So it was a combination of the fact that the services are already being adequately provided in our minds, particularly given the new evolving financial instruments that are coming into being. We felt if we made those available, that was likely to meet the demand of the public. Also, I'm not exactly sure where the whole thing is headed. Banks may be coming this way rather than the financial instruments going that direction. That'll be interesting to watch and to learn. But this felt like safe, familiar ground, and it felt as though that would be a great service to the public and probably meet most of the needs that they'd expressed.
Great, thank you. Next question, Danielle, did you have?
Douglas from the Washington Post. A quick question about what kind of investment this could possibly take in order to be competitive with some of the community banks and credit unions. I imagine there would be some training needed. And then the other thing is a lot of the banking space is starting to move towards mobile banking and a lot of digital projects. Can you imagine how that would play out if the post office was to get involved in that side of financial service?
One thing that's an important part of this proposition is that we would be a platform offering the products of others. We'd want those products to be good products, but it would be a platform for others. I think that would take away some of the complexity, and it would take away a lot of the investment that would be required. It wouldn't take it all away. We're very much in the cash business. We take in and spend nearly $70 billion a year, so that's huge. But it would be an increase in the cash portion of the business that we do, admittedly, just in order to enable the use of others. But it would largely be a platform for others.
Hi, Ramsey Alwyn with the National Council on Aging. And so I had a question about how we could leverage this platform for seniors, especially economically vulnerable seniors. Often the trigger of their economic vulnerability is a life-changing event, downsizing or moving, loss of a spouse. This is something often that they interact with the post office to make a change for. And it's an opportunity to have a conversation about their financial status and certain products and certain public and private benefits that might be available to them. So do you see this new modern platform being an opportunity to have some smart conversations with consumers based on different triggers, such as a change in home or loss of a spouse?
Right. I'm not sure. It would clearly be sort of a one-stop shop for a number of the things that you mentioned. And the ability to also engage in financial transactions and support financial transactions at that one familiar stop would clearly be a good thing. With regard to the conversation, some of the people that approached us wanted to do exactly that. They wanted the post offices, if they were to become a center of life for the community, they wanted post offices also to sponsor those kinds of conversations. I mean, it sounds absolutely wonderful. The paper didn't explore that, and maybe that's a good sort of next thing. That was why we were so excited that Pew Trust took an interest in this, because we know that they have the capacity to go into adjacent spaces and explore in depth and independently issues just like that. But that's an exciting one. I will say this, that one concern, and I apologize, one concern is that senior citizens are being preyed upon and taken advantage of and deceived. At least it would remove all of that from their, as they conduct business. I'm sorry.
No, that's great. Thank you. We have time for one last question.
All right, great. Well, thank you for coming, Dave, and please help me thank him for joining us.
Thanks, everyone.
Great. Next up, I want to call up our panel on providing financial services to the underserved. Brian Naylor with National Public Radio, Dong Hong with Consumer Bankers Association, Adam Levitin with Georgetown University Law Center, Ryan Donovan with Credit Union National Association, and Gianna Baresi with Walmart. Thank you.
All right, let's go for it. Well, good morning. My name is Brian Naylor. I'm with NPR, and usually I'm on the receiving end of briefings and reports from Pew. We just had a briefing a few weeks ago about their report on the polarization of America, and so I'm very honored to be asked to be a moderator and help ask some questions about kind of an intriguing idea of postal service banking. I did a story a few weeks ago and found one interesting bit of trivia that while, and this has been touched on a little bit, while it may seem a little strange to say I'm going to go to the post office to cash a check or make a withdrawal from my savings account, for our grandparents and great-grandparents, it wasn't at all unusual. And in fact, it was a campaign issue in the 1908 presidential election and may have helped William Howard Taft win the White House. He called for a great incentive for thrift in many small places in the country that now have no savings banks. And so in 1910, Congress established the postal savings system. And so now the question is whether it is time once again to establish some banking at post office branches across the country. And so what we're going to do for the next hour and a half is I'm going to ask some questions of our panelists, and you'll be given the opportunity to ask some questions. Our panelists are Mr. Dong Hong, who is with the Consumer Bankers Association, Adam Levitin, who is a professor at the Georgetown University Law Center, Ryan Donovan with the Credit Union National Association, and Gianna Baresi, who is with Walmart. So I'm going to ask each of them now to introduce themselves and tell you a little bit about what they do. And Dong, take it away.
Sure. Good morning, everyone. I'd like to first thank Susan Weinstock and the Pew Charitable Trust for inviting me to serve on this panel today. I'm not quite sure what I've gotten myself into, but I'm looking forward to having a lively discussion about the Inspector General's white paper and on postal banking. My name is Dong Hong, and I serve as regulatory counsel at the Consumer Bankers Association. CBA is a trade association for the retail banking industry, and our members work very hard every day to try to fulfill the financial needs of American consumers and small business. Before I begin, I'd like to first say that my remarks are kind of based in part on my own assumptions, because the IG's white paper in many ways is sort of like a thought experiment, and it's not intended to be a detailed business proposal to which I could respond. But with that said, I'm sure I speak on behalf of a wide audience when I say that when I first read the white paper, I thought it was an intriguing idea. At first blush, it would seem, as has been reported in the media, a win-win solution for the Postal Service and for some consumers who may view postal banking as an option for their financial needs. However, and there's always a however, I guess, the more I thought about the subject, I have to say that I have some reservations. And the white paper, at least for me, raises several important questions. The most important question for me, at least, is the question of, is there a fundamental flaw in the consumer financial markets today? I guess that in the terminology of economists, would be a market failure, which requires the intervention of the federal government to step in and offer a so-called public option. That's a tough question, for sure. And the way I kind of try to think about the issue is on kind of two different fronts. On one side, I think about the issue of availability. And the question for me is, are banks providing consumers a convenient way to establish a relationship with the banking system? The research unveiled by Pew today goes to part of that answer, which deals with geographic availability. But I think to fully address this question, we must also consider some of the changes that are taking place in the retail banking world, particularly in the areas of digital banking and new innovative products like prepaid cards. The other side of this potential solution might be thinking about the question of accessibility. And the question again for me is, are banks meeting consumer demands for products and services? I think we're trying, but this is a very complicated question with probably a very complicated solution. Going to my second kind of broad question would be this idea of competition. If the post office banking idea were to be realized, would it be subject to the same rules that banks, credit unions, retailers, and alternative lenders have to abide by? I'm sure most of you are familiar with bank, kind of the rubric that surrounds bank supervision today. But just to give a brief summary, CBA members today are subject to supervision by their primary regulators, which depends on the bank charter. It could be the Fed, the FDIC, the Office of the Comptroller of the Currency. And they're also many CBA members are also subject to a second regulator, another layer of supervision from the Consumer Financial Protection Bureau. And then on top of that, you can layer the state attorneys general's offices and state banking regulators. So my question goes to this idea of, if the postal office gets into the business of banking, would they be subject to a similar level of comprehensive, sometimes even overlapping supervision from the federal regulatory bodies and maybe even the state regulatory bodies? It kind of, when I think through a hypothetical, like a lot of lawyers like to do, there's definitely a situation where we can find ourselves in a situation where we have a postal service that may be operating at a loss, and it may be subject to an enforcement action from their federal regulator. And in such a situation, when they have to compensate consumers who might have been injured and have to pay a civil penalty, I'm not quite sure where the funding would come from in that situation. So that's just something that I kind of think about when I think about competition in this area. Finally, I guess I have to be the bad guy and ask the question, is the Postal Service the right agency for this job, for this task? For the sake of argument, even if we assume that there is a need for a public option, is the Postal Service the government agency we want to meet that need? I'm no expert on the way postal offices work or how the Postal Service operates, but even from a cursory examination of some of the reports that are out there, you could see that the core business of the Postal Service, which is delivering mail and delivering packages, it has had a tough go of things in the last decade, pretty much since the advent of the internet. And I understand that the Postal Service has spent a number of years trying to adapt their business model to the internet age. And I concede that it does not have the flexibility of a private sector company. But the reality seems to be that the Postal Service has been operating at a loss for about 6 to 7 years now. And I would imagine that this question has to be fully addressed first before the Postal Service takes on business lines that are kind of unrelated to its core business. So with that.
All right. Thank you very much. Let's turn now to Adam Levitin, who is a professor at the Georgetown University Law Center. Adam.
Well, again, I'd like to thank Pew for inviting me to participate in the panel today. I think if we're going to talk about postal banking, the first thing we have to ask is, why are we doing it? Why would we want to do this? And I can think of, there are several possible reasons, and depending on what reason we think is the reason for pursuing postal banking, it has different implications about what services to offer and whether this is a good idea at all. And I think there are kind of maybe 4 major reasons why one might consider postal banking as a possibility. One, and we've heard a fair amount about this morning, is financial inclusion, helping the underserved into the modern commercial world. So this is helping the unbanked, people who don't have any kind of bank account, and the underbanked, and maybe also the unhappily banked, who might be kind of a large third category. And if we're doing financial inclusion, then we might think about whether we're wanting this is something where we want to be essentially subsidizing some of the services in order to get what we think is essentially provide a public service. Second possibility is that we want to encourage more competition in banking with a public option. And the idea would be that having sort of a public benchmark, as it were, would help drive out abusive financial products from the market, because there would be an easily accessible, affordable, fair product offered by the post office. That is an approach that is really aimed at the underbanked, not at the unbanked. Because if you don't have a bank account in the first place, this isn't really a solution for it. But it's a different solution, it's a different goal than financial inclusion, even if it often is in parallel. A third possibility, one we really haven't heard much about, is really offering some sort of safe banking. Historically, that's what postal banking was about in the United States. Postal banking was the Republican alternative to federal deposit insurance. This is what Taft was pushing. And if you go back to I think it's the 1908 Republican presidential platform, one of the things it says, we favor a postal bank, but if we can't get that, then then maybe we'll think about deposit insurance. That really doesn't seem to be on the table, but that is some reason one might think about having postal banking. If you're in a country that doesn't have deposit insurance, then postal banking is an alternative. And then the final reason is the post office's budget, and is offering financial services a cure for the postal services budget problems. Now, there's some tension between these different goals. If we want to, have revenue maximization for the post office, that cuts against financial inclusion, and if we want to subsidize services, and it cuts against offering really clean, fair, non-abusive products, because the reason to sell an abusive product is it makes money. So there's a tension between the budget goal and financial inclusion or fairness goals. And I think that if we are going to pursue postal banking in any form, that's going to be the needle to thread. So I think all this also has implications about what services a postal bank might offer. There's a really tremendous variety worldwide in what's offered, and the Inspector General's report really leaves this pretty open in terms of thinking on this. One very simple thing is just safekeeping. Right? People need a safer mattress to put their money under. That's what that's why one reason we use banks. Relatedly, people want to be able to move their money, so some sort of payment service, and we already have that in a way as postal money orders. It may not be the best form of payment, but the Postal Service is already doing some payments. Third possibility is credit. Small dollar loans, or in some countries, mortgages. You go to Switzerland, you can get a mortgage from the post office. I'm not saying it's a good idea, but it's, I want to put it out there. But these are all services the post office could, in theory, offer directly. But another possibility would be just basically turning the post office into a grocery store and going with the grocery store bank model. You don't see too many of these around, but if you went back a few decades, often you go into a grocery store and there would be a bank in there. And it would be separate from the grocery store. The grocery store would be renting space to the bank. I don't know what the rental arrangements look like, but actually we have something like that. Walmart's doing that. And then kind of related to the grocery store models, instead of having a physical retail branch, just selling products like prepaid cards. And again, it doesn't have, there's nothing really magical about the Postal Service for that. One thing, if we're going, the financial inclusion theme really seems to be what is driving a lot of the interest in postal banking. And when we think about that, it helps, I think, to just have a sense of the various reasons why we have financial inclusion problems. So just first to give you a sense of the scale, we've got roughly 17 million adults in the U.S. who don't have a bank account, and another 51 million adults who have a bank account but are using alternative financial services. So we're talking about a sizable part of the U.S. population that is either unbanked or underbanked. The unbanked and underbanked are, heavily minority. They tend to be younger. They tend to be poorer. They tend to be less well educated. And certainly if you're not a citizen, there's a higher chance that you're going to be unbanked. So why do we have this large-scale unbanked population in the U.S.? Some of the reasons are on the bank side and some are on the consumer side. And postal banking may solve some of the problems to some degree and not all of them. So on the bank side, there's a pretty simple economic reason why we have a large unbanked population. It's not profitable to serve small dollar accounts. Basically, banks make money on accounts in two ways: spread, so interest, and fees. If you've got a small balance, let's say, if your balance is under, let's say, $3,500, the spread income that the bank is making is probably not enough to really cover the marginal costs of the account if you are including costs of operating branches and stuff. A lot of this depends on how you do the cost accounting. But remember, banks are having to send out a paper statement every month that costs, a couple dollars each statement, so forth. So spread income is not going to generate enough revenue on small dollar accounts. Instead, the only way small dollar accounts are profitable are fees. And fees tend to be where we have sort of problems with consumer protection. And where do banks really make fees? Well, it's actually on the negative balance accounts when they're overdraft fees. So there's just a simple kind of problem of profitability that's creating a lot of is one reason why banks don't really want to serve the unbanked, that there's no money to be made. Additionally, for poorer consumers in particular, there are particular risks to banks. The poor have more unstable financial lives. They do not maintain steady account balances typically, and this means that there's credit risk for banks. Because if there's an overdraft, there's always the possibility that it doesn't get repaid and the account gets closed. This is a risk that banks don't want to take unless they think they're going to be able to make enough money to cover the risk. On the consumer side, I think there's really a range of problems. One is the flip side of the fees. That if you are a poorer consumer, having to pay a monthly fee or maintain a minimum balance is difficult. Insufficient funds fees or overdraft fees, those can end up costing a lot more than it will cost to go to a check casher. It may be actually a very rational economic decision not to be in the banking system. Some people want to be in the banking system, though, and they can't get in because they've got credit problems. So, if you want to open an account at a bank, you're probably going to be scanned by something like go through something like check systems. And if you've been writing bad checks in the past, you might not be able to open an account, for some time. We've got sociological reasons. Some people don't trust banks. This is, my Uncle John, God bless him, keeps his money under a mattress, even though this is a guy with a PhD. On the other hand, that's kind of the outlier, but you also have people who are not familiar with banks. So if you grew up in the Mississippi Delta, if one of the graph of northern Mississippi, kind of the region northwest of Jackson on that map, that's the Mississippi Delta region. There are very few banks there. If you grow up there, you're probably not familiar with banks. It's not something you're not used to going to a bank. I'm guessing everyone in this room went to a bank with their parents when they were a child. It's not a scary thing for us. We know what the routine is. We know how to do it. But if you haven't grown up going to a bank, sometimes bank buildings are kind of formidable. They're meant to look like strong, secure structures. They've got guards with guns. It's a much more formal environment than, say, a post office. And that maybe there may be a barrier, there may be some frictions there. Then, convenience is, clearly a huge issue, especially if you're poor, because, spending another hour to get to a bank, that time is money if you're poor, because it's time you're not working, it's time you have to find childcare, you've got to find transportation. These things add up. So you look at payday loan pricing, you can look across state boundaries. So look at East St. Louis versus St. Louis. East St. Louis is in Illinois. It's not a very long bus ride over the Mississippi River, and the APRs on the payday loans might be in Illinois might be 100% lower than in St. Louis. You'd think, well, how can this market be if we've got 100% different 100% difference between these two markets? Well, these are small loans, and the cost of taking that hour to get across the river, go to the payday lender, get back, probably isn't worth it for anyone. Therefore, these tend up small dollar loan markets, other than the internet ones, are very, very local markets. So we've got a host of issues. A postal bank might be able to address some of these. It doesn't deal with all of them. So it can maybe deal with some of the cost issues, but it's not cost-free, and actually the cost accounting is going to be a real problem for dealing with the postal bank. Because if you just do it on a marginal cost basis, the additional cost of adding in banking services to an existing branch is existing post office branch is relatively small, I would think. But if you have to amortize the entire cost of the post office against their pro rata share of costs relative to the business, that might look very different. And if you think about how that plays politically, it might be a question of whether this makes money or whether it loses money. The accounting may actually really be a problem on this. The convenience factor we've seen may be solved in some cases by postal banking and maybe not in every case. It's not a perfect fit, but it seems to be an improvement. The trust and formality factor seems to be a real benefit. But the cost is really where the rub will be, and a lot of this is going to depend on what the services provided are. If the postal bank is just providing some safekeeping and payments, it can probably be done at a very low cost. If it starts getting into credit services, I think it's going to be a much more complicated conversation. All this is to say, I think postal banking is something that's worth exploring, but we're really in the first stages, I think, as kind of a policy collective in thinking about this. And there's a lot more, and the devil's going to be in the details.
Great. Thank you, Adam. And a lot of details there we can go back over and touch on. I want to move on to Ryan Donovan now, who is the Senior Vice President for Legislative Affairs at the Credit Union National Association. Ryan?
Thanks, Brian, and thank you also to Pew for inviting me to participate today. I'm going to shine some light on an existing alternative to the postal banking alternative, if you will. Next month, America's credit unions will celebrate the establishment of their 100th millionth member. And as proud as we are to see the credit union system achieve this milestone, we know that there's more work to be done. And the OIG report identifies that, noting that 68 million Americans are underbanked or unbanked. But the existence of credit unions is one of the reasons that number isn't significantly higher. More needs to be done to establish relationships with those that desire relationships with mainstream financial institutions, but we're skeptical that the United States Postal Service is the solution to the problem. Instead, we need to increase awareness among the unbanked that affordable financial services options are available and convenient in the credit union system. We need to make sure that the laws and regulations are not hindering access to credit unions, and we need to make sure that when someone walks through the door of a credit union or a bank, whoever's providing the service, that the service they receive is excellent and the experience that they have is outstanding. So part of increasing awareness about credit unions is erasing some of the misconceptions about credit unions. Everyone can't join the same credit union, but there's a credit union for everyone to join. Most people don't know this, and as a system, we know we need to change that, that misperception. There's another misperception that folks have, that credit unions aren't convenient. But the truth is just the opposite. We recently had our America's Credit Union Conference in San Francisco, and our MC for that program did some man-on-the-street interviews with folks on the streets of San Francisco, and he interviewed, I remember this very clearly, he interviewed a vendor who sold T-shirts on Market Street in San Francisco, and asked her if she was a member of a credit union, and she wasn't. And he asked why. He says, well, I don't know where there's a credit union that I could join, and all the usual things that you hear from folks that aren't members of credit unions. And so he took out his phone and launched our app, smarterchoice.org, which has a credit union finder. There was a credit union less than 100 feet of where she sets up shop every day, and she could join that credit union. So we've got to erase that misconception that credit unions just aren't convenient. The credit union system has a system of shared branching and an ATM network that's run by the Co-op Financial Services, so that credit unions can walk into most credit union branches of other credit unions and do business as if they were in their own credit union. And the ATM network means that credit union members across the country can use ATMs from other credit unions surcharge-free in many cases. And I'm not sure how many people know that credit union members can use the ATMs located at 7-Eleven convenience stores nationwide for free. And those ATMs are pretty sophisticated. They not only dispense money, but they allow you to transfer money, and they take deposits. As a system, you know, we know that we need to do a much better job of getting this type of word out, and we're working on it. But awareness isn't the only thing that keeps the underbanked or unbanked out of the doors of credit unions. Another challenge is there are barriers to credit unions providing these services. The regulatory burden that credit unions face in the aftermath of the financial crisis has been severe. We've been calling it a crisis of creeping complexity, but our members feel like it's an avalanche. In any case, credit unions have been subject to more than 180 rule changes since 2008. Most of these have been in response to the financial crisis that they neither created nor contributed to. We've been encouraging Congress and regulators to look for ways to reduce credit union regulatory burden, to free up resources, and so we can provide additional services to our members and welcome in new members. We've had, in the last 4 years, nearly 3 million new members join credit unions, and we've welcomed them as best as we can. In terms of statutory change that would help credit unions expand their service to the underserved, one area that we've focused on very recently is making sure that credit unions have access to supplemental forms of capital in addition to retained earnings. That would help credit unions grow and expand service to new members more rapidly. In the coming years, it'd be a good idea for Congress to look at our field of membership restrictions. Originally, fields of membership were used as a tool to determine credit worthiness. Now, that might have worked in the first part of the 20th century, but today, as we all know, there are many other ways to assess whether or not a borrower is creditworthy. And fields of membership at credit unions do more to hold credit unions back than to keep them afloat. Congress has allowed credit unions to add underserved areas to their fields of membership, and many have. But if the doors to credit unions were opened wider, the penetration to this market would be greater. A third issue, as I mentioned, is what happens to folks when they engage a financial institution, whether it's a credit union, a bank, or potentially the Postal Service. Credit unions pride themselves on service excellence. When someone enters a credit union, they're going to receive a high-quality product on fair terms with great service. That credit union members are treated well, or that you hear people say, I love my credit union, is not by accident. Credit union members are the owner of the credit union, and it's in the best interest of the management to treat their members' owners well. So when we think about what the Postal Service entering the financial services market might mean to consumers, I think we can say with confidence that those seeking financial services will almost always receive better service at a credit union than anywhere else. So we don't think the Postal Service should expand to provide financial services, but it may make sense in some local areas for credit unions and the Postal Service to partner. There are currently 191 credit unions operating in 41 states that are or have been affiliated with post offices in some way, usually serving the employees. That might be a good place to start in terms of a partnership between credit unions and the Postal Service. In addition, we could envision the possibility, as has been discussed earlier, of credit unions leasing space at post offices to open branches, establish kiosks, and ATMs. There's a lot of development in this mobile deployment. We have some credit unions offering these video branches where it's essentially the member walks up to a screen and they're connected by video link to a video center run by the credit union. That might be a good idea to explore in such a partnership. But beyond that, it's hard to envision how much further a partnership might go. But we'd be willing to engage the Postal Service in that conversation. Just as a closing thought, there may be some uncredit union folks in this room or watching on the web. And to those that are not credit union members, I'd suggest checking out a website. I mentioned it earlier. It's a smarterchoice.org. It includes more information about credit unions in general, and it also has a tool on the website that will help you find a credit union you're eligible to join. So I appreciate the invitation to appear on the panel and look forward to the discussion. Thank you.
Thank you, Ryan. And finally, Janet Baresi, who's Director of Federal Government Relations with Walmart. Janet.
Thank you, and I echo the thanks for Pew putting this panel together today and taking the time to convene this discussion. I think it's an important one. I just want to start by saying we don't have a position on the Postal IG's proposal and defer to policymakers to assess kind of what additional authority might be needed to expand the Postal Service's responsibilities. That said, we offer many of the products that are contemplated in the report, so appreciate the opportunity to talk about them and how we approach this business. At Walmart, we consider ourselves an advocate for the more than 140 million customers that shop our stores every week and are always looking for ways to help them save money on the products and services that they need. Our philosophy and approach is simple: bring the everyday low-cost model started by Sam Walton to these financial and other service categories, and use our size and scale to help provide lower and transparent prices to customers. Prices should be simple enough to put on a menu board behind the customer service desk or in one of our dedicated money centers. More than 95% of the U.S. population lives within 15 miles of a Walmart store. Many Walmarts are open 24 hours a day, recognizing that many of our customers need access to these services at times throughout the day and night. We have dedicated money centers in about 1,000 stores, and at the remainder of our stores, money service transactions can be done at the customer service desk. I'll just take a few moments to talk through some of our major product offerings that help serve the unbanked and underbanked. First, we have two value-driven money transfer offerings. We've had a long-standing relationship with MoneyGram for both domestic and international money transfers. In addition, we rolled out a new money transfer product earlier this year with RIA Financial Services, a company that had previously had primarily operated in the international remittance market. With this service, called Walmart to Walmart, pretty simply, customers can go to a Walmart store and transfer money to another Walmart location. For transfers up to $50, the cost is $4.50, and for transfers up to $900, the cost is $9.50. As a comparison, competitive offerings can cost up to $70 for transferring money under $1,000. Using this service, customers can expect the same speed and security they are accustomed to while saving up to 50% in fees. In addition, in most states, Walmart offers a low, flat check cashing fee of just $3 for checks up to $1,000 and $6 for checks up to $5,000. A significant savings compared to many other check cashing providers, some of which, as we know, take a percentage of the check instead of charging a flat fee. Bill payment is another service we provide. Starting at $1, customers can walk in and pay their bills such as utilities, phones, rent, and more. Customers like this service because they can choose between same-day, next-day, and 3-day electronic payments. For those customers who require a physical way to pay a bill or fulfill another financial commitment, we offer money orders at Walmart for 70 cents. As a comparison, for a typical customer at the Postal Service, the starting price for a money order is $1.25. Interestingly, we're finding that the use of money orders is declining, maybe not surprisingly. However, our cash walk-in bill pay continues to grow at almost the same rate as money orders are declining. So we think the bill pay service is sort of absorbing that money order volume. There are still a lot of customers that want to pay with cash. They're just not converting that cash into paper first. They are instead digitizing it. One of the other areas where we've helped drive innovations with financial providers is through account-based products. Walmart provides access to a variety of products, including Bluebird, our industry-leading checking and debit alternative with American Express. Bluebird has significant consumer benefits, including no overdraft fees, no minimum balance fees, bill pay options, sub-accounts, and set-aside accounts. Basically, the only time a customer would incur a fee is when an out-of-network ATM is used. We think it's providing customers a useful alternative choice to a bank account if they so choose. We also offer the Walmart Money Card, which is a general-purpose reloadable debit card with Green Dot and GE, which is available at different price points depending on what the customer wants and needs. A few quick, interesting anecdotes about the trends we see with the usage of Bluebird in particular. Customers who've established a set-aside or reserve account are putting away more than 25% of the money they add to their primary accounts each month into these linked accounts. They're transferring money an average of 3 times a month in order to save for future expenses. We are very encouraged to see this, and we're always looking at ways to encourage even more savings. Customers are naming these accounts according to what they're saving for. The most popular names are vacation, emergency fund, and savings. Finally, we've had a long-standing credit card program that has provided affordable and accessible financing solutions. As part of this program, we offer free FICO scores and everyday gas discounts. Interestingly, 80% of the customers that take advantage of these financing offers pay off the balance before the special rate expires. So I hope that's a helpful overview of our money services business, and I would just also add that a number of our competitors in retail offer some combination of these products as well. Not necessarily all of them, but prepaid money transfers, check cashing. So you see that in particular a lot of the grocery stores. So thanks for your time.
Thanks, Jenna. So I'm going to ask a couple of questions, and then we'll toss it out to the audience. Jenna, and I wanted to start with you because one of the things that Congressman Issa said that struck me was the workforce at the Postal Service may or may not be able to conduct these sorts of financial transactions. And I'm just wondering, from the standpoint of your workforce at Walmart, I mean, is there a lot of particular training that goes into offering these services?
Yeah, it's a really good question. I think it depends on the specific service. So there are certain services, such as money transfers, that only can be done at the customer service desk or at a money center. And that's because, and like banks, we have Anti-Money Laundering, Bank Secrecy Act, suspicious activity report requirements.
So you have to follow these same regulations.
Yes, as it relates to those, yes. And so for those types of activities, that's done at those desks, and those associates do have those types of additional training. Some of the other services, like check cashing, some of the prepaid card reloads up to certain amounts, for example, those are just done at the registers by cashiers, and the cashiers have training on how to facilitate those transactions.
Thanks. Dong, I was wondering, we've heard about the underserved, and we've heard that commercial banks have been pulling out of many of these markets. I'm just wondering if, to what extent that has been the case, and to what extent have you made up the difference with mobile applications and that sort of thing?
That's actually a really interesting question because I guess that is the basis for the research that Pew did and some of the work that the Office of the Inspector General did in its white paper. And, I thought it was kind of strange when I saw some of the figures. Just opening up the white paper, one of the big statistics that kind of jump out at you is the fact that the IG states that post offices are in zip codes with no banks, about 38% in the geographic territory. I thought that sounded very odd to me, given the sheer number of banking institutions that are chartered in the United States. I know that there are about 6,800 banks that are chartered here in America, with about 93,000 branches. And I think Brian might have mentioned there's about 6,500 federal credit unions out there. And so that seems like a lot of institutions out in the geography. So at TBA, we asked one of our associate members to kind of take a look at it and maybe try a different tack of figuring out what the geographic coverage of these institutions are. And from their own findings, they looked at the issue and they found that bank branches and credit unions cover about 99.5% of the population in the United States. And out of the 30,000 zip codes here, either a credit union or a bank is found in about a 10-mile radius of every zip code that's here. So I'm a little confused by the different numbers in terms of geographic coverage.
When you say banks, you're talking about bank branches, not necessarily the check cashing services or the
Bank branches and credit
payday loan
branches
things.
as well.
Ryan, you had mentioned about the possibility of perhaps partnering with the Postal Service, and I'm wondering. Let me just ask Dong one more question. I mean, is this something that banks would be interested in, could consider?
That's another tough question. And the reason why I say that, it's not because I don't think there's an attractive opportunity for a partnership between post offices and banks out there. Probably the thing that rises to the top of my mind, serving kind of like a counsel to a lot of our members, is the fact that over the last couple of years now, several of the primary bank regulators, including the FDIC, the Federal Reserve Board, and the OCC, have come out with supervisory guidance detailing the responsibilities of banks and their relationships with what they call third parties. And in this instance, that would include a relationship that a bank would engage in with the Postal Service and a post office. The CFPB has come out with similar supervisory guidance as well for banks under its jurisdiction. So when you take a look at some of this guidance, you'll see that it's very detailed, but the bottom line is that banks are responsible for their customers, period. And so it's a situation that we're not sure as of yet, since this is just an idea, whether or not the Postal Service is able to meet some of the standards that banks will be responsible for in terms of that relationship.
Adam, let me turn to you.
Sure. Depending on what services the Postal Service would offer with a bank, it really changes whether the postal bank would be in competition with the existing banks, or whether it would be serving a different part of the market and potentially be a feeder to the banking system. So historically, when for the roughly 60 years that we had a postal bank in the United States, there was a cap on the size of the accounts, and it was historically adjusted. It was fairly high, but it was $2,500. One could imagine a much lower cap now, and if you get $2,000 in your account, that's the cap, and at that point you're graduated and go to a bank or to a credit union, and this could be so the postal bank could potentially be a feeder and actually help banks by in some ways relieving them of prospecting for customers.
And would there be regulatory hurdles, though, to overcome with Dodd-Frank and with all of the other alphabet soup of regs that banks and credit unions have to follow?
Undoubtedly, there's. Exactly where a postal bank would fit within the existing regulations would. That there's a real challenge there. Would it be exempt from certain regulations, or what would apply? That would be an important set of questions.
Go ahead, Ryan.
I just felt obligated to clarify when we talk about a partnership as I envision it, and I think most credit unions would also. They'd have a hard time seeing postal employees serving their members. When we talk about a partnership, we're talking about the credit union leasing some space and establishing its own facility within the post office, not a postal employee delivering the service to a credit union member.
Gotcha. And perhaps having a little counter or something.
Right.
If that were the one thing we haven't talked about is the profits in all of this. And I don't know. I'll turn to you, Adam. Do you think that the post office, the Postal Service, could actually make money on providing banking services?
I don't think the Postal Service would ever be allowed to make money on providing banking services. In theory, I think it's possible to make money, but politically, I think for a postal bank to fly, it would basically have to operate at cost. And to the extent that it made money, it would then have to, in the future, lower prices or something. The flip's sort of a related issue is if you're taking deposits, where do you put that money if you're a postal bank? Because that, potentially this is a huge amount of money postal bank could be holding on to, and figuring out what you do with it. You invest it in, does it go into treasuries? Does it, historically it had to be reinvested in banks, in communities. We had kind of our original Community Reinvestment Act. This is kind of a mess.
Jenna, I assume Walmart offers these services not totally altruistically. There's it's a profit center for the company.
I can't speak to the financials, but I think what I would say is we clearly have customers that need and want the services, and I think we perceive our stores as a one-stop shop. And so it's a place where they can come and cash a check and then do their shopping. And so I think that's a big part of the reason why we provide the services it's customers need and want.
And people who make deposits in the savings accounts that you were talking about, where does that money go?
So that's that's a set-aside account in the Bluebird product, and so Amex, as our provider, holds that.
And so you haven't actually opened a bank,
No,
Walmart Financial.
We do not have a bank.
Well, maybe it's a possible business opportunity.
Another conference.
My conference was like 6 years ago. Yeah.
And I guess the last question I'll put out and then turn it over to our audience is do we have a sense that people, Adam, you mentioned how the banks can be imposing to a lot of people who are now underbanked or do not use them. Do we have a sense at all, do you think that post offices would be a place where people would feel comfortable with parking their money or cashing a check?
Well, to the extent people perceive the post office as being, as part of the government, I think they would be reasonably I would hope they'd be reasonably comfortable with it, because ultimately that's what's backing the banks too.
Yeah, or perhaps just the opposite. Maybe I wonder if there's a PR campaign that needs to be done. All right. Well, let me ask. There are some folks out there who have questions, and there are some folks that have microphones, and so if we can put them together.
Hi, I'm Marissa Baradran, a professor at the University of Georgia. I have a question for Ryan. I am a proud credit union member, I should let you know. And I've done some research on credit unions, and I want to go back to Adam's point here about just the fundamental costs of providing small loans. And the way that the credit unions historically, like we're talking about Filene and, back then, were able to do it was to lower cost because the members knew each other, right? And that survives up until the 70s, and you have lower cost alternatives at credit unions. They can no longer do that since your regulations changed in the 1970s. So I understand what you're saying. Look, there's mutual membership. There's a lot of great reasons to go with the credit union, but I don't understand that how you can beat banks at all in this arena. But I think, this is where Walmart, I think, gets undeservedly a bad reputation because they can, right? They have, economies of scale, and some say that maybe that doesn't exist in banking, but they're able to lower costs because of their girth, right?
Sure. So I think, one of the first steps is getting the unbanked or the underbanked, or as someone said earlier, the unsatisfied customers into the doors of the credit union, where they can. There are many credit unions that do offer small dollar short-term loans, but that's not the goal, right? The goal is to get them into.
Why not?
The goal is to get them into more mainstream services. So, as was mentioned, you want to graduate them into more mainstream services with a savings account and a checking account. We provide a number of financial literacy options, financial counseling at many credit unions. There's a lot of options for once a underbanked individual or an underbanked family enters into a credit union relationship. There's a lot of opportunities for them to get more knowledge and more information about how to manage their financial services that in the long run is to the benefit of them.
Okay, let me just push back just one. I think the demand is for the small loans, right? I think it's really great to get people into the banking sector, but there's a large consumer demand for the very thing that I think we're saying.
We have a pretty standard small loan product. It's called a credit card, right? But to have a credit card, you need to have the bank. You need the banking relationship. And, so, certainly about half of credit unions don't offer credit cards, but those tend to be very small credit unions. The big ones, Boeing or Penn Fed, they do. And that's, I think, the way that they're serving that small dollar need. They're just not, I don't think they're thinking of it they don't think of it as a small dollar loan product, but that's what a credit card does.
Valenti, Center for American Progress. Adam, I appreciate your point on figuring out exactly what we want to achieve with postal banking and how the revenue side plays into it. I am curious, we do have public banking options today for some consumers in the sense that we have federal, state, and local cards for Social Security benefits, unemployment benefits, even city-level cards by transit authorities that have some prepaid features. Setting aside the small dollar credit piece, is there a way that this could be done through smart contracting? And there's definitely smart contracts, and there's some really awful contracts out there, to use the Postal Service as an anchor institution for banking services, but without having all of the baggage that a postal bank could bring with it?
I think the answer is potentially yes, but it's how good is exactly what are in these contracts? How smart are they? The idea that we're going to have government provision of financial services, that should not be an obstacle here. We have tremendous government provision of financial services, be it so prepay, the electronic benefit transfers. We insure more. We take basically most of the credit risk on mortgages already. We're doing that for small business loans, so forth. The idea that the government's in the financial space shouldn't be the obstacle. Exactly how we deliver it, that's really where we need to do a lot of thinking.
Anyone else?
Hi, Travis Plunkett with Pew, all the way over here. Question for Jana. Without revealing trade secrets or competitive issues, can you maybe synopsize the Walmart experience serving a population of people who trend towards low to moderate income, in terms of, give us some insight in terms of, what do these people want in terms of financial services? What are the lessons that you've learned broadly in terms of how to serve them? What are some thoughts that we should know, given your extensive experience in that area?
Yeah, it's a really good question. I think and Adam referred to this. You have the unbanked, the underbanked, and the unhappily banked, right? And I think that's as certain types of fees increase, people look at the cost of having a bank account, and there's lots of reasons for that, and want to find alternatives that sort of fit their needs more so. I think we also can see a lot in terms of just our broader insights about how people are shopping when they're buying certain things, what their needs are. And through that, I think that helps inform a lot in terms of what we're providing on the financial services side. So as I mentioned, the need to digitize cash, I think that's still very important, and getting people kind of into the digital economy. They still need that physical touch point where they can take the cash and digitize it. So a big reason why we're seeing kind of this transfer of the money order business into the bill pay business. Certainly understand, too, that I think people want ways to kind of manage their money and have the opportunity to set it aside in different ways. So, set aside accounts in Bluebird, or frankly, sometimes people even will use a closed-loop Walmart gift card to do their shopping every month. And so they can manage, what they're buying, have a budget, and keep that on sort of a separate, dedicated product. So those are a lot of the things I think we see. And then obviously the basic money services. Somebody gets a check, a tax return check, they need a place to go cash it. And if they don't have a bank account, there's really not a ton of options for that. And I think we price-wise are providing a really competitive product there. So.
Don, go
Brian,
ahead.
if I could just touch on that a little bit as well. I think some of the studies that have dealt with low to moderate income borrowers and bank customers, I mean, when you take a look at it, essentially what they're looking for is kind of a relationship with a financial institution that works with their lives, that's convenient, that they can rapidly, conclude transactions, and that in many ways is secure. I mean, security seems to be a primary topic on the top of a lot of people's minds. And so, you see in the banking system, and I know for a fact that Walmart and credit unions are doing this as well. You see this, this advent of kind of like a mobile or internet banking, the digital channels that are out there that financial services are trying to provide the new kind of highways for which these types of consumers can utilize. And so you see, I mean, when you take a look at the recent Fed study on mobile banking, I mean, you see some startling numbers. I mean, I took a look at it, and it shows that about 87% of adults in America have a cell phone, and 61% of them have a smartphone. And actually, on average, the underbanked, their numbers beat the average American consumer. So you definitely see this, this growing movement towards having a mobile platform or an internet platform to engage with financial institutions that is adapted to the lifestyles and the needs of more consumers, not just low to moderate income borrowers. So that's definitely something that banks and I'm sure credit unions and retailers are all working on right now.
And do you? I know that I spoke with your boss, and I know you're who's very outspoken about the opposition of the Consumer Bankers Association to this idea. And I'm just wondering if, though, with credit unions, with companies like Walmart that are reaching out, do you have those same kinds of issues?
We have, that actually touches upon like the second broad question I had about competition in the provision of consumer financial products and in the markets themselves. I mean, you do see a lot of competitors out there for the traditional, what I call the formal banking system. You see it coming from the retailers, and we see it, I guess, coming from the government now. But another sector that we are also facing competition is with new entrepreneurs, new startup financial technology companies. And from a private sector standpoint, I would say that that competition is good for consumers, right? It's just that when you introduce a public option that may not be ready for prime time, you face a situation where, well, we're not sure that the same umbrella of competition kind of covers everybody. So that's kind of how I look at it. I don't know how Richard thinks about it on his part.
Does anyone else have yeah.
Ramsey Alwyn with the National Council on Aging. So when we talk about this market, it's a low-income, vulnerable population. They need low-cost, no-cost services. They also need opportunities to increase their income, supplement their income. And there are programs out there like the Medicare Savings Program that pays for Part B Medicare premiums, puts $100 back in your Social Security check for a senior. And I'm wondering if there are any lessons learned or promising practices around your endeavors where you're able to track the financial experience of an individual. You might see when they're falling behind. There might be certain trigger opportunities, red flags, to then offer up, Ryan mentioned financial counseling to stabilize their situation. Well, there are a lot of public benefits, food stamps or SNAP, utility assistance, et cetera. And as we talk about the post office as a government agency, they might be a better platform to have those conversations and offer those types of opportunities up. But at the National Council on Aging, we see our typical low-income senior relying on Social Security alone is leaving almost $7,000 worth of public benefits on the table. And that could really free up their dollars, make them a more stable candidate for a credit union or a bank. And I'm just curious if those are issues that you've seen, or there are some promising practices where you've looked at the data of your consumers and started to consider outreach opportunities to make some offerings.
I'm sure that there are many credit unions that do that on an individual basis. The relationship between a credit union and member can be very strong. From a national perspective, one program that I would highlight is run by the National Credit Union Foundation, and they run reality fairs across the country. It's primarily targeted towards younger individuals, but the idea being that you sit down with them and you help them plan a budget. You talk about the income that they have, the expenses that they have, and the importance of the decisions, the financial decisions that they have to make. So you start that conversation. It can be at the grade school or the high school level, but very early in life, and hopefully as they move forward, the folks that have gone through those programs are making positive decisions. But that's one of many things. And as I said, at an individual credit union level, I know that because I've received a call from my credit union this week on an account that I had for my daughter. I know that there are folks that are monitoring this in the best interest of their members.
Yes, Alexander Berto. Just one question for the credit unions and the bankers. You were saying that would be thinking of a partnership, but in a partnership just in leasing space within a post office. For me, it's strange because there's models out there in Brazil or in the UK or in Spain where it's actually a bank that is willing to pay an entry fee to get into the network of the post office and offer its services. And you guys are saying we are we're not considering using the postal staff to offer the services. I want to get into what is it that you're afraid of in postal staff. Is it customer service that you feel would not be up to level, or is it fraud? What is it that you're concerned with that, for instance, your colleagues in other countries are not concerned with, and they're willing to put skin in the game to get to a network?
Sure.
Just before that, I just want to say I'm not representing my UN agency, but I'm here as in person, so I won't be quoted on my questions.
I think from our perspective, it's a member service concern. I think that and that's not to say that it couldn't possibly be overcome, but we're at the very beginnings of this thought idea, as Dong stated, and so I think that that's the first concern. And the other thing, just to speak to some of the other models, and particularly Brazil, where there's a pretty strong credit union movement, the structure of the system in Brazil is quite different than the United States. They have more of a franchise model, and so and there's a number of regulations even within the credit union system in Brazil to ensure that there's high quality member service throughout. That system and that structure doesn't exist right now in the United States, and so I think that would be something that would have to be overcome as well.
If I could just add to the topic, I'm sure there's a panel on the international experience with postal banking that's coming
this
up pretty
afternoon,
soon.
yeah.
Right, but just from a layman's perspective, and I'm no expert on the international experience, I would imagine that a banking system anywhere that you find anywhere in any nation is it's a result of a confluence of a lot of different factors that have changed this culture over time. I think I believe the United States is unique among most developed and near developed countries in the sense that we have a large number of institutions out there. I mean, like I cited before, there's 6,800 charter banks here in the United States, and on top of that, you have 6,500 credit unions, right? I mean, that's a large number of banking institutions here, and so that might be one of the factors why you have not seen the reintroduction of a postal bank system here in the U.S. But going back to the second part of your question, like I noted earlier, the relationship between a bank and its customer is exactly that, and that relationship also carries with it responsibilities, and that also lies with the bank itself. And that's something that our members believe, and that's what our regulators believe. And so that's the beginning point of that discussion. And so, like I said at the beginning, I don't have a detailed business proposal before me to kind of respond to, but that's the way I come into that question.
Yeah, I guess this is for Don or for Adam. I've read in many publications that some of the larger banks are actually investing in payday loan companies around the country, and that they then have their own financial interest in maintaining these options and establish the qualifications for becoming a banked person in a way that's financially beneficial for them and direct certain people to the payday loan operations from which they make additional money. And I'm wondering if anyone on the panel has some more information about the interrelationship between the banks and payday loan companies.
Sure. Some banks, including some of our largest banks, offer a payday type product. They don't call it a payday loan, they call it a deposit advance. That makes it sound, I don't know, cleaner or something, but it's basically a payday loan. So some of them offer these products directly. Then they also, payday lenders need funding. They don't have deposits. And the funding source for a lot of payday lenders comes from banks. Not all of it, but that's one of the sources. So, there's certainly a large bank role within payday lending, even if it's not always direct.
I guess I'm going to have to talk about this issue as well. So there was definitely a product in the banking system called deposit advance products, which is related to paydays in the general sense that they provide kind of a short-term small dollar loan to bank customers. And the banks that were engaged in this product produced this product based upon customer demand for that short-term small dollar loan that they could quickly receive at low at some cost to them, but it was that convenience and the speed of that transaction that they were looking for. And then, strange enough, when you talk about the bank, talk with the banks that dealt with this product, it's not something that they advertise very widely because it's not one of their bread and butter products, but just something that they developed as an alternative to some of the payday loans that some of their bank customers were taking out. So I guess they would fall under the category of underbanked customers. But they also added features to that loan product that we think provided a better alternative to the payday lenders. It's you had to have an established relationship with the bank. There were associated cooling off periods with it, and the loan terms, I believe, in most instances were for 30 days, and they were at a lower fee than the payday lenders. So that's kind of where the deposit advance product is coming from. But based upon the kind of fragmented supervisory structure in the United States, the bank regulators made a decision on their part to make it much more difficult for banks to provide this product to their customers. And now I don't believe any banks provide it anymore, and which is a situation that's kind of, I believe, unfortunate since the payday lenders are still operating legally out there, and that's the alternative that's available to customers now.
Can I just add
Please,
something? Because I think it's relevant to this conversation. We absolutely recognize that there's often a need for customers. They need a short-term or emergency financial assistance, and we get asked this question a lot. Walmart, can you figure this out? Kind of small dollar lending, and the answer is we don't have a clear answer. We haven't been able to figure it out, and it would likely have to be done with a provider because we don't have a bank, and I just don't think we've seen a solution that sort of fits appropriately in our low cost model of doing business. We do have a product in its small dollar in the small business sense in our Slams Club business, where we serve a lot of small businesses through a company called Superior Financial, and they provide some smaller dollar SBA-backed loans for businesses, kind of in the $5,000 to $25,000 range, because we did find that there are some small businesses that were having trouble kind of, getting smaller dollar loans for their businesses. But certainly that's a somewhat of a different issue than for the consumer.
And I'm just curious, you couldn't figure it out because of regulatory hurdles or profitability or?
Yeah, it's a cost challenge in doing it in a way where we feel comfortable that, we could put a price up on a menu board in a low-cost way. So.
Adam.
For short-term small dollar loans, it's really hard to make money on them except on people who are doing repeated rollovers, because you have a certain level of sunk costs in a loan, and if you have a $300 loan, it's and a $45 fee. In order to recoup, let's say, the $50 of costs that go into that, you need to have at least one rollover or two rollovers. For internet lenders who don't have the brick and mortar presence, they pay about $150 to acquire a lead from an online lead generator. So they're trying to find people who are going to be stuck in a debt trap, and to try and offer this as a product where Walmart wants to keep customers happy and have them buy other stuff, that's hard to do.
Interesting. Anyone else?
Hi, Susan Weinstock with Pew. My question is a comment that Adam made. I wanted to ask Dong and Ryan to reply to, which was that for financial institutions, small accounts are not profitable. So I wanted to hear your views on if you feel that's correct, or if there is a way besides through overdraft fees that they are profitable, or that they're something. I mean, we read a lot. Maybe banks don't want these customers. So is that the case?
Credit unions want to serve their members, and right now we have about half of the members of credit unions in the United States have incomes between $25,000 and $75,000. So there is a desire on the part of credit unions to try to meet the needs of their members, and as not-for-profit financial cooperatives, the profitability of those accounts is perhaps less of a concern than it might be for a for-profit banking institution. Now, we've got to be able to continue to maintain the credit union. So this is not a charity, but we do have a desire to serve those populations.
So talking about, I guess the question is, do we want to serve the unbanked and underbanked? And I think the answer is a resounding yes, because banks feel that this is an ongoing long-term relationship that they're establishing with their customers, and so that's why you see children through the assistance of their parents acquiring a bank account, or college students acquiring, and these are not generally customers you would say would be high-value targets for a bank. But we understand the relationship, that will occur hopefully for decades over the course of a person's lifetime. So the idea is that we want to welcome them into the banking system, and we try to figure out different ways and different types of accounts that we can offer them to bring them in. Because we think the formal banking system can provide a safe haven for most customers out there.
Yeah, I want to come back to the first question you asked, Brian, and to Jana, and that was about training. We know for a postal employee working, let's say, a window, and I know you're coming from Maine, you know the importance of post office and community and the training that the frontline personnel have. There's a baseline level of training customer personnel at a window would have, which is probably more akin to your customer service station at a Walmart. And there's a baseline level of training a cashier at Walmart has compared to with the training that is necessary to facilitate Bluebird. I'm curious how much more training is needed to serve the Bluebird, through Bluebird, the service of the customer service counter, than would be a cashier. And if you could translate that, how much more training do you think would be necessary, if at all, would a customer service personnel at a window need to perform some rudimentary banking services?
Yeah, it's a good question, and I guess I would say it really goes back to kind of the requirements around reporting and the type of training that an associate would need for that. So with money transfers, certain reloads of cards that are over certain amounts, those are done at customer service or a money center, because those associates are getting the more specific training around AML, Bank Secrecy Act, suspicious activity reporting. Otherwise, a cashier is, trained to do some, smaller dollar reloads, so that the threshold at which a customer would have to go to customer service is $2,000 basically. So if you're doing any kind of transaction that's over that, you're sent to the customer service desk, and there's a prompt that comes up basically in the register to have you do that. But otherwise, the cashiers can cash checks at the register, and they can also do the reloads of the card products, and a lot of that is just in the systems, honestly. So it's punching in the amount and swiping the card, which, a lot of cases they're doing, for payments anyway. And so I think that's really where it is. It's more on what requirements there are for additional types of reporting based on what the transactions are, and who are the associates that are sort of serving those types of transactions.
Anyone else? Well, thank you. This is really interesting. You're welcome.
Thank you, Brian and panelists. This was very enlightening. So we've had a small schedule change. Senator Warren is going to show up at 11:30. So we're going to take a 15-minute break and then reconvene at 11:30 for her speech, and then we'll do lunch after that. So 15-minute break. Thank you so much. So appreciate it. Thanks for chatting. Plunkett. Thank you. Oh, my pleasure. Oh, thanks. Thanks. Good. Yeah.
Are you still teaching?
Thank you so much. Oh, sure. To see you again. Thank you. Thanks.
Hello, everybody. We're going to accommodate a very busy senator in, a very busy Senate we hear today. So that's good news. I'm Tamara Luzzatto, and I'm a vice president for government relations here at Pew, and try to assist a wide array of our policy reform, advocacy, and research projects. And I'm a veteran of the Senate, did 2 tours of duty, so feel I might have some sense of how much a privilege it is that we have Senator Elizabeth Warren. Most of you probably know a version of her incredible and impressive resume, but you could always read her recently published book, A Fighting Chance, which the New Yorker called part memoir, part manifesto, and which the Boston Globe praised for its colorful stories from her battles over financial regulations in Washington. But I'm going to persist because I work for Pew and we tell the facts. Elizabeth Warren grew up in Oklahoma and was Professor Warren for many years, teaching at Harvard Law School. She focused on commercial law, contracts, and bankruptcy. And before her newest book, which I just mentioned, and you all are going to buy and read, she somehow wrote 9 other books along the way. She then became Senator Warren, winning what I think you probably have a sense of was a pretty intense campaign in 2012 to represent Massachusetts. And relevant to today's topic, she serves on the Senate Banking, Housing, and Urban Affairs Committee, along with the so-called Help and Aging Committees in the Senate. And I promise, Sue, I'm going to restrain myself from taking a little extra time to thank Senator Warren for her championship of other issues that Pew works on in promoting public health and food safety and caring about antibiotic resistance. But I am refraining and restraining. So to look back before she entered the Senate last January, Elizabeth Warren was appointed to be a staff advisor to the National Bankruptcy Review Commission in 1995. And later, in the aftermath of the 2008 financial crisis, she was enlisted to chair the Congressional Oversight Panel. I'm starting alphabet soup right now, known as COP, I guess. That I didn't know, with the mission of monitoring the new Troubled Asset Relief Program, and I think we all know that's called TARP, aimed at protecting taxpayers and holding Wall Street accountable. She also conceived the idea of creating a new federal agency that, drawing on the goals, as she and other proponents laid out, was given the daunting charge of making consumer financial markets safer and more transparent, leading Congress to establish the Consumer Financial Protection Bureau, CFPB, which I know you all know by heart, and President Obama to recruit Professor Warren then to launch that new entity that it's now well underway and that we're working very closely with in Susan's portfolio, yes. Given Senator Warren's many years of studying, proposing, and influencing policies affecting consumer financial products, you can see why we are so grateful she's made the journey all the way from the Senate to Pew to address all of us today. And even more specifically, we're honored to have a lead proponent of our topic today to again be that bookend that Mr. Issa described you as, to explore the very question that all of you are gathered to discuss and explore, and whether and how the Postal Service might be a provider of financial services. And I hereby present to you Senator Elizabeth Warren of Massachusetts.
Thank you. Thank you. Thank you. It's a real pleasure to be here. It's good to look out and see so many people I've worked with on so many issues through the years. I appreciate the very kind introduction, and thank you all for being here to participate in this important conference. You know, from the great work that Sheila Bair has been doing with the Systemic Risk Council to the Small Dollar Loan Project, there are a lot of terrific projects going on here at Pew, and so I'm just delighted to have this chance to be here and talk with people about a very important issue. You know, by this time in the day, I assume the basic facts are clear. There's a need for expanded banking services for families of moderate means. The traditional banking industry no longer works for about a quarter of the people in this country. 28% of all households, 68 million people, rely on non-bank financial services like check cashing or payday lending. And the cost of these services is extraordinary. In 2012, the average annual income for these families was about $25,300, and they spent an average of $2,400 on interest and fees for non-bank financial services. Think about that. That was just under 10% of their annual income, or about the same amount that they spent on food. When more than a quarter of this country is spending about the same amount on basic financial services as they are spending on food, we have a market failure. And it's going to get worse. Banks are rapidly moving away from lending in lower income and rural neighborhoods and shifting their attention to the wealthiest parts of this country. SNL Financial, a research firm, reports that banks are increasing the number of branches they operate in areas where the median income is more than $100,000, while steadily reducing the number of branches they operate in areas where the median income is under $50,000. As families of modest means lose access to bank branches, more and more will find it much harder to participate in the traditional banking system. Now, this trend takes an enormous toll on the families who can least afford it. It also takes an enormous toll on economic growth in our country. It prevents people from building long-term wealth and savings, from developing credit histories so they can get a mortgage or a student loan later in life, from investing in their education or starting a small business. We all benefit when more families are in the mainstream of financial services. And that's where the Postal Service comes in. It has the infrastructure, it has the experience, and it has the trustworthy reputation needed to address this problem. Nearly 60% of post office branches are in banking deserts. They are in zip codes where there are either 1 or 0 bank branches. This means that the Postal Service already has the strong brick-and-mortar presence in low-income and rural communities that traditional banks are leaving behind. The Postal Service already offers some basic financial services like money orders and international remittances, and it has the statutory authority to expand those offerings to include check cashing, savings accounts, and small dollar loans. And the Postal Service is well regarded. More than 2/3 of the public see the Postal Service as trustworthy and reliable. Offering basic financial services through the post office is a proven model. Postal services in a number of other developed countries, I'm sure you've talked about these today, England, Germany, Japan, have been offering basic financial services for years, and they've incorporated more citizens into their financial system as a result. Even our own post office, and I am old enough to remember this, offered basic savings accounts as late as the 1960s, and they helped bring hundreds of thousands of recent immigrants into the financial system. We have a serious problem, and we have a ready solution. That's the basic case for postal banking. But what about the case against it? I'll be blunt. I have found that the case against it is mostly a case of vague claims that fall apart under real scrutiny. So I want to go through the main arguments that I've heard. The first question I get about postal banking is, how can the Postal Service expand to offer financial services when it's already losing money? Well, true. The Postal Service reported losses of about $5 billion during its most recent fiscal year. But all of those losses and more were the result of a bizarre requirement that Congress and the Bush administration imposed on the Postal Service in 2006. They suddenly required the Postal Service to pre-fund health benefit payments for retirees for the next 75 years and to satisfy that requirement in the next 10 years. As a result, the Postal Service has had to make pre-funding payments between $5.4 and $5.8 billion a year since 2007. No other institution, public or private, is subject to such a requirement. In other words, the Postal Service's losses are the result of bookkeeping demands made by the Bush administration. Setting aside the required pre-funding payment would have left the Postal Service with a healthy $600 million in profits in the 2013 fiscal year. In fact, the trend lines are very positive. In the first quarter of 2014 alone, the Postal Service would have made more than $750 million in profit, if not for the pre-funding requirement. The Postal Service has actually adapted quite well to the changes brought about by the internet age. Its financial woes are not the result of mismanagement or incompetence. They are simply the creation of a Congress and an administration that wanted to see the Postal Service weakened and cut back. So that's number one. Number two, the next concern I hear about the Postal Service management is that the management and employees lack the experience and training needed to offer basic financial products like savings accounts and small dollar loans. This is the kind of claims I hear from big banks in particular. This stuff is just too complicated, just leave it to us. Well, I don't buy it. Once the basic business model is set up, payday lenders and check cashing outlets are providing these services right now in storefronts, drugstores, and grocery stores all across the country and raking in billions of dollars in profits. Once the basic model is set up, Postal Service employees could certainly manage the transactions. In fact, Postal Service employees are already providing relatively complicated financial services like international remittances. Surely, with a little training, they could cash a check or open a basic savings account. Besides, one model for postal banking is to have the Postal Service partner with local community banks or credit unions that could train workers, offer the back office management, and help provide small dollar loans. And here's where the market comes in. If customers have the choice between high-cost payday lenders and trusted postal employees, I think families will skip the payday lenders every day. So, final claim, and this one's my favorite. It's that postal banking is government overreach. That claim conveniently overlooks the government's prominent role in supporting the traditional banking industry. The government provides banks with deposit insurance through the FDIC and access to low-cost money through the Federal Reserve. It provides the mega banks with a subsidy worth billions of dollars based on their too-big-to-fail status. And what does the government get in return for this? Well, it gets an industry that refuses to serve a quarter of this country and then bristles at the very thought that the government might step in to help provide services. I'll listen to cries of government overreach from the big banks the day they give up all of the government support that they enjoy. So those are the main claims that I hear against postal banking, and I don't think they hold water. But that isn't to say that expanding the financial offerings of the Postal Service will be easy. It won't be. The Inspector General's report from earlier this year laid the groundwork for the idea, but many questions and implementation challenges remain. The Postal Service is a significant institution with great reach, and implementing any change takes time and care. And one of the reasons I am very happy to be here with you today is that I think you can help flesh out the implementation of the idea and help answer some of the remaining questions around it. We must also consider the question of how to balance generating revenue for the Postal Service against providing affordable products to the underbanked and unbanked. History shows that without careful safeguards, institutions that start out with the goal of increasing access to financial services can lose sight of that goal if their attention turns to maximizing profits. And we need to explore the question of partnership. If post offices teamed up with their closest credit unions or community banks, they could provide a pathway for millions of people into the traditional banking system. Over time, people who routinely use lower-cost services at a local post office might be encouraged to take out a car loan or to open up a checking account at a local credit union or community bank. That's a win-win. More people with access to traditional banking and more small banks with access to new customers. Sure, it won't be easy, but change is usually hard. The scope of this problem is so staggering and the stakes are so high that we can't just sit back, cross our fingers, and hope for the best. It's time to build on the good work done by the Inspector General and to encourage the Postal Service to use its existing statutory authority to expand the basic financial services that it offers. It's our responsibility to make sure that the financial services work in this country, not just for some Americans, but for all Americans. So thank you all for being here today, and if we have a little time, I'd be glad to take some questions. So that's it for me. Good.
So I think there are mics around the room, and the senator, before having to go back for votes or whatever else the Senate is up to today, let me see a hand.
Anybody have a question? Come on, this is reverse Socratic, your big chance. Yeah, there we go.
Yeah, he's back.
Yes.
I can tell you that. And remember to introduce yourself, since
Michael Crew.
Senator Warren is meeting you for the first time.
Rutgers University.
Good to see you, Michael.
Thank you, Senator. We've been a fan of yours at Rutgers for some time. Jim Bixler once tried to get you to be on a panel, if I recall correctly. I can't remember that he succeeded. But this is the second very articulate and interesting speech we've had today from the Hill. There was some agreement between what Darrell had to say and what you had.
Mm-hmm.
He said, well, you seem to concede that there was a social problem here. I think, yeah, that's fair that he conceded that. But he seemed to think it was going to cost money. And that didn't appeal to him. He didn't think this was something that... But he said, that's how you're going to look at it. It's going to be something that's going to involve a significant subsidy. But what's your thought about the subsidy notion?
You know, I just think that doesn't make any sense. We have the embedded infrastructure, right? We already have the bricks and mortar. They already have air conditioning or heating. We already have the employees who are there. We have the parking lots. We've got the lighting. We've got all the pieces in place. This is about giving the post office an opportunity to add one more service to the things it does. So in addition to wrapping up packages and selling stamps and monitoring all the things that are happening in the boxes, it also is an opportunity to add just a few basic financial services. And the whole point behind this is that this would generate revenue for the post office. Think about it this way. Right now, there are check cashers and payday lenders who have to go out and replicate all of that infrastructure, hire people, train people, and they are making tens of millions of dollars in profits every year on the products they sell. So this is, for me, just the obvious win-win. Those products could be offered that are safer, they could be offered at a lower cost, and they could generate some revenue for the post office. You know, it's not often in life where you see such a perfect match. There is a big need, 68 million Americans who don't have access to traditional banking, and a post office that has plenty of additional capacity. The two can be put together, bring down costs, bring more families into the financial mainstream, and help stabilize the post office.
Someone else?
Back here? Yeah.
Senator Warren, it's wonderful to hear you speak. I am Ruth Goldway. I'm the chairman of the Postal Regulatory Commission.
Ah, nice to see you, Ruth.
And I'm going to get in trouble for saying this because
Okay.
the commission is supposed to be a regulatory, relatively neutral body, but I've been an advocate of this idea for a long time. And you had the United States Office of Inspector General of the Post Office here in this room, and you have the chairman of the Postal Regulatory Commission here in this room, but you don't have anyone from the Postal Service itself. And while this is, in theory, a really good idea, we have a postal service at the moment which is closing post offices, reducing its network, and doing everything it can to shrink as opposed to look for new opportunities to maintain its current size. What do we do about that?
Yeah. Well, you know, the way I see this, Ruth, is that the post office is in trouble because of political decisions made during the Bush administration to try to shrink the post office, to try to cut back, basically to create a financial crisis for the post office. And I think the numbers are just absolutely clear on this. And so now what we've got is we've got a post office that's struggling. Every year that goes by, it loses money. Why? Because of the artificial requirement imposed by the Bush administration that it make these extraordinary payments to fund 75 years worth of benefits for its employees. And that's what, when we get into this, that's what makes this question about postal banking become more political than it otherwise would have been. Let me put it this way. If this were just a time where everyone was supporting the post office and wanted to see the post office succeed, and we came forward, the Inspector General came forward and said, here's one more thing we could do to use our post offices more efficiently, to let the workers be more productive, and let's add to it, because there's a real need out there, 68 million Americans who are not in mainstream banking, and we could offer some services at lower cost here. I think there'd be support across the political spectrum. But once the debate starts with how to shut down the post office, which is the view of some people, then they don't want to hear that there's a solution. There are ways to bring more revenue into the post office, to use this space more efficiently. I guess my bottom line on this is really to challenge it and to say, we've got to take this out of politics again. Post office has been here since colonial times. It's a part of who we are. It's a part of how we run this country, an essential government service. Why would anyone object to making that service more efficient, using the spaces more effectively, and helping bring service to more Americans? Because that's all this proposal is about.
So, yes, just one second. So at the risk of challenging my very close friend Ruth Goldway, who hopefully will speak to me when our book group meets in 2 weeks, we did have some representatives of the Postal Service here. It's just they're no longer here, evidently. So, so our invitation went to all, probably by snail mail, for all I know. Yes, yes. Question noted. So there's another question behind the column there.
Hi, Senator Warren. My name is Adam. I work here at Pew. And I lived in Japan for 4 years, where there is a banking system as part of the post office. There are ATMs in all of them. And from a consumer's perspective, I've got to say it's flawless. So what do people need to know here to sort of raise consciousness about this?
Well, you know, actually, it's a good point you make, Adam. It's that... like I said, there's a problem and a solution. Why don't we put those together? But the other way to say it is it's not unusual to think of the post office as a place where basic consumer financial services are handled. It's true in Japan, it's true in Germany, other places throughout Europe. It's been done successfully. There's nothing extraordinary about this business model. This is just an opportunity for the post office to use its space and to use its employees more efficiently to bring needed services to more Americans. So, you're right. We've got great examples to be able to point to around the country. We should do it on a regular basis.
I think I'll look over there because we have time for 2 more crisp questions to then enable the senator to get back to work, real work.
Yes.
Hi, Bryant Switsky with the Postal Service OIG. Pew released its research this morning that showed that across the political spectrum, Republican, Democrat, Independent, they don't disagree on this issue. They're in support of the idea of postal financial services. Why has this become such a partisan political issue in Congress?
Boy, you need somebody better to answer that question than I am. I really mean it. This is just one more example of where the American people get it. And they get it whether they're Republicans, whether they're independents, whether they're Democrats, whether they're libertarians, vegetarians, right, whatever. People get this. It makes sense to them. It's only here in Washington that this becomes more politicized, that this becomes more controversial. My view on this is we just have to take a deep breath and do what's right for the post office and do what's right for American families. The legal authority is there. The Postal Service can move in and start this. It can start it on a trial basis, it can start it on an experimental basis, or it can roll it out all across the country. I care about how it gets done. I think that there are details about how it works that will make it work better or worse, and I'd like to see it work better rather than worse. But the power is there. There's no need to wait for Congress to act on this. There's no need to let Congress politicize it. There's a problem. There's a solution. It's time for the Postal Service to move forward. Ignore the politics. Move forward on this.
I think one to wrap up.
Yes. Senator Warren, thank you so much for your advocacy and just for being here. That's interesting. I mean, your last comment may have addressed this, but you do believe that the Postal Service has the authority under their 2006 legislation to go forward, and two, it strikes me as interesting that you're saying that it's the Republicans opposed to the Postal Service and not necessarily the big banks that are opposing this, or I mean, I know in your book you say it's very hard to oppose the big banks. Have they taken a stance on this issue?
So we've heard some from the big financial institutions. They like their monopoly. It works well for them. Although, as I said, I bristle at the notion that they can be closing branches in zip codes where median income is under $50,000, while they're opening branches in zip codes where median income is above $100,000, and then oppose the post office offering the basic services that they refuse to offer. So I think this is one where we've got a very strong pushback on the big financial institutions. As I said when I was talking about this, I want to push this as a double win-win. It's a win-win in the sense that I was already talking about. There's a great need, 68 million Americans who have been shut out of basic financial services, and a postal service that could provide these and would be good for the postal service. More people coming into the post offices. But it also potentially is a win-win for the small banks and for the credit unions. This is an opportunity to partner up, an opportunity for the community bank that's in the next zip code over to work with the post office to help them get the business model in place, to help train the employees so they can provide these basic services and help bring more people eventually into traditional banking, places where people will be able to get car loans, where hopefully over time they'll be able to get home mortgages, bring more people into the system. You know, I keep going back to this. Remember the basic numbers. The people who are shut out of traditional banking are spending nearly as much on financial services as they are spending on food. That's a market that is not working in America. We can see how to fix that. And if we do fix that, we have an opportunity to help people stabilize their lives financially, to get back on their feet, to have an opportunity to build something going forward, just a fair shot at being able to build a little more secure economic future. This is the opportunity that is in front of us. I have no doubt that under current law, the post office system, the USPS, could do this. I think they can do this. I think they need to ignore the politics, and I think they need to do what the postal system has done for America for over 2 centuries, and that is to adapt to changing times and to provide the core services day in and day out to families across this country who need them. Postal banking is something that's done throughout the world. It was done here in the United States. I bought savings stamps at the Norman, Oklahoma post office back in the 1960s. We could do that. This is the traditional role of the USPS. And for them to be affected by politics means they're not being true to their mission. It's time for the Postal Service to get out there, protect the post office, and at the same time serve America's families. So thank you all. It's so good to be here.
How lucky are we?
Thank you. Thanks for all you're doing. Thank you.
Thank you. If you mind 1 second. Sure. If I could just take us from the profound and the sublime to the ridiculous, lunch will be served after, and a break follows before we go back to our program.
All right. Thank you.
So much.
Thanks so much. Thank you.
Folks, lunch is behind you in the room, in the kitchen back in there, and then you can come back in and eat lunch at your seats. Thank you. All right, I think we'll get started on our next panel. So let me just introduce the panelists, and then I'm going to turn it over to Stuart. So this is a panel on lessons for the U.S. from other countries. As we've heard this morning, there are many other countries that are do some form of postal banking. So we're hoping we can learn some lessons from what they've done that might be applicable to the U.S. So the moderator for this session is Stuart Butler. He's a distinguished fellow and director at the Center for Policy Innovation at the Heritage Foundation. And then also on the panel will be Alex Bertode with the Universal Postal Union. He's the Financial Inclusion Program Manager. Professor Sheldon Guerin with Princeton University, and Jim Campbell, who's an attorney and consultant. So I'm going to turn it over to Stuart. Thank you.
Well, thank you very much indeed, and it's a great pleasure to be here. I've spent a fair bit of time down here at Pew over the years, particularly looking at the whole issue of economic mobility, what it takes for some people to move up the economic ladder and why they do and why others don't. And among the factors that seems to be very prominent in why some people move up and others don't is whether they tend to save over time. And so looking at the idea of savings and how to build savings is very critical to the whole idea of looking at economic mobility and dealing with the issues of inequality of income and wealth in our country and other countries. And I think part of the evidence from that is that we have to think of innovative ways of encouraging a higher rate of savings, particularly among moderate and lower income people in this country. And so it's interesting to look at whether the idea of banking services of some kind through the Postal Service might be such an option. And of course, it is something that we've seen in other countries. As you can probably tell from my accent, I'm not from Alabama. I was brought up in the UK in a rural part of the United Kingdom, not from a particularly well-off family, I have to emphasize. And it was common when I was brought up in the 1950s when I went to elementary school for people like my family to have readily available vehicles and options for making at least modest savings. There were two principal ones. One was a mutual banking system called the Trustee Savings Bank, where people like my parents would put money in, and so would I. In fact, I brought along today my Trustee Savings Bank book from elementary school, starting in 1953 until I went to college, and that was a very common area. The other common one was post office savings. My parents ran a little gas station and car repair shop in this little village, and my mother actually was the sub-postmistress in the village. And the garage that my parents ran had the house next to it where we lived, and the front room was a little shop and the post office. So my mother actually took money in from people and put little stamps in their post office savings books, and she was part of that system. So I have history in this area. That system grew and developed in the UK considerably and was eventually actually privatized under Margaret Thatcher in 1989, continues today. So there's a long experience, not just in the UK, but as you will hear from the panel today, from across the world in looking at using the postal system and post offices as a way of encouraging and enabling savings for generally modest income people. And we have three panelists that have been already introduced and mentioned that are going to be touching on this. The first, Alex Bertud, as you've heard, is a financial inclusion expert at the Universal Postal Union at the UN agency. He's going to present with a PowerPoint a draft paper that he's completed for Pew. And this paper with some revisions will be published by Pew later in the year. So he's going to spend about 20 minutes looking at that. And then we've got the other two panelists that have also already been introduced. We'll spend about 10 minutes each, in part commenting on the paper, but also extending their remarks. Then we'll move to question time. And as one of the questions we'll have, or at least as one of the contributions on the floor, we'll have Mercer over here who will introduce, who will take a few minutes to just give a little history of the US system. We are fairly tight on time, so I just want both the panelists to understand that and everybody else. I've got my little cards here somewhere that give you 5 minutes and 10 minutes. But I've also brought along some technology here. Which you can see. Cards in the World Cup, of course, played a very important function. I don't have a red card for anybody, but I do have both Brazil and Dutch colors here, and it makes an interesting noise, which very few people can talk over. So I will use that sparingly but firmly to make sure that we keep more or less on time. So let's begin with Alex.
Well, so thank you, everyone. Thank you especially to the Pew for inviting me and for commissioning the paper. Before I start, I just want to tell you a little anecdote. When I arrived yesterday at Dulles, at the airport, the immigration officer asked me, so why are you here in the States? And I said, well, I'm speaking at a conference. He's like, what's this conference about? It's post office and financial services. And he's like, how is that? He's like, well, I explained that it was maybe USPS could be interested in offering financial services. He's like, how in hell would the USPS offer financial services? And I thought the guy was going to lock me up. And in the end, he let me through. But with that in mind, let me give you a little bit of what I've done with for the Pew, but also there's a bit of information from this global panorama we published at the UPU. For those that are not familiar with the Universal Postal Union, it's the UN agency that works with the post. So our members are the governments, not the postal operators. But I'm speaking here, as I said this morning, on my personal capacity, not as a UPU representative. So anyway, I wanted to start with a bit of a global panorama, seeing what the idea is to inform the discussion from what is going on around the world. I wanted to start with this slide because this is what started the whole thing, I think. It's why do we diversify into financial services? Well, there is a clear panorama. This is a pattern at the worldwide level. In blue, you see letter mail. It's going down. 20% reduction over the last 10 years. The trend is actually accelerating recently. And in green, you have financial services. This is a 28% growth. In red, you have parcels. With e-commerce, they're also booming. But what interests us today is the financial services part, right? So with that said, and actually what you see in purple is other services. In many countries, in other services, they put financial services which are not their postal savings. So you could actually be talking almost about 40% of revenues that come from financial services. This is taking into account that you have post offices that do not offer any type of financial services. So that's the importance of financial services. This is not, okay, wait. Yeah. So my other point is that, and this is from the global panorama, you have about 75% of postal operators that offer financial services today. There's 1.6 billion accounts out there. So if people say Post cannot offer financial services, cannot offer accounts, there's 1.6 billion accounts out there. Just China has 475 million people. There's about 1 billion accounts. China's, I don't think if China can do it, I don't know why the U.S. couldn't do it. I mean, China Post is not particularly, or they're great, and I think USPS is great also. So there's about 1 billion people that are banked. Okay, and in the paper in the global panorama, I said there's about 500 million people that could be banked through the post if new countries started postal banking. This is from a study that we did with the World Bank. What we did, we had demand side data, 150,000 people. Gallup did a study, 1,000 people in each country, and they asked people, where do you have an account? And they were very nice to add a question about, do you have an account at a bank and financial institution or at the post? This gives us great data. And what you can see there in blue, these are all developed countries, except for I added China because I thought it was interesting. But all the other ones are developed countries, OECD countries. What you can see is in blue, it's people, the percentage of people that have an account at a bank or other financial institution. In orange, people that have an account at a financial institution and the post. And in red, people that have accounts only at the post. And what you can see is that, well, Japan is an outlier. You have 80% of the population that has an account at the post office. But on the other side, I mean, in general, you're talking about 10 to 20% of the population that has an account at the post. This is, we have what, 20 countries here? It's not a one-shot. It's not like whoa, there's this exception out there. No, it's really common in terms of the developed world. And if we went to the developing world, we also have a similar pattern. Just an example, Italy has, I was talking about this morning, it has 16% of the population that only has an account at the post office. And that's financial inclusion. In the south of Italy, where that is less developed than the North, the Post is doing the financial inclusion job. They're getting people into the financial system. Another slide, this is on remittances. This is the basic, you heard this morning that this is kind of the basic service offering money orders, but actually most post offices today are offering electronic money orders. Paper money orders, that's out, that's uncompetitive, but this is on the electronic side. What you see is Sub-Saharan Africa, you have 80% of posts that are offering postal money, this is electronic money orders. South Asia, 100%. We're talking about in all the regions, posts are offering money orders, electronic money orders, either domestic or international. Let's look at government payments. Some people were talking this morning about government benefits, etc. These in dark orange are the posts that are offering government payments to their to people in their countries. So what you can see is Western Europe, if we only look at industrialized country because we want to keep at a comparison level, Western Europe, you have Germany, France, UK, Italy, etc. You don't have Japan because they didn't respond to that survey, but Japan would be highlighted also. But it's pretty common. It's a mainstay, I would say, of postal operators offering government benefits. But let's look at insurance. This is offering insurance in partnership. You can see that it's not a crazy idea. This is half of the world's already doing it. And if you put it in population terms, you have India and China, so that's already half the world. So you have about maybe 3/4 of the world that can have access to insurance through partnerships. Savings. Look at that. And what you can see actually in most of these things is that in the whole American continent, being North and Central and South, except from Brazil, most of the postal operators do not have financial services. They followed the U.S. Model after the 60s, and they only focused on physical services. So that to say that it's not an exception, I mean, offering financial services, Senator Warren was saying it earlier, is not a new thing. Everyone has been doing it since 1861. The UK started it for 150 years. We have countries that have uninterrupted offering of postal financial services for 150 years. So it's not really a new business model for the post, and it's not a new diversification for many of them. But we'll see with the business models. One thing that I think it's important, because we talk about postal banking, and we see postal banking as, I hear a lot of postal banking, there's, at least from our point of view, we have to separate things. A postal bank, per se, is a postal operator that has got a banking license. So it has the fully regulated, it's regulated by the Fed or the central bank in another country. That is a postal bank. Then you have postal savings banks, which are unlicensed. This is like the one that was created in the UK in 1861. And then you have partnerships that are called sometimes, and you will see, I will talk about it, that are called postal banks, but are not postal banks. So there's different levels. We'll talk about the models. This is direct postal financial inclusion. So it's a post, let's say France, or can talk about Japan. This is where you have, or other countries, you have about 6 to 7 full-fledged postal banks in the world. The unbanked are offered service, and the other are offered service directly by the post. So the post offers its own savings, its own loans, its own insurance, and that brings them into the banking system. Then you have indirect postal financial inclusion. So this is where the post acts as a front for other providers. What you see there, a bank partner, a credit union, as was mentioned this morning, an insurance partner. MNO is a mobile network operator for mobile financial services. This is very common. Why? Because it's a lot easier to start with a partnership with someone that already has the expertise, that knows how to offer the service, than to start the whole service on your own. There's only New Zealand that started from scratch a postal bank. It works. But you need, one, a lot of guts, and two, a lot of money to start a business like that from scratch. So let's talk about models. We came up with a typology of the different business models for postal financial services. There's the business model 0, which doesn't appear here, is the one that was discussed this morning, where a credit union or a bank says, okay, I need some space. Why don't you rent out some, or you lease some space in your post offices for me to be in there? I didn't include it here because from a postal financial inclusion perspective, okay, it's good, but the post is not involved. These are business models where the post is involved. So you have the cash merchant model. This is you're doing cash in, cash out for any type of provider. For instance, for the government, when you're paying pensions, you're being a cash merchant for the government. Or you're paying, I don't know, Western Union, MoneyGram. That's a cash merchant for them because the only thing you're doing, you're not selling. You're getting money and paying, and well, you can do deposits and withdrawals. Then you have another model. You're an agent in the cash merchant model, right? Then you have the own remittances. That's a model where the postal operator offers its own electronic remittances. Because if it's paper, you don't need a software, you don't need too much investment. But this is electronic remittances. I won't go into detail in this one, but what I'm more interested in is the other three models. So you have the partnership model. This is like in Spain. I will go into more detail into Spain or Brazil. You have a bank or a credit union that says, I need a network. I'm either small or I want to get into these areas where I'm not. And I'm willing to sign a partnership with you. You will offer my services. You as the post, you will offer my services on your network. I will pay you a fee for each or a commission for each of the services you will offer. It's also an agent model. The difference with the cash merchant is that here the post is selling the service of the partner. We'll talk about the UK model. That's a mix of two models. Then you have the unlicensed postal financial services. This is the postal savings bank, as it is, for instance, in Italy, as it was in the UK before. This is the law allows the post to collect deposits on behalf of Treasury. Someone was asking this morning, the US is a bit of a different system because postal savings were going to banks. In other places, it goes directly to buy Treasury bonds. And this is how money is made on postal savings bank. It's on the spread between what you pay to your customers and what you get from Treasury bonds. And this worked very well for governments because they had big deficits and they were looking to finance them through this thing. Japan would be, you saw the Greek crisis. Japan would have been failed 15 years ago if it didn't have the Japan Postal Bank. That is saving, I mean, they have more than 200% of debt to GDP. Greece had 160 and they went almost bankrupt on that. Why? Because your savers, your domestic savers, are willing to take more risk than a foreign debtor, a foreign creditor. Okay, so, but anyway. And then you have the last model, the postal bank. What I put a little arrow about the impact of the different models. Why? Because it seems that if you are just offering as a cash merchant, your impact on financial inclusion is small. If you're offering all the services and you're offering them directly, your impact might be high. However, well, this graph is to show you that the incidence or how many post office offer different types of models. In dark blue, you have the cash merchant model. In light blue, you have the postal bank. So as you can see, it's very limited. And as you go up the business model ladder, you see that it becomes harder. That's why there are less posts that are offering the service. Then I'd like to go into the business model trade-off theory, what I like to call the trade-off theory. This is important because if you look at what I just said, this ladder, you would think, okay, then a post office should look into becoming a postal bank. That should be the ideal model, right? Well, it's not necessarily the case because you have trade-offs. To create a postal bank, and that's what I tried to show here. I don't know if with the pointer. You see, this is impact on financial inclusion, right? Here you have business model 0 is the one where you're leasing your space, right? It's somewhere, so you have very low impact. The ease of implementation is very easy because you just rent out space. You just sign a contract and that's it. Sustainability is low because you're making, how much can you make from leasing some of your post offices? And the investment is also low. But as you move up the ladder, so business model 1 is cash merchant and business model 5 is the postal bank, okay? So what I'm trying to show here is that you can have a lot of impact with a postal bank, but how easy is it to start it? And this goes to Congressman Issa's remarks this morning about how complicated it would be to start a postal bank. Well, it's not easy, and it costs a lot of money. In terms of investment, we're talking about big bucks to start your own postal bank. And then in terms of sustainability, it works very well. You can make a lot of money with a postal bank. But there are trade-offs, and a country should see these trade-offs and say, this is where I want to position myself because I know that I don't have the capacity today. So this is just food for thought as you move on to maybe concrete proposals on what can be done. Then there are the case studies, and this is what the core of the report that was commissioned by the Pew is about. Spain, I was talking about Spain. There they had a postal savings system. They privatized it in the 90s. And then they said, well, now we have this big network. It's underutilized. Let's do a tender and give it to the highest bidder. So that's what they did in 1999. And Deutsche Bank got this thing. So from a market perspective, it works because you're not creating unfair competition. You have a network, you're putting it out to the market, the highest bidder, the one that's willing to pay for it, gets it. No one can say anything from a market perspective. One of the issues is that, for instance, in this case, Deutsche Bank, which is a big bank, especially in the corporate side in Europe, they're not particularly focused on this retail market, small savers. So the usage is very low in Spain. You have 150,000 customers in a country of 50 million, well, 45 million, I think. So usage is not, because the highest bidder might not be the one that it fits perfectly your target market, right? But what's important for me in this thing is it comes from the idea of the post of saying, I have a big network. Someone was mentioning it this morning. You have a big network. You must maintain it because you have the universal service obligation. How do you deal with that? Well, bring in new financial services and bring them through a partnership. So that brings me to the Brazil model, which started in 2001 with one bank. And what they did there is, at first they said, we want to have competition. So we're going to divide the country into 4, and each region will have a different partner, right? So that there's no unfair competition from one or the other. What happened is there was one bank that saw the opportunity. They had 2,500. Look at this. This is on the left side, you see the bank footprint, and this is the post footprint back in 2001. It looks like there's not much difference, but if you look at this part, which is the poorest part of Brazil, the northeast, and look here, everything in the bank is concentrated in São Paulo, which is the richest state. Everything else is empty. Of course, here in the Amazon, you don't see many dots, but these are places that can only be reached by river or plane, and they're like 20 hours boat ride to get to from the nearest airport. So you're talking about a footprint that increased from 2,500 to 6,500 with the post office. Think about it in the States, where Pew was mentioning this morning that you have the post office has 5 times a larger network than the biggest bank. So any bank that partners with the post will multiply at least by 5 its network for a very cheap, in the end. That's what Bradesco thought. Is how much does it cost me to build 4,000 brick and mortar branches? Well, it cost me a lot more than pay. They paid $300 million to have access to the network the first time. Then 10 years later, and that's an interesting thing in Brazil, is there's a renegotiation of contract after 5 years. And after 10 years, they had to go to another bid. So it's pretty fair. The problem is they created 10 million accounts. Someone was talking about the post as a gateway to bring people into the financial services. That's exactly what happened in Brazil. They brought in 10 million people that were outside of the financial service, of the financial system. They banked them, basically. And then they moved on to bank new, and now they have 3 million new customers, right? So it's kind of a roller of, how do you say this? A bulldozer that is just bringing people from outside, from the fringe of the financial system into the financial system. So, but the question is, they only have 2.5% of revenue that comes from financial service. So the main issue with the partnership model is it doesn't bring the money to the table. The problem is it's on a fee basis, and you can only make so much money from the fee basis. So let me just, because I'm limited on time, get very excited about these things. But in the UK, the UK is a model where you have multiple partnerships. So on the cash merchant, remember I was telling you about different models. In the cash merchant, you can deposit into 16 banks, and you can make withdrawals from 22 banks. So they have partnerships with pretty much everyone. Australia Post does the same. The difference is that in the UK, on top of that, you have a special relationship with one bank, which is Bank of Ireland. And Bank of Ireland offers they call it personal financial services. So for instance, mortgages, now they have current accounts, but they also have savings. And so these services are on an exclusive basis with one, but the transactional service are in a multiple partnership. Think about it. This is a good model in the sense that you're opening the network to everyone, but you have a special relationship with one, who is the one that will give you more money because you're giving them a special treatment, right? And to do this, they created a joint venture. But you could bid. There could be a tender for this. Just in terms of revenues, look at this, 477 million in revenues at the post office. If you look at Italy, that is offering the service directly, the Banco Posta is making $467 million in profit. One is revenue, the other is profit. You can see for yourself the difference. In terms of revenue, 72% of revenues in Italy come from financial services. It's almost a bank that has a logistics business on the side. And if you look, so we were talking about this for Japan. Japan is 90%. And it's an insurance business. In Japan, it's an insurance business and a banking business that has a logistics on the side. And just to finish, and sorry, Stuart, I'm finishing with this one. France, that's a model, that's a full-fledged model. They have a postal bank license. They can offer all the services. They even have an asset management bank. And they're making $788 million in profits. What I like about the model, and there's two things. One is the step-by-step approach. Although they had a license to offer the services directly, they said, we're not good at offering loans. So they were very realistic about this. And they said, we have the license, but we're going to go on a joint venture with someone that knows. So they went with a bank. And just to finish, the banking accessibility law, someone was talking about a subsidy. In France, there's a subsidy because this postal bank has a specific mandate from the government to bank any single person that shows up. It doesn't matter if they in bankruptcy, if they don't have money, every single citizen that comes has to be opened a bank account because the banks are not opening the accounts for them. And so the conclusions is just that, well, postal operators have the right tools to respond to three main challenges. You have accessibility, they have the largest network, affordability, the cheapest provider, eligibility, they open the accounts to everyone, which is a big point. And there's no one-size-fits-all model. And just the step-by-step approach for me, that's key. Don't just jump into a postal bank from scratch. Start offering partnerships, services in partnership. And this thing, politics, and everywhere. With postal banks, there are politics involved. Decisions are not necessarily always made on a commercial basis. Then many times they're made on a political basis also. So thank you, and sorry for overcoming my time.
Oh, I'm sorry we had to be so tight on the time. The world is a big place. There's a lot going on, and it's a bit hard to get into 20 minutes. Michelle.
Oh, yeah, I need this one. I do, actually. Okay, thank you very much to Susan Weinstock and the Pew team for inviting me here today. Alex Bernhardt's paper is really an exceptional contribution to our discussion today. And I really know of no other report that really covers and analyzes so many of the systems of postal banking in the world today. And above all, after hearing the congressman this morning, I think his report is really a compelling answer to the many critics who insist that our post office could never handle money or financial services. And after reading his report, one must ask a fairly simple question. How could something be impossible that exists and thrives in much of the rest of the world? So I myself come at this from a somewhat different perspective. I'm a historian. I recently published a book that's basically a history of institutions that promoted saving around the world over a 200-year period, from 1800 to the present. And in this book, postal savings plays clearly the starring role. And so I approach the issue today by considering where we've been, where we are now, and which models might be appropriate. And I agree fully with Alexandra's analysis that we really do need a step-by-step approach. We don't necessarily need to jump straight to full-service postal banking, which he just described, but we have to begin with basic financial services, and certainly this is the gist of the Inspector General's report as well. And in many respects, I agree with what's in Alexandra's paper, but I don't think he presented it today, but the U.S. today is much where Europe and Japan were more than a century ago in terms of financial inclusion. We have today still vast pockets of the population, as we've heard, unable to access basic banking services. Whereas in European nations and in Japan, from the late 1800s, a long time ago, postal saving did more than any other sort of financial institution to promote financial inclusion. And I'm just going to show a very small number of tables here, but by 1900, if you looked at the amount of accounts, savings accounts in either postal savings banks or these not-for-profit savings banks in the world in 1910, you would find that most of the developed world at the time had rather high rates of financial inclusion. In other words, accounts per population, whereas the United States, if you looked at, they didn't quite, this is right before postal savings was adopted, but if you looked at the savings banks, only 10% of the population at most had an account in a savings bank. And then if you want to cheat a little bit and you want to say, well, let's throw in all the commercial banks and all the savings accounts in America, it's still only 16% compared to these other countries that didn't even count their commercial banks, which had savings banks and postal savings banks. So the U.S. was way underbanked in 1910, and in a sense, they still are today. Moreover, there were a lot of initial fears when the British first adopted the Post Office Savings Bank in 1861. There were fears that this was going to be heavily subsidized. This was going to be a big drain on the British National Treasury, similar fears in Japan and in France. And what was interesting was that within a few years, all of these postal savings banks became financially self-sustaining because of economies of scale, because of millions and millions of depositors. In other words, you didn't have to worry about the transaction cost of any one account because it was a gigantic pool of saving that it had working class people, but also middle class people, sometimes even rather affluent people. So it paid for itself in all of these places, and often by a lot. And as we've just heard in the recent paper, in the last few years, several of these postal savings banks have been reconstituted as full-service postal banks. Most of them, again, quite profitable. And Alexandra mentioned Japan. I think with a little disagreement on figures. I heard two different figures, but I think in his paper he said 82% of Japan Post's revenues come from its postal financial services. I don't know if it's 82 or 90, but anyway, it's a lot. And he also mentioned Italy, and there are several other cases like that. Now, these full-service banks may well be our future, but they build obviously on a century of trust and familiarity which we lack. And needless to say, the U.S. has been an outlier. The U.S. did have a postal savings system. We've heard that several times this morning. But we have to look at this postal savings system, I think, rather carefully. First of all, it was not enacted for a long time. After some 30 to 40 years of debate. It was first introduced in the Congress in the 1870s. Doesn't get enacted until 1910. So it's 30 to 40 years after most of the other major systems. It was strongly opposed in this 30 or 40 year period by the commercial banking sector. The final version that was passed in 1910 was so riven with compromises with the banking interest that it probably was the weakest postal savings system in the world. Alexandra talked about, I'm not sure, no, you didn't talk about it. It paid only 2% on savings deposits, but that's at a time when the banks paid 3 to 4%. But in fact, the real rate was near 1% because of various accounting things. You couldn't get interest on the first year or fraction of the first year. So it was estimated effectively at 1% rate when the banks were paying a lot. In 1916, it was further an ordinance within the postal savings system, but pressed by the banks, ruled out fourth-class post offices. In other words, small rural post offices from offering postal savings. So in the end, only about 7,000, 8,000 postal savings branches in America for this entire period. That was equal to France, a country with about a quarter of the population at the time, and it was half the amount in Britain, again, a much smaller country compared to the U.S. So it was inaccessible in many places in the rural United States, which was supposed to be the reason that it was created. And finally, for most of the life of the system, you couldn't deposit or withdraw at another post office, which again was the chief selling point of the system everywhere else. So as one expert observed in 1910, postal savings is widely known as a bank, quote, for the provident, ignorant, timid foreigner, in which, quote, no intelligent American would deposit under present restrictions. Well, at its peak in 1947, another table here, the U.S. Postal Savings System had only 4 million depositors. That was its peak. You can see in 1930 it had about 460,000. This is far fewer than France, Britain, Japan, Italy 40 years earlier. Okay, so the above figures are the in 1904 to 6. You can see the U.S. even at its peak was rather pathetic in terms of its reach. In other words, in 1966, postal savings was abolished by Congress, and it actually went out much like the Brazilian soccer team. Okay, postal savings. Yeah, I know. Brazilian Postal Bureau savings is doing much better. Yes, right. Okay. Yeah. Okay. So. In other words, the U.S. postal savings system is not a particularly good precedent, more of a cautionary tale. If you build it so that it's even less attractive than the existing services, they will not come. That's one lesson. Now, a first step should be to offer basic financial services that the market's not providing or not providing at an affordable cost, some sort of savings, some sort of bill payment, online purchases, check cashing. This has been discussed, and I basically agree with the Inspector General's report. There's little doubt from surveys here and experience elsewhere in much of the rest of the world that lower income, rural, and young people are going to flock to this system, and it will do more, I would predict, than any other current initiative to advance financial inclusion on a nationwide basis. Now, above all, the introduction of postal financial services, I believe, will lead to a badly needed discussion of financial inclusion in this country. History shows that the creation of postal savings systems has stimulated banks to compete for the small customer whom they'd previously dismissed as unprofitable. This happened even in the United States. When postal savings, even this weak system, was adopted in 1910, suddenly the commercial banks, which said they could never make a profit on the small saver, all of a sudden started offering savings accounts on a widespread basis. And in the end, it was actually the banks that probably did more for financial inclusion, but because of the prod of the postal savings. In New Zealand recently, we heard about this new postal bank. The Kiwi Bank was set up in the last 10 or 15 years through the post offices, and it too has basically forced a competition with the banks, and the banks suddenly have lowered the fees, which they said they could never lower before. And in France, which is in a sense my favorite story, the post office and savings banks had long offered something called the Livret A, the A passbook account. been offered for almost 200 years through the savings banks and then the post offices. It's a phenomenal account for financial inclusion because it's a no-fee, tiny minimum balance, tax-exempt on the interest. It's capped at a certain amount. You can see the amount now is actually quite large, almost $31,000. Government sets the interest rate. It's fairly low now, but it was much before. What's interesting, in 2009, the banks complained, they'd been long complaining, this is unfair competition from the livret A, but rather than destroy the post office and the savings banks, in a sense, the commercial banks joined them. They pressed the French government, and the French government gave them, with subsidies, the same livret A account. And so it's actually been a huge boon to financial inclusion. Well, finally, will the banks try and stop the creation of postal financial services in the United States? Well, here I can speak as a tenured professor. Of course they will. They always have, ever since the 1870s. When Googling for some articles on postal savings, I came across this. I was looking for 2013, but it was 1909. It was the American Bankers Association say postal savings will hurt people, okay? And they go on with that. Yet, the prospect of even modest postal banking will require the banks to take a stand, either one, that they have no interest in offering basic financial products at an affordable price and thus leave this vast market to the post office, or two, that they're prepared to compete for the small customer. Either way, I think we would finally see in this country a firm commitment to financial inclusion, something that elsewhere has been growing for more than a century, and if this happens, it'll be a tremendous benefit to us as a society. Thank you.
Thanks very much, Al. Yeah, it's been impressed upon me as the last speaker that I have to be very quick. Let me first thank Susan very much for giving me a chance to speak. I would like to particularly commend Alex for a very nice paper on postal finances. And I would like to tout Professor Guerin's book, which he was too modest to hold up, but this is it. Beyond Our Means is a very interesting history of government measures to either encourage or discourage thrift on a cross-cultural basis and a historical basis. I bought the book thinking I would just dip into it to see what my fellow panelists had to say, and I wound up reading the thing almost from cover to cover. I won't say it's a page turner, but it's pretty close. It's pretty close, and I really do recommend it to you. Okay, now my perspective on this is a bit different from the other panelists in that I have been involved for the last several years in working on postal reform laws in the United States and in other countries in either writing them or evaluating or imagining how they could improve, particularly in connection with the European Commission. And my takeaway, my concern in terms of the lessons from foreign countries and postal financial services is to what extent do the experience of other countries suggest that postal financial services could be or will be or might be an ingredient in modernizing the U.S. Postal Service and making it more financially viable. Let me begin with a chart from Accenture. This is a very well-known chart in postal circles. Each year, Accenture does a survey of the major post offices of the world, about the top 25 or so. And they try to identify the ingredients, the key ingredients for the high performers, as Accenture says. Accenture clearly believes that divestiture, or that the expansion into other businesses is absolutely necessary. Diversification, sorry, to the success of a post office. And so the major post offices are here lined up from left to right in an order of increasing diversification. The blue represents the revenue, the percentage of revenue from the basic document carriage business. And then the other colors represent revenues, percentage of revenues from other sectors. The purple is the financial services. As you can see from this chart, many post offices are diversifying to a very extraordinary degree, but there aren't too many post offices that are receiving a lot of their income from financial services. The major post offices that are involved in financial services are these six. Now, I'm looking here at the post offices that, let's say, are most like the U.S. Postal Service, most like the United States. Italy, New Zealand, Switzerland, and France are heavily involved in postal services. On the other hand, among post offices like, or countries like the United States, and in some respects among the post offices that most would consider the best of the best. So this would include Germany, Netherlands, Australia, and the Scandinavian post offices. In general, those countries have not been involved in financial services, and their attitude is that financial services do not fit in very well with their program of modernization. And as Accenture notes, FedEx and UPS are certainly not trying to get into financial services. Accenture's diagnosis of the situation is that the keys to the high performance post offices are improving the core business, achieving an excellent core business, which is to say delivery services, somehow coping with the transition to digital business, operating with a very strong commercial focus, and particularly increasing the capabilities of the parcel network. It is notable that Accenture does not focus on financial services as one of the keys to the future. So I would say that first comment is this, that among the post offices like us, there are post offices that are involved in financial services in a major way to improve their bottom line, but this is essentially a minority strategy among the most advanced countries. The second point I would make is that if you look at what's happened in the countries most like us, the Western democracies, financial success in the financial services business has been follows rather than precedes major postal reform, fundamental postal reform, and by this I mean repealing the monopoly, transforming the post office into a corporatized organization or even a privatized organization, and really giving it a strong commercial focus. All of the 6 post offices that I've noted here have lost the monopoly, except for Switzerland, which is certainly going to repeal the monopoly soon. They're all corporatized, a couple are privatized, and so forth. So I think that you at least insofar as financial services offer a path to profits, I think you need to think in terms first of making some of these very difficult decisions about how you modernize the post office so it becomes a commercially able operation. The third and last point is simply this. Most advanced countries that have gone through the debate of fundamental post reform have come to accept, however unwillingly, that public services, if they're provided by the post, need to be compensated with public finances in some way, shape, or form. As Alex pointed out in his paper, the French post office, which is in some respects the most serious bank-like post office, in France, as part of not postal reform, but as part of a problem of modernizing the economy, has obliged La Poste to provide universal financial services, but it has also adopted a compensation program to compensate La Poste for the net costs. So, but the bottom line for me is this, and this is, I admit, it's somewhat sardonic cartoon here, but the U.S. Postal Service faces very fundamental problems in terms of how to adapt to the new economy. The Postal Financial Services is not the main problem. All right, this is not to say that a commercialized post office, a truly capable post office, would not choose to go into financial services to some extent. They may, and I don't think that can be ruled out a priori. It may also be true, as Shell has said, that the U.S. Postal Service is an appropriate part of a necessary government program to improve savings, improving our overall fiscal inclusion. That may be true as well, but then I think you have to face the fact that we need to compensate the post office for operating what in essence is another public service obligation. Thank you.
Thank you very much indeed, Jim, and thank you to all the panelists for being succinct on what is a very wide topic. And so it gives us some good time for question and discussion. Of course, there's been several references by the panelists to some comparisons with the U.S. History of postal services. So I thought we'd begin, or Pew's asked to begin by asking Professor Mercer Baradaran from the University of Georgia, who's written on the history of the U.S. system, to just take 5 minutes to give a very quick overview of the history of the U.S. System, and then we'll open up to the discussion.
Thank you. Okay, I'll be very quick, 5 minutes. So the first proposal to open postal banks in the United States came in 1871 from President Grant's Postmaster General, who modeled it after the Great Britain system started in 1861. President Grant himself endorsed postal banking in his inaugural address and noted its benefits to small wage earners. Bankers obviously opposed it immediately because the proposal would have put banks in the postal banks in direct competition with banks by paying 4% for deposits. But the most objectionable, even obscene to some, part of the proposal was that all the deposits would go directly to Treasury. Fear of centralized banking power were salient during the time, and localism in banking was as sacred as the Constitution. There were other objections that private markets, or in other words, savings banks, were dealing with it. We heard that from Congressman Issa today. Let the private markets handle it. The private markets, though, at the time were concentrated. 98% of savings banks were in 5 northeastern states and in California, so they were not actually handling it. Once the idea was first proposed, every Postmaster General pushed the issue for 40 years, with the exception of the 2 during the Cleveland administration, who was the only Democrat to hold office during that time. There were also hundreds of bills in Congress before anything happened, and let's hope history doesn't repeat itself there. As is often the case with banking reform, a crisis was needed to shake things up, and the crisis that would pave the way for postal banking was the Panic of 1907. Teddy Roosevelt actually endorsed postal banking right away in 1907, and in the 1908 presidential election, banking reform became the major issue. So the Republican William Taft backed the more conservative approach, postal banking. He thought that FDIC insurance was the demoralization of conservative banking. And the Democrat, William Jennings Bryan, endorsed federal deposit insurance. The Democrats made clear that they would not support any postal banking unless the deposits would remain local and not in Treasury. Taft, of course, was the clear winner of that election, and his administration would initiate postal banking. And Taft saw postal banking as a way of helping credit-starved regions like the South and the West, but also as a way to fix the chronic instability in banking at the time. So in other words, he wanted postal banking to do essentially what FDIC insurance does and what central banking does now. These local deposits would go to help ailing banks in a liquidity crisis. Taft's clear support of postal banking and his electoral mandate still wasn't enough to overcome bank and Democratic opposition. But what got postal banking through Congress, and as Sheldon alluded, were compromises, right? The Postmaster General report finally paid homage to localism and put private bankers at ease. The Postal Savings Bill, as passed, mandated that somewhere between 65 to 95% of the postal deposits stayed in the community of origin, and the local funds would be used to infuse liquidity into banks in times of trouble. Again, as Sheldon mentioned, the interest on the accounts was capped at 2.5% by statute in order to not lure customers away from banks. The postmaster at the time was explicit about these limits. He said they were to be taken as, quote, evidence of good faith on the part of the government that it has no desire to enter into competition with existing financial institutions, particularly as the banks in the nearest localities are to be used as depositories and not the United States Treasury. The postmasters and supporting congressmen also called postal banks, quote unquote, the poor man's banks, to set bankers at ease. As such, the accounts were also capped at $100 per month in deposits and a total of $500, and that was raised to $2,500 in 1918. So the bill eventually passed in 1911, and it was called the United States Postal Savings System. By 1913, just 2 years later, they'd received 32 million in deposits. As the New York Times reports in 1913, all of which came in from stocking banks. And the New York Times reports that there were no withdrawals from banks. The immediate success was not unexpected, but the customer base surprised everyone. Theodore Weed, one of the administrators of the program, said in 1913, quote, "The postal savings system was extremely popular everywhere except where they expected it would be popular." It was not, as it turned out, Southerners and Westerners that needed the banks as it was initially thought, although they did eventually come around. It was the recent immigrants in urban areas that immediately took to these banks. And this is why, from congressional testimony in 1913, it says, "Hundreds of thousands of our newly made citizens distrust banks and will not patronize them. They have absolute confidence in the government and know what postal savings banks are." They knew what it was because it was already happening internationally. The post office also offered information to customers in 24 languages and would pass out leaflets at the ports of entry into the United States. In fact, the postal banks at those ports were the highest earners. They were the highest depositors. So by 1915, immigrants owned over 70% of the postal bank's deposits, even though they were less than 15% of the population. So the deposits in postal banks remained stable in the 1920s, but in the 1930s, the savings banks swelled with an influx of deposits running away from banks. Remember, this is the Great Depression. There is no deposit insurance. So starting in the 1930s, deposits into postal banks began to double each year for 3 years. And by 1934, postal banks had $1.2 billion in assets, and it was about 10% of the entire commercial banking system.
Marissa, can you kind of wrap up?
Okay. And this trend might have continued if President Roosevelt didn't have broader banking reform in mind. But Roosevelt chose FDIC insurance over postal banking as a way of stabilizing banking. But this wasn't the end of postal banking. In fact, the system hadn't reached its peak. Roosevelt used the banks in 1935 to pay off the budget deficit after the Great Depression. And in 1941, the postal banks were used to fund the war. Defense savings stamps were sold across the country. And by the end of the war, the government had raised $8 billion in war funding from the post office alone. I can't go through the rest of this, but I did want to talk about, I do research on credit unions and savings and loans, and the postal banking was actually the most successful effort at financial inclusion. It wasn't nearly as successful as it could have been, but it was its central aim. Carter Keene said in 1913, "It is not a money-making adjunct to the post office department, nor was it intended as such. Its aim is infinitely higher and more important. Its mission is to encourage thrift and economy among all classes of citizens. It stands for good citizenship. It places savings facilities at the very door of those living in remote sections, and it also affords opportunity for safeguarding the savings of thousands who have absolute confidence on the government and will trust no other institution."
Thank you very much. Sorry to rush you. Okay, we have about 15 minutes for comments and questions, particularly questions, and we can have some interaction on those. So who would like to kick off? Over here, and then we'll gradually go. Yeah, that's fine. And then.
Joe Valenti, Center for American Progress. A couple of questions. This was really fascinating. So glad to hear it. One is, what role do you think demographics has played in the success or failure of postal banking, considering that we had 30, 40 years of fairly harsh immigration laws in the U.S. and only liberalized our immigration laws again in 1965, just as the postal banking system was on its way out? And secondly, how do you think the European Parliament's recent decision in April to make bank accounts a universal right for all Europeans plays into the future of postal banking in Europe?
Well, I'll take the second one first. I mean, it really is interesting in comparison to our country that starting with France and now, as you said, moving to the EU itself, this idea of a bank account as a right. And so you see this all over Europe now in compliance with this. It's actually a long-standing policy in France, probably from the 1990s, but it even goes back earlier. This idea of financial inclusion as some sort of entitlement. I mean, financial inclusion beyond the confines of this room, nobody in America even knows what it means. Whereas in Europe, the concept of inclusion is there. Now, the demographics, the immigrants, Marissa may have some views on this too, but The reason why it was such an immigrants' bank here is, well, at least I argued, because it was seen as such a lousy bank for everybody else. They were familiar with it, so they were willing to take this, 1% thing because it was secure, guaranteed by the government, and it was familiar. But elsewhere in the world, you didn't need immigrants for these postal banks to take off, and that would be my response.
Yeah, on the second question, I agree with Sheldon. And it started with the post. This whole accessibility, the fact that it's in the EU, it's because first the post in France got this, then all the banks, and then the EU. So it's the post that was the trend center. And just on the demographics, I agree with the fact that it is the immigrants. And one thing that I really like about the postal savings system in the U.S. back then is that they had trained tellers that would speak Italian, that would speak Polish, that would speak all the languages of the immigrants at the time. This was something that the banks did not do. And immigrants shied away from the financial system, the U.S. financial system, because of the same reason immigrants in the States today shy away from it. It's as someone said this morning, it's this big marble building that I'm afraid walking into. So as the years went by, and with the 1920s quotas, yes, these guys, by the 1950s, had been here for 30 years. They knew the U.S. financial system. Yes, they were more willing. At least that's my take on it.
I think you had a question.
Thank you. I'm Amy Brown from the Ford Foundation. So I have a question about financial inclusion and also economic opportunity. It sounds like the biggest successes of postal banking have been around savings, access to savings and savings. But in talking about the U.S. opportunity, it feels like the most obvious starting point that everyone's talking about is more the Walmart transactional model of check cashing and bill pay and debit cards. And so I wonder globally if there are examples of post offices that are mostly in the transactional business, and also what you think about the value of post office banking if it is primarily transactional. And then thirdly, sort of if we think about the savings piece, how you think about that from a profit standpoint, because that seems to me like it would need subsidy.
Would like to.
On the transactional part, actually, what I tried to show, but maybe I wasn't clear, what posts know better how to do is a transactional part. So you have about, when I say 75% of post offices offer transactional services, offer financial services, these 75 offer at least one transactional service. Then you have about 50 post offices that offer savings. So it's about 25%. Actually, what posts know how to do is a transaction. They know how to do bill payments. Almost all of them do bill payments. Almost all of them do international money orders and domestic money orders. And almost all of them do government payments, as I showed. Then the savings is a bit more complicated, and you have less, and usually it's an inheritance from, out of the 51 countries, you have a lot of them, which are either former British colonies or former French colonies, and that inherited that from the colonial period. But and on the savings, whether on the loan, I totally agree with you. You have 50 countries that offer savings, and then you have only about 10 that offer loans. It's really complicated to go into the lending business for a post office. It's not in their DNA, and the ones that have succeeded at it, they had to bring banking experts they had to bring in from the banking sector experts, top managers that would know about the banking business. This completely, one thing is taking in deposits, because then you don't invest it. So, but giving loans, you need to do a risk analysis. You need to do an evaluation, credit scoring, et cetera, et cetera. That's something that the post office don't do.
I mean, it strikes me that's a very important distinction in terms of thinking about the possibility of a system here. I mean, my mother never made car loans when she took savings in, and that made other transactions and paid people's pensions and things like that. But there was never an issue there. And it strikes me that is a kind of a watershed question. Should any system like this, which is based on post office, get into the lending business? If it were to do that, I think it would raise a lot of questions about the post office. Yeah,
let me just emphasize that the poster child, the poster children for postal banking, again, Switzerland, Italy, France, New Zealand, those post offices are banks. They're real banks. They're competing with the commercial banks in commercial loans. They're not simply taking in small deposits. All right, they're in it to make money. They may also be doing a good public service. I don't mean to challenge that, but there are relatively few banks that are really making money at postal banking, and they're doing so by becoming real banks.
Did you want to add that? Just back to the transaction. I mean, it's important to understand one of the reasons why other countries don't worry about check cashing is they don't have checks. This is a really antiquated thing we have, and in that sense, the post offices around the world were far ahead of American banks in terms of offering these various electronic transfers. I remember in the 1970s in Japan, I paid everything through the bank. I mean, this, or the post office. I mean, this is what they did. And, you know, we heard today about Walmart charges $9 for, I think, sending about $900 to $1,000. Well, I mean, I was just in Germany the last half year. I could send everything free everywhere in the Eurozone. So, I mean, they're way ahead of us, and this is a major part of the post office.
One thing on the payments in Switzerland, for instance, you have 70% of all payments are made through the post. It's like the switch for all the other banks. The banks have accounts at the post office, and all the bill payments are done. And just one thing, and this is on Jim's, and it goes to your question, but it's about the compensation that the government gives in France for the fact that they're doing financial inclusion. Yes, it's key. It's about 200 million euros that they get every year. But remember that the post, well, that's about $300 million, and they're making $800 million. So they could live without that subsidy. That's an important point. So it's embedded in the French system, but it could work without. So in the end, the point is that you could have financial inclusion without necessarily losing money. And for me, this is key. How do you do that? By cross-subsidizing from one, you're not only a bank of the poor. That's one thing that, I remember talking with the CEO of the French Postal Bank, and he was saying the problem we had in the 90s is we were becoming the bank of the poor. And it was not a problem per se, but it was a problem for profitability, at least for viability over the long term. So what they said is we need to switch and to have people from all different classes. So you can cross-subsidize from the top quintile, the top 20% could cross-subsidize the 120%. So the idea is to have a mix of different clients, not just the poor, because then, yes, you would need a subsidy. But a whole, and posts are really good at that. We did a paper with the World Bank, I was mentioning it. It's called the Post Office and Financial Inclusion and the Role of the Post Office. And we show that banks, worldwide, posts tend to be better at banking the poor than banks. And we also show that the less educated tend to be more banked at the post than they are at the banks. Why? Because the post offers simpler service. Walmart was saying we can put the prices on a board. Postal products typically are very simple to understand. And so for me, that's a key in terms of financial education. For those that are working on financial education issues, that means that if you're less financially educated, you might be better off at the post because it's easier. It's simple.
Yeah, John Anderson, Canadian Centre for Policy Alternatives. I'm actually doing a study now on rural post offices in Canada and asking them if they have a financial institution near them or in their community. And I'm finding many do not. And the people have to drive 30, 40 miles to get to a bank or a credit union. And I was wondering, and so obviously rural areas of Canada, the United States, are areas, I believe, where postal banking could work. But I was wondering, Alexandre, if generally when you looked at the postal banking in developed countries, was there a breakdown in terms of the demographics of who used the postal banking? You know, what geographic areas and what income areas people came from?
Yeah, well, in that study, we didn't go into the rural versus urban divide, but it's, oh, sorry. Yeah, in that study, we didn't go into the rural versus urban divide, but typically, I would say it's mostly, well, not mostly, but in the rural areas, people tend to be more banked at the post in these developed countries, because in the little villages, for instance, in France or in Italy, has 14,000 post offices. More than one third of the U.S., and it's a very small country geographically. France has 17,000 post offices. The U.K. has 11,800 post offices. These are countries that are like, what, 1/50th of, maybe they're the size of one state, in one U.S. state, and they have this huge amount of post offices. So in these little towns, typically in the UK, you don't have or in France, you don't have a bank. You have a post office. So yes, I would say yes.
I think just to add quickly to that, I think that's a very important point. Think about the United States and the role of the post office in the rural communities. If you start looking at underserved urban communities, however, would that be quite the same, I wonder? And could you make the case, in fact, that if you're looking for an institution that is prevalent in urban communities that are underserved, you might want to look at something like the 7-Eleven rather than the post office in terms of a network that also handles cash and so on and does certain transactions. I wonder what you think about that.
You want to keep in mind that the UK, for example, the Royal Mail operates less than 5% of the post offices. Most of the post offices are in 7-Eleven.
Right. My mother didn't work for the post office. She was, on contract.
Yeah. So you have to.
Yeah. Well, that's why I raised the issue.
Right.
Where there might be other networks.
Well, or Walmart did an interesting presentation this morning.
So the thing is, you were talking about urban areas. In Italy, for instance, out of, I think there's 500,000 Moroccan immigrants in Italy, and you have about 40% that are banked at the post, whereas in the population it's 16%. So you do have, if you will, in the developed countries, most of the unbanked tend to be also recent immigrants, just like it was 100 years ago in the States, and it's still the case today. And these guys, either in France and Italy, are banked mostly through not only, but mostly through the post, because it's a familiar place.
We have time for one last quick question, if there is one.
I'll ask
Okay.
Everybody else does.
All right.
Susan Weinstock with Pew. I wanted to ask about, so in the U.S., the FDIC has found that there's 8% of the households that that are unbanked in our country. So in some of these other countries, depending on the model, what is the rate of being unbanked?
Can I try that? Well, France, the financial inclusion is about 99%. I would think it's about the same in Japan. Nobody in Japan I've encountered has ever known of somebody without a bank account. So it tends to be very high in a lot of the places that have a long history of postal banking. It's not the only thing, and I think one thing we should say that we haven't said is the post office is not going to be the only solution to the problem of financial inclusion. But when you go to other countries in the developed world, you will see at any corner, you'll see the post office, you'll see the savings bank, you'll see the commercial bank, you'll see some sort of old agricultural savings like a Raiffeisen. It's a multi-front project, financial inclusion, and post office I think could be a stimulant, but it's not the only thing.
Good. Well, please join me in thanking the panelists for
Dismissed. Thank you. It was a pleasure to meet you. My son is in there. He's quite mixed up with you. He's fluent in Japanese, and he's married Japanese girl. Soon to come. What's his name?
Yeah.
Chris Campbell.
Okay.
But he's in Jakarta right now. Trying to start an e-commerce site with a lot of difficulty. Yeah.
All right, I want to welcome back Tamara Luzzatto, who's the head of government relations at Pew, so she can introduce our next speaker. Thank you.
Yep, so sorry about that. I'm back. And this time to introduce a cherished friend and a true leader in postal-related issues, not to mention an actual expert, along with everyone else you've heard of, Ruth Goldway. For starters, Ruth is the longest-serving full-time Senate confirmed presidential appointee within our United States government's executive branch. So Guinness World Book, are you listening out there? We need to enter you, Ruth. She was first appointed, and I went through this by knowing her, to the Postal Regulatory Commission by President Clinton in 1998. And then she was reappointed twice by President George W. Bush, and then made chair in 2009 by our current president, Barack Obama. Her professional and I would say civic leadership history before these years with the Postal Commission since 1998 is sort of ridiculously chock full of all kinds of achievements. One example I like to cite is that she's a founding member and co-chair of a mentoring organization called Women in Logistics and Delivery Services, which very much reflects her long lifetime history to fairness for women, equity for women, et cetera. And I've been part of a book group. Just look up Ruth Marcus's column from last year in the Washington Post for over 20 years with Ruth. And through that experience, I can truly attest to her incredible intellect. In fact, when we're on different sides of a book, it's not really very fun. So the troves of readers and followers of Ruth's much activity in which she's written about, spoken about, promoted a whole wide array of issues and particular challenges that she's cared about is out there for all of you to dive into. But I, of course, don't want to steal much of her time. Her roster also of positions and honors would be way too long to actually enumerate. But a favorite of mine is that she was elected council member and mayor of the city of Santa Monica, and that covered her years from 1979 to 83. And as a fellow woman whose childhood was also in New York City, I'd like to point out that she attended Bronx High School Science, which I have to say is in that other borough that's across the river from mine called Manhattan. She did her undergraduate studies at University of Michigan. She earned her master's in English literature at Wayne State University. And finally, and I really do mean finally, Ruth Goldway is a heroine in my own home, and I would think in your homes, and certainly my family that has always been a great devotee of actually writing hand notes and sending cards and using something called snail mail. And that's because Ruth Goldway, as a friend and as a leader, happens also to be the one that came up with the audacious and incredibly successful concept called the Forever Stamp. So every time you buy your Forever stamps and don't have to up by 2 or 3 cents the next time the price of a stamp goes up, you have this woman to thank you. I just told my husband this morning about this, that I thought maybe now we can build that pool because of all the buying of Forever stamps I've done. Thank you, Ruth. Welcome.
Well, what I can tell you is I got the idea for the Forever Stamp by watching what other posts were doing around the world, and there were several posts in Europe who had this idea. So the panel we just had is a useful reminder in spite of Congressman Ice's sort of saying that's the Swedish model and whatever happened in another part of the world doesn't work here. The Forever Stamp worked here. So that's a good beginning for what I want to say. I want to thank Susan. I want to thank the Pew Trust for organizing this conference. I want to thank the U.S. Office of Inspector General of the Postal Service for writing a brilliant paper that was perfectly timed to catch the interest of a growing group of people who see, as Senator Warren said, 2 problems that might, by being put together, be solved. I've been talking about this concept for a long time. Nancy Pincus is in the audience from the Urban Institute. She helped me work on an initial study we did in 2010 that didn't get the same notice that the IG's study did. It probably wasn't as thorough a study either, but it demonstrates the interest that I've had in this issue. I think it makes sense. There's a a valuable resource that we have in the United States Postal Service, that goes to everybody's home 6 days a week, that provides a surety and a visibility and a trust about the United States government, that's good for our democracy, that's good for our civic society. It not only delivers letters, it also helps with elections, it helps at emergencies. It's a valuable institution that I think we need even in a digital age. You want to have that backup. When there's an emergency, as there was with Katrina or there was with the Fukushima tsunami, the only people who could get there to deliver information at the end of the day were postal carriers. So I think whatever we do in planning for the future of the United States, we need to be assured that there is this kind of network. And the network is being challenged by the change in the digital age and by the financial obligations that have been put on it recently. On the other hand, we also have a growing problem with people who are being underserved by banks and who could well use the resources of a financial system that would help them secure their funds, keep track of them, and perhaps transition into a higher income level themselves. And traditionally, banks have worked in post offices around the world, so why not try it here? I think it's a reasonable proposition to pursue, and I'm really grateful that the Pew Trust is putting time and effort and its resources into looking at this and hoping that it will create a basis on which this idea can move forward and grow. But what I wanted to do here today, you know my preferences on this, but what I wanted to do today was give you a fairly objective perspective of what I believe and my staff at the Commission believes is the current law under which the Postal Service operates. Because if we are going to move forward, we have to be clear about what it is they can do and what we as a Commission can do in following the current law that's on the books. So if you don't mind, I'll read this more than speak off the cuff, which is what I usually do. The Postal Regulatory Commission is an independent agency, and it exercises regulatory oversight over the Postal Service. The 2006 PAEA significantly strengthened the Commission's authority, and it was intended to serve as a counterbalance to the flexibility that was granted to the Postal Service in setting postal rates. The Act requires the Commission to develop and maintain for implementing a price cap system and to make the service more transparent and accountable by consulting with the Postal Service on delivery services, standards, and performance measures, by preventing cross-subsidies and other anti-competitive postal practices, by adjudicating complaints, and reviewing any changes in products and services that the Postal Service contemplates. Previous legislation had allowed the Postal Service pretty wide flexibility to offer any kind of service it wished. But under the PAEA, the Postal Service is limited to offering only postal services, and those are defined as the delivery of letters, printed matter, or mailable packages, including acceptance, collection, sorting, transportation, or other functions ancillary thereto. And it was allowed to continue with what were called grandfathered existing non-postal services. So the Commission has the responsibility for deciding whether a new product or service is postal or non-postal. And the PAEA required the PRC to review each non-postal product that the Postal Service was offering at the time that the law was enacted. At that time, the Postal Service was not offering services that were financial. They had stopped their bank, and they had been offering coffee mugs and leather jackets and other kinds of calling cards cards for cell phone usage. But when they came to us, they didn't present any of those items. They did present
some items that they asked us to call postal products, and those were the money order related issues. So the Commission reviewed the non-postal products that the Postal Service asked us to allow them to continue, and we approved virtually all of them and determined that some of these products, while they might have be considered in the financial realm, were in fact legitimately defined as postal products. So there are 3 of those that have been discussed here by other speakers. One is the domestic money order. Another is the international money transfer service, inbound and outbound. Outbound, and then the international money transfer service outbound, which is an electronic transfer of funds. Postal domestic money orders are considered postal services because it's likely that the majority of them are sent through the mail. Money orders may be purchased at any post office or branch or station and are available up to $1,000 for an affordable fee. $125 up to $500 and $1.65 for $500 to $1,000. And they may be cashed at any other post office or deposited or negotiated at any financial institution. And the Postal Service will replace damaged or lost or stolen money orders and has adopted detailed security measures for cashing money orders. The Postal Service also offers international money orders for up to $700 at a fee of $450. And these IMOs can then be mailed using first-class international or express international mail, and they can be cashed at post offices in the destination country. During the Commission's initial review of non-postal services, the Commission found that the Postal Service has an extensive history in providing remittances to customers. It recognized the unique role of the Postal Service in this area and that international money transfer services offered through the postal networks were ancillary to hard copy postal services. It therefore classified international money transfers as a postal service. And the Commission further found that international money transfers serve both as a complement and an extension to money orders, so that uses of modern technology extending and enhancing the service were appropriate. International money transfers on the electronic front are now available through a program called Dinero Seguro, or Secure Mail, and Secure Money, and they're available to 10 Latin American countries. Funds are transferred either to the posts in those countries or to participating banks or other approved agents in Latin America where payees can claim them. The United States Postal Service has the highest volume of international remittances in the world. Over the years, the Postal Service has played a critical social role in the development of immigrant communities here and by offering convenient and efficient ways to transfer funds, supporting the growth of developing countries. It was an interesting discussion about the history of the Postal Service and the role of the postal bank with immigrants in the early part of the 20th century. You can be sure that the Postal Service's importance to immigrants today in terms of transferring money home and finding a secure way to transfer funds within their community is just as important now as it was then. Local postmasters have reported to me that the unbanked often prefer to go to a local post office for money orders rather than to a bank or to a payday loan company because post offices are often more conveniently located, they're familiar, and they're trustworthy. The Postal Service charges affordable fees and provides reliable universal mail service, making it a familiar, non-threatening place for the unbanked to conduct a variety of transactions. I've also heard from some postmasters that they provide some limited check cashing services to their customers as well. Even though the service has not marketed or promoted these financially related products, the Postal Service is actually the leader in the U.S. domestic money order market, with approximately a 70% market share,
and annual sales of $126 million in revenue. Under our law, the Postal Service may have several opportunities to expand its current financially related service products. For example, the Postal Service could explore the following options and stay well within the current law. They could expand domestic and international money orders to include both hard copy and electronic formats. In other words, digitized money, as Walmart was describing earlier. They could expand international money transfer services to more countries in Latin America or in South America or in East Asia or Africa. And they could coordinate those efforts with the Universal Postal Union, which has developed a worldwide international money transferring system through the posts. It would be a very simple and inexpensive way in which they could dramatically expand the international transfers that they now do. And they could simply advertise these programs more aggressively than they do now. They could provide online information and access to money transfer products on USPS.com, something that Darrell Issa might like, and perhaps on a phone app in the future. And they could make more consistent and more prevalent the check cashing functions that are now taking place in some places around the country. It may also be possible under the law for the Postal Service to combine bill payments and the Postal Service's postal authority. Money orders are typically used for bill payments. For instance, the Postal Service might be able to offer a service by which money orders could, at the time of purchase, be addressed for mailing or sent electronically to the particular party to be paid by the money order. In the case of utilities or government agencies receiving frequent money order payments, the Postal Service could propose a designated post office box number or an electronic post office box to address for money order payments. And the Postal Service could partner with federal agencies, such as Social Security or HHS or Labor Department or the Rural Economic Development Programs of the Department of Agriculture, and offer benefits and services from those programs to the unbanked and to people who would not otherwise get those programs through their more ubiquitous network. And I'm suggesting these government partnerships because the Postal Service is specifically authorized under the law to enter into agreements with executive agencies of the federal government and the United States Government Printing Office to furnish property and services. And they don't need to get regulatory approval to do that. Services to the federal government agencies are not considered commercial services and thus are not subject to commission review and could be implemented as soon as the Postal Service reached an agreement with the federal agency on their terms and conditions. Under this authority, the Postal Service currently provides such services as processing passport applications for the State Department and selling migratory bird hunting and conservation stamps for the U.S. Fish and Wildlife Service. It works with Homeland Security on emergency response programs, and it works with the Census Bureau. An effective, reliable presence in every community, the Postal Service could be further relied upon to deliver relief and aid to vulnerable populations. It could be relied on for the unbanked to receive Social Security cards, and they could be delivered and reloaded through local post offices. In the aftermath of a natural disaster, post offices could be the distribution point for FEMA cash cards and Small Business Administration relief aid. The local post office could efficiently verify address and identity and be the location where relief is distributed. The Postal Service is, in its current efforts for legislative reform, asking for clarification so that it might be able to make similar arrangements with state and local governments. So this is a wide area of activity that I think the Postal Service could move into, and I think that there are probably many other supportive constituencies which work with those government agencies that you might connect with so that you could come up with programs that are helpful and move this concept forward. Getting back to the Commission's oversight responsibilities, the Postal Service actually has significant leeway to engage in what are termed experimental products and or market tests. For example, a prepaid card service, both open loop and closed loop, is currently being offered by the Postal Service as a market test through the sale of gift cards. The Postal Service has recently completed its analysis of this market test, and it has filed a request with the Commission for authorization to permanently classify the gift card as a postal service. Now, the Commission will review this request and will determine if the sale of prepaid cards qualifies as a postal service. And I want to underline that the Commission is made up of 5 members, currently 3 sitting members. We have different points of view, and just because I may be the chairman, that doesn't mean I have the votes to prevail on any particular issue. And I take the responsibility of looking at all of these issues objectively and getting all of the information out to everyone very seriously. So the Commission will make a decision on these issues that reflects a Commission-wide perspective, not just my position. The Postal Service could also explore partnerships with financial institutions that may not require regulatory approval or legislation. It has what we like to call public-private partnerships with many companies. For example, as part of its arrangement with FedEx, which carries a lot of the Postal Service's priority mail and first-class mail in its airplanes, FedEx has its own drop boxes placed at post offices. Personally, I would hope that public-private partnerships that are creative could be developed with local nonprofit community organizations or local banks, or perhaps with larger or regional national banks. I think in Europe there are partnerships that seem to work, and that might be something that could move forward rather quickly. Perhaps others in the banking sector might see the extensive network of post offices in the underserved areas as a potential resource. Unfortunately, as I mentioned to Congressman Issa, the Postal Service, at least from my point of view, seems to be working very hard to downsize its network and has not articulated a retail strategy other than to reduce the costs of the overhead of retail. They don't see, as I think other posts in Europe do, the potential upside of maintaining a retail network around the country. And that's an issue that I've been concerned about for many years. But I think if there are some banks that are in fact reducing their footprint, they might see the Postal Service's footprint as an asset that they could use. Certainly smaller community banks could do that. The other potential banking service that were presented today by Dave Williams, the Inspector General, e-commerce and savings accounts and a mobile financial service and credit services, loans. I don't think that at first glance they appear to be something that we could justify at all as postal services under the current law. And they would require either additional statutory authorization or some sort of partnership agreement and arrangement as I've articulated. So Senator Warren may be right, but may not be right in terms of what the Postal Service could do right away. But I think that the notion that this is not a new idea, that this is something that's done and done well by many countries around the world, is something that we should take to heart. We know about Brazil, we know about France, we know about the studies that were just presented to us. India is now looking at a way, with its more conservative government, to come up with a way to provide more financial opportunities by using the posts in India to provide financial services. So it's clear that there's no one model that works for all countries. The United States Postal Service is unique. It's kind of ironic in a country that prides itself on private enterprise, that it is the Postal Service, the one nationally owned monopoly that will not be privatized. That notion was not considered by President Bush. It wasn't considered here by Congressman Issa. It's not something that's considered yet in other countries where they have a much broader tradition of nationally owned enterprises. They're privatizing the posts. You can see we have very different perspectives on what we think the posts should be in our various countries. And I believe that we hold the post to be very much an essential part of our American democracy. And therefore, it's perfectly reasonable for us to think about the uses we can put this postal network to that support our civic society. And if one of those uses is to better integrate people who are otherwise isolated financially from our rich and wonderful country, then I think we should do that. And I hope that those of you who are here today who represent the various interest groups and know a lot more about banking than I do, would be able to come up with some model programs, some other constituencies who might support you, and move forward with ideas that will work. The caution that I pointed out to Senator Warren is the current management of the Postal Service is not very receptive to this idea. And we have to get a beachhead. We have to get a thin end of the wedge somewhere where we can demonstrate that this kind of idea can work, and then build on that, I think, in the future. But I believe that's the way we can move forward. So thank you very much, and if there's time for questions, I'll be happy to have them.
I think in deference to our actual schedule and seeing Mr. Issa's predecessor, former Congressman Davis, waiting, but he knew that he wasn't going to be on until 3, so no. We'll make a little time. But how about 2 questions? I think I saw over there. And please remember to identify yourself.
Hi, I'm Wendy Lewis. I'm with Blackhawk Network. I had 3 brief follow-up questions to your mention of offering prepaid in a test market. Can you tell where the test market is at? Is it just gift card, pre-denominated card? And is there any thought in offering general purpose reloadable?
It's a market test for a prepaid gift card. Is it with Hallmark? With American Greetings? American Express, but isn't it with a card company as well? No, it's just American Express? And it's been offered at several post offices around the country. And they're filing with us reports on the success of that, and includes in it a tracking of how many of the cards actually got mailed, which is one of the key balances that we have to make in terms of deciding if this is a postal product, what the relationship is. But I believe it's both a closed loop and an open loop. Does anyone remember the dollar amounts? You guys in IG? You.
Sorry. There are various denominations. I believe the smallest one is $25, and I don't remember for sure the highest. I think it's at least $150, but I don't remember for sure. Okay. But it's an American Express non-reloadable open loop gift card.
Okay. Their filings should be on the web, and I'll be reading them next week. So you'll get more details about that if that's what you need. Okay. That's your question?
One more?
Any other questions?
Out there?
All right. Thank you all.
Okay. Thanks, Ruth.
Now I'd like to welcome Bob Holste, who is the Senior Director of Government Relations here at Pew, to introduce our next keynoter.
Good afternoon, everybody. As we discuss ways to strengthen the Postal Service in the United States, we thought it would be a good idea if we could hear from somebody who had actual experience with wrestling with just these types of issues. So we are indeed fortunate that Tom Davis accepted our invitation to speak with us today. Tom spent 14 years in Congress, including a long stint as chairman of the Government Reform and Oversight Committee, where he successfully championed the adoption of bipartisan legislation to strengthen the post office. Let me say those words again: bipartisan legislation to strengthen the post office. We know we'll have some very interesting insights on our current situation and prospects for reform. A little bit about Mr. Davis. He is currently the Director of Government Relations at Deloitte & Touche here in Washington. In addition to his service as chairman of the Government Reform Committee, he is widely recognized as a skilled political tactician. It's not surprising then, I suppose, that his colleagues elected him for the first time to a previously appointed job as chairman of the NRCC. In 2002, he made political history in that job when he increased the number of Republican seats in a midterm, the first time that had ever happened with the Republican Party with a sitting president of the same party. So we know he's smart, and I'm not just saying that because he had the good sense to hire me in 2002. Prior to coming to Congress, he was the chief elected official of Fairfax County, Virginia, which is the 11th most populous county and the second largest county budget in the United States. He has a BA from Amherst and a JD from the University of Virginia. Please welcome, and a nice warm Pew welcome, Tom Davis.
Well, Bob, thank you very much. I don't give many speeches on the post office. It's not a high demand area, so I'm really pleased to be here today. But the most important part of my resume you left off, and that is that I left Congress undefeated and unindicted. And I'm just very, very proud of that. Let me just lay out the political landscape for you, because right now it's hard to pass anything. And Postal is more complicated than most bills, and I'm going to discuss why. But Washington right now, I don't need to tell you who live here what a polarized town it is. You got the Republicans and the Democrats, the House and the Senate, the executive and the legislature. Sometimes you got the Republicans and the Republicans. I mean, clashing with each other. Really, and I've been around this place a long time. I've lived in the area for 60 years. Only one thing that brings this town together, however briefly each year, and that's and I'm going to say this politically correct, the Washington football team. In fact, I was out at the opening game this last year, and I was way up in the cheap seats, and I noticed there's an empty seat on the 50-yard line. And it was empty at the end of the first quarter. It was empty at the end of the second quarter. So at halftime, I walked down about 8 tiers to where the seat was. It was still empty. It was next to an elderly woman. I tapped her on the shoulder. I said, "Ma'am, is this seat taken?" She said, "Well, as a matter of fact, it's not." I said, "Would you mind if I sat here for the second half?" I said, "I can barely see the field with my binoculars up where I am." And she said, "Well, please." She said, "Be my guest." She said, "I could use the company." I said, "I can't believe there's an empty seat here on the 50-yard line." I said, "These seats are scalping for hundreds of dollars out front." And she said, "Well, that was my husband's seat." She said, "You know, we'd been to 30 straight Redskin openers together." She said, "But he died." I said, "But I know he would have wanted me to be here today." And I said, "Ma'am, I am so sorry." I said, "But couldn't you have found a friend or a relative that could have used the other ticket?" And she said, "No." She said, "They're all at the funeral." So anyway. Look, what's happened in Washington now is a confluence of several macro factors. You know, we talk about LBJ versus Obama or Clinton. There are macro factors that are affecting what's going on today that I think sometimes we lose sight of, and I'm going to bring this back to postal reform, but just allow me a second to just kind of sketch it out. First of all, we got the phenomenon now. You have what we call the ideological sorting of the parties. So in National Journal's rating now, the most liberal Republican is more conservative than the most conservative Democrat. This has been building for years, but if you look over the last 40 years, parties are ideologically sorted. In fact, voters now are behaving in like a parliamentary manner. It used to be all politics is local. Now all politics is national when you really think about it. And the local roots don't seem to make as much difference anymore. And when members get elected, they come to Washington and they don't behave like the minority party anymore. They behave like the opposition party. There's a huge difference. Minority party, you know, you're collaborative in government. You have a minority share, but you can protect some interests, advance a few things, try to make it a little better or a little less worse than it would have been. The opposition party, you filibuster everything, you say no, you make the other party put the votes on the board. And that has been the behavior now that has evolved over the last decade. It makes things very, very difficult. I mean, Henry Waxman was my ranking member, and we made a pact. We didn't let this affect us. It affected members. But that's very difficult to do because our leadership would beat up on us all the time. They like to go back and throw raw meat back to their troops up there about you're doing this or that. But the ideological sorting, three macro factors are causing this. First of all is what I call, in the House I'll talk about first, and that's the way most of these districts now, about 80% of them, are pre-drawn. We know what party it's going to elect in November. The race for 80% of the members in the House and 60% of the members in the Senate, the only race that counts is their primary election. The November election is nothing more than a constitutional formality for these members. So they cater toward their primary electorate. If your primary voters don't like you, whatever everybody else thinks about you really doesn't matter. And that changes behavior pretty quickly. It makes compromise a lot harder than it might have been before, because if your primary voters don't like him, that's what happened to Eric Cantor. Is when he was up undoing Boehner's deals and he's up in the president's face, he was like this. All of a sudden he starts reopening the government and he starts raising the debt ceiling and working out reform. They didn't like it. It's an angry group, and he was a Southern expert. But we see this repeated across the country in about 80% of these districts. That's caused by three factors. It's why one is residential sorting, the fact that people who like to live with people who think like themselves. There's a whole book on that, The Big Sort, if you want to read it and delve into that, but it's very clear. Secondly is, of course, the gerrymandering that goes on, and Republicans control more seats at the redistricting table in the last cycle than any time since 1920, and they didn't have one man, one vote, so in the old days they'd make the populations unequal. And, of course, the third is the Voting Rights Act. Voting Rights Act, by packing minorities, basically packs Democrats, and it bleaches surrounding districts, and that has also been it's been positive in some ways, it's been very divisive and polarizing in other ways. So these districts are now one-party districts, at least 80% of them. They're the ones who they're the ones who make up the caucus, and they're the ones that elect the leaders who have to respond to that. But there are two other complementing, reinforcing factors that we often lose sight of. One are your media business models today. These are polarizing models. Your cognitive dissonance. You cater to the groups. They tune in. They hear what they want to hear. And it's not just Fox and MSNBC and talk radio. It's the Internet, where most people get their news now, which is frankly a very scary thought. The stuff that comes across the Internet now, the crap to content ratio is so high on this stuff. But people get their news and their facts that way, and it's difficult to argue with them. Not just on the Postal Service, but on just about everything. The example I like to use is I saw President Obama's birth certificate from Kenya on the Internet. It looked pretty real to me. I started to believe it myself until I saw his birth certificate from Indonesia that somebody else sent me on this. And then you start saying, whoa. But that's how people get their news. It makes it harder for people in policy and so, or even members to have a discussion from the same set of facts. At least a generation ago, you agreed on what the facts were. Nowadays, you don't even start with that base in public policy discussions. And then the third factor that has driven this, and this has had a lot to do with obstacles to any kind of realistic postal reform, and that's the money in politics has changed. Two major factors have affected this. One is McCain-Feingold. All McCain-Feingold did is it eliminated this evil soft money and took it away from the political parties. Sounds great. My question at the time was, and I'm proud to say I voted against it, is where do you think this money's going? You think this money's going to somehow disappear? No. What's happened is it's gone from the parties, the two parties, which have been a centering force in American politics for 200 years, out to the wings, which plays in primaries, which parties don't. It's added that cycle. And then the Citizens United case put that on steroids. So you have now politicians, they don't control the message. They don't control, political leaders don't control the money. They don't even have earmarks to pass, although that's a self-imposed problem that they put on themselves. So passing anything now is difficult, even when it ought to look easy to the rest of us. So I have a little sympathy for them when they get up here and talk about it. They're dealing with some factors they for the most part, they didn't create, that have evolved over time. Now let's get to the Postal Service. We all know it's in a meltdown mode at this point. It's been in the making for years. You've had presidents that don't pay any attention to it. I remember when President Bush was there calling Andy Card and then Josh Bolton saying, we got to talk to you. This thing is going down. The business model's running in the ground. And you just couldn't get a response. I remember going with Josh Bolton and interrupted 3 times for other issues. He just couldn't get their attention on the issue. Very difficult. I remember calling Rahm Emanuel when he was chief of staff. Rahm said, Rahm, this is 9% of the economy. This thing's going. You're talking about jobs. You ought to get on top of this thing. You're putting a bail up. Everybody's getting. Maybe this is the time to mix this thing up and make. And they're just afraid to touch it. And so you don't get any real leadership because it's like a tar baby. If you touch it, there are just so many moving parts and people get angry and stuff. So political leaders have been hesitant to address this. My predecessor as chairman of the committee, Dan Burton, who, by the way, I saw my friend Darrell Issa, and he shared his remarks with me before I came, issued his 100th subpoena yesterday. That's a piker compared to Burton. Burton did over 1,000 subpoenas in his time. But Burton tried to get a bill out. He couldn't even get a second to bring the thing up in the committee when he drafted these things. The interest groups were all over this, and he could never get out of committee. When we brought it up, Henry Waxman, I went to Henry, and he said, if you're serious about it, I'll work with you. I said, well, Henry, I'm serious about it. Henry and I had done the steroid hearings and some other things together, so we'd established a relationship where we didn't game each other on every single issue. And so we worked at it. We designed, in theory, a thoroughbred of a bill, and we shared it with the interest groups, and it went from a thoroughbred to a 1-hump camel. And then by the time it got through the process, it was like a 3-hump camel going backwards. But at least we were able to move something through. And I think if the recession hadn't hit in 2008, 2009, it would have been fine. But when mail volume just drops 20% like that, nothing added up at this point. But we've seen a precipitous decline in first-class mail. You've heard it all day. The transitions to email, to digital communications, faxes, and this kind of thing. The demand just isn't there. By the way, you also have an administration that's really into the digital age. So they kind of look at this as a dinosaur, not recognizing that it goes into parcels and a lot of other areas, that this really affects the American economy. Mail volume is down 2 billion pieces this year. Has unfunded liabilities that are high. Not as high, by the way, as other government unfunded liabilities. I want to put this in perspective when you take a look at what they have pre-funded on the postal side versus government large, but they are unfunded liabilities. The Postal Reorganization Act under Nixon was going to make the post office independent. It was going to make it operate, Congress didn't need to be involved. We could still, you didn't confirm postmasters. They were going to be professionals. There used to be long lists, when I was a page up there in the 60s, long lists of Senate confirmations for postmasters. It was a good political patronage organization. When they went to a professional service that they moved to over time, the only thing Congress was left with is you could name post offices. So you had somebody coming back from the war, it was a local hero, you could dedicate a post office, or get a retiring member of Congress, didn't pass any bills but wanted some legacy, you could name a post office after him. I did pass bills, so I never got a post office named after me. I'm not bitter about it, but I thought I'd just mention it if anybody is listening. The post office running huge deficits, and frankly, it's just, we know where it's going if nobody does anything about it. A bailout doesn't solve a flawed business model. You could put an infusion of cash, but when you have a business model that's not sustainable, and it currently is unsustainable, I don't think you'll find anybody that says the current model is working. It's just not going to work. You heard today about several proposals to try to right-size the postal ship, doing away with the health care prepay. That's a long discussion I can do in Q&A and how that got in there in the first place. It was basically all about congressional scoring rules. Secondly, moving to a modified 5-day or modified 6-day delivery, consolidating the whole mail processing network, closing offices, expanded use of centralized delivery, entering new lines of business, and there are a lot of new lines of business. I know what you're focused on here today, and you've heard a lot of discussion about that. I don't think any one of these is a silver bullet. I frankly think it takes, you probably have to do something of everything to make this thing work correctly. And right now, the post office, for the most part, there are some things they can still do, but for the most part, their hands are tied in doing most of these things without some level of congressional approval. And I think I've described where Congress is in trying to get anything passed. It just makes it very, very difficult, despite the fact of the dozen members that know something about the post office and care about it, try to get it moving. They're fighting interest groups everywhere we go. But I think some combination of that works. This is very savable. The good news here is this is a very solvable problem. There is a business model out there that still works. There are volumes of mail. There are some costs in government up there that on health care and the like that are funded that are getting 1% that, given a different model, could yield more. There's a lot. So somebody asked me, would you buy it if you were out there? And they said, yeah, if I didn't have the constraints that the post office currently has on it. Would I buy the post office? Absolutely. So there's still something there, but it's got to be right-sized and it's got to be scoped out with a different business model. Let me explain the difficulty, some of the difficulties. We talked about administrations who tend to be indifferent and risk-averse on addressing this, the fact that Congress is just paralyzed on doing almost anything, the fact that there are few political rewards for tackling this. The post office doesn't have a PAC. Now, I know we all know that, but the post office as an entity doesn't have a political action committee. It really has no political pull at all by itself. But people who are affected by any changes do have PACs, and they do have political pull, and they are not hesitant to exercise that. The employers do, the unions, the letter carriers, the rural letter carriers, the APW, the mail handlers, postmasters, they are all organized. They know who they need to talk to, and they can organize at the drop of a dime. And they have affiliations with the AFL-CIO and other groups that can lead to a pretty good caucus pretty quickly if they feel threatened in any way. You know, post office doesn't have a PAC. Then you have the first-class mailers, the people that are worried about their rates going. They have PACs, so they have lobbyists up there. They're talking every day. They have political clout. You talk about the bulk rate mailers. They have their groups, too. And then you got newspapers. They don't have PACs, but they got other things that politicians pay attention to. You got the competitors. You got the FedExes and the UPSs, very well trained in the workings of Capitol Hill, a lot of employees, a lot of PACs and the like, and their unions that can be affected by any changes. Then you have what I call the potential competitors. You want to get into space that if you try to get into somebody else's business space, the drop of a dime, they can get organized very quickly too. So I think you understand the problem. Even if we were to sketch out, as I talked originally, you get that thoroughbred that you design. How in the world do you get it through Congress? The postal bill in 2006 ended up being passed in a lame duck session, stuffed in a lame duck session after a lot of going back and forth. In the House, we passed it in the House with fewer than 10 dissenting votes. Now, the House bill was only about 70% of the final bill, because by the time the Senate got their way in, the administration weighed in on some of the pay-fors and worried about what it would look like from a scoring position. It was very, very different. But I couldn't even get it to the floor, even with the unanimous vote of the committee, because Tom DeLay, who was the majority leader at the time, didn't think we were doing enough to the unions. He thought we were being too kind to the unions. Well, I said, Tom, you're not going to get a bill through if you go after the unions. I mean, it's just not going to happen. It's going absolutely nowhere. They have friends among Republicans and Democrats. And by the way, the letter carriers are one of the most bipartisan of the unions. So I said, you just have to understand the realities. We finally persuaded him to put it on the floor. It had fewer than 10 votes against it. But it's, for the post office, it's just not a fair fight. So moving a postal bill, as I said before, it's hard. Everybody wants reform, but not if it affects them, and not if it affects their job, not if it affects their business model. And almost any one single group can stop this, because it's a lot easier to stop legislation than it is, obviously, to pass it, which is not always bad, by the way. But in this particular case, I think it is. And meanwhile, the system just continues to pile up deficits. My judgment is, until the system itself, the postmaster, goes and starts making some tough decisions and Congress feels pain for not acting, they're not going to act. That means probably the ability they have right now to do some closures. They have that ability. We gave them enhanced ability in 2006. Members at that point say, oh, wait a minute. As you know, the Senate, I won't get into the specifics of what each bill said, but until members see that the price of not acting is higher than the price of acting, I just think you're unlikely to get anything. That's just the nature of the beast today. Congress acts under duress. They act under crisis. They rarely get ahead of the curve. They usually stay behind it. It's just legislative gridlock. That's the new normal. And let me also add, when you take a look at this, government over the last, since 1980, government has been divided between the parties 80% of the time. And when you take a look at the House of Representatives today, which the Democrats got 1.4 million more votes for the House than the Republicans did, and they've got a 17 seat deficit. They need to pick up 17 seats to pick it up. The House is structured to the Republicans' advantage. That is unlikely to change this November, and it may be unlikely to challenge through the decade, barring some kind of a wave. On the other hand, the Electoral College now is structured to help the Democrats. You've got 18 states plus the District of Columbia that have voted Democratic now 6 straight times for president. 6 times. That's a trend. That's not a coincidence. That's 242 electoral votes out of the 270 you need. So you have a presidential that's kind of balanced toward the Democrat, the House balanced toward the Republicans, the Senate. I mean, you can figure out the Senate. And the Republicans have shown, a propensity to run these exotic candidates in some of these states, which make it probably even less competitive than it needs to be. But divided government is the new norm. And we just have not, as a society, really, and as a Congress, learned to live with that, given the changes in media, the changes in the campaign financing, and the like. So what happened in 2006 is we were able to put together a draft, Henry and I, and the bill was off the table from here to here of Xerox pages, still warm from the Xerox machine, when Henry and I had reached the agreement with all of the interested groups. We called a vote. The members came in to the committee room, walked to their seats. We called their name. They all voted yes. Most of them didn't even read the title page, let alone the bill itself, because it was still, as I said, warm from the Xerox machine. That's how you get a deal, you move quick, because the longer it hangs out there and somebody reads it, you know what happens. And but they did look out in the audience. And there's the UPS guy, the FedEx guy, the letter carriers, the APWU, all of the first class mailers, the bank. They're all like this. And the member said, it's safe, I can vote for it. That's the way it works. It's very frustrating for me as a committee chairman to try to sit down and reason and talk policy on these issues to members on a subject that they were under no duress to do anything, and were feeling no constituent pressure to do anything. That is simply the way it works. And that is the situation we find ourselves in today, with dueling bills, trying to get it out of committee, trying to see if you can get it out, is it worth getting out, because what is the end result from this kind of thing? So here's my solution. I mean, you need a crisis, and the Postmaster General, I think, to some extent can create a bit of a crisis by using that exercise of authority. When you start closing things down, members start saying, wait a minute, what do we do? And we've seen some reaction in the Senate where they were willing to work as those deadlines appear. But ultimately, I think, we should go back to the intent of that 1970 or 72, whatever the Reorganization Act was under Nixon, to allow the Congress should allow the postmaster the general maximum flexibility to retool, to right size and direct the postal system, to transform its business model, make it financially viable, productive, and efficient. This was an agency, after all, which we said was going to operate independently and without further subsidies. But they can't possibly do this in this changed environment today, where communications are moving to digital and electronic. The model just doesn't work. And so somebody's going to have to retool this, and I have every confidence that the leadership of the Postal could sit down, or any one of you could sit in a room, and if you were unconstrained by the legislature, could sit there and figure out how you make this thing work, how you make it profitable again, or at least how you make it break even. There is pain to go around from everybody. We don't know where that lies. But you put down some of the thought leadership. In fact, this happened, Jack Potter did this. He had thought leadership, and he got some of the smartest consulting groups in the world, Boston Consulting Group, McKinsey, Accenture. He didn't have Deloitte, and maybe that's what he was missing. But it was where they put together a plan that made it very, very viable. It would have been a very viable plan. Question is, how do you move that legislatively? And so when you take a look at the environment and the macro trends we see Congress operating in today, probably the smartest thing is to just give the post office maximum flexibility to come in and set this thing, or be faced with some kind of a bailout or emergency measure later on that's probably not going to measure up. In my experience, Congress adds mandates and rules without adding the money, and that has certainly happened here. But if they want to protect jobs and protect the private sector's competitors, they ought to put Congress's money at stake, not the post office's, because the post office doesn't have it and they don't have a means to get it. Users can only pay higher rates to a certain extent before they find other routes to go. Again, there is a viable business model out there. We should let the post office operate as a business. And Congress, I think, they have to act affirmative to allow this to go and then kind of let it go. You're still going to have presidential appointees to the Postal Board. You're still going to have confirmations. You can weigh in occasionally. But the way it has worked over the last couple decades, I think is just, it's been very, very sad to see. So you've had a number of good ideas out here today. But the question is, how do you implement this in the best fashion? So I will stop right. How are we doing on time? I think we're doing okay. I will take a question if anybody's got one burning. I can. Yeah.
But you can't just, raise your hand, shut it up.
Thank you very much. That was very helpful in terms of allowing us to put into the political context the discussion on the post office and financial services. I guess my question would be, if you were still sitting in the chairman's chair, as you sort of evaluated and balanced the idea of financial services at the post office, maybe a little more specifically, how would you do that? How would you weigh it?
Well, first of all, I would give the getting it through is difficult, but I would just give the Postmaster General more flexibility in terms of how you operate the agency. You could allow them to. I think you'd have to in terms of opening, closing. I'll give you a couple examples. They could make pre-bundling mail saves a lot of time, but unions objected to that because that's putting out jobs. And yet it's more cheaper. You can get a discount rate if you do that. It's cheaper to do it other places. But I would allow them the flexibility to make those kind of decisions. In terms of getting into other lines of business, which I think you're going to have some component of that to make this this work, you could make it subject to a veto or something like that. But I think but I think you've got to allow them to come up with that plan and to do it. And it's almost an imperative that they do it that way, I think.
Just a quick follow-up.
Yeah.
We've heard from one of our speakers that, from their point of view, that reform should come first before you talk about expanding and broadening.
Well, I think in a way I'm saying, I know that's what Darrell had, that was kind of his pitch to me yesterday. He didn't want me to come up here and badmouth, and he still decides where my portrait goes in the committee wall. So I'm not going to say. Darrell,
wasn't the chairman, but
okay, well, it was in his talk, but I think, look, what I'm suggesting basically allows that. It just says you go first and you do what you have, and then you can come up with a plan to expand your business models. It would be subject to some kind of checks and balances so that everybody feels that they're going in the right direction. But that only gets you so far, because the business model right now is a very difficult model given the reductions in volumes that we're seeing. But part of a huge part of that problem is just the overhead expenses that you have as well. I remember previously a postmaster, just to get people to retire, the union had come in and suggested maybe a $5,000, and he said, no, $15,000. I want them to retire. We have to get these people off the books, and it worked. You got some reduction that way in an appropriate way, and they're going to continue to face that, I think, given the dilution of volume.
You have a question?
You said you could use a question and answer period.
Could you tell us your name?
I'm sorry, Dan Gorin with the Federal Reserve. You said you could use a question and answer period to talk more about the $5 billion allocation for health benefits.
Yeah.
Can you explain?
Well, Post Office was actually overpaying into this area. They came they came and wanted a credit for that. The difficulty is under congressional scoring rules, if they start getting some of that money back, it scores negatively and you can't get a bill through because it wouldn't be neutral scoring. Do you want a postal bill through? You need to put it into a larger bill where you have additions, like a major tax bill or some kind of omnibus where you can find appropriate offsets that don't come within that. So it grew out of that. It came really from the White House as much as anybody else who was worried about the scoring of this, that if you allowed them to start reducing their payments and the government paying them back, it would score then as the government losing money, because it all scores in a consolidated budget. And that was the genesis for that. It's really numbers. It's not necessarily good policy.
But does that mean, that the post office without that would be viable?
No. It would be, we felt at the time, and I think, I talked to Jack today. I won't want to put him on the record, but I think it would have been fine had we not had the recession in 07, 08, 09, when volume dropped precipitously. I think they could have been on, but with the drops there, they have not come back. I just think it's a dead end. I would retool that, because they do pay more into that than any other federal agency and the like. In fact, if you want to really take a look at the money and what they prepaid in that, they probably have a pretty good credit coming that you could get that you could monetize a little differently.
Okay, on that hopeful note, thank you very much.
Okay, thanks.
Appreciate the time.
Folks, it's time for a 15-minute break, and then we will reconvene for our final panel. So thank you very much. I think we'll get started. Oh, you can leave it there. That's totally fine. All right, folks, we're going to get restarted. We're ready for our last panel. We're now going to talk about the all-important issues of economics, operations, and efficiency of having the post office get into financial services issues. So we're going to, let me introduce Bill Sermons. He's the Director of Research at the Center for Responsible Lending, and I'll have him introduce the panelists, but I want to thank Bill for being here. Thanks.
Thanks, Susan, Travis, for inviting me to be a part of this panel, and thanks to the panelists who are left at the end of the day to tackle, I think, one of the tough questions about Postal Service banking. When I was asked originally to moderate this panel, one of the things I immediately did is said, well, why don't I talk to people who are actually delivering financial services to populations that are considered underbanked. Fortunately, didn't have to go too far because given that CRL is a part of the self-help family of organizations that include credit unions that are serving populations that are considered to be underserved, I did have colleagues to talk to. And when I talked to them, they raised some provocative questions that I think my panelists will be getting to, and I think that were alluded to earlier in the day. The first question out of someone's mouth was, well, how really will they compete with Walmart? You know, if Walmart can provide services that are similar, can afford to lose money on them in order to provide that as a part of the suite of services, how can they compete on price and on quality? Another colleague asked, well, if these really are transactional services, how can they really fill the revenue gap without them being high cost? One went as far as to say, well, you know, can they offer them any cheaper a payday loan product, for example, which has been talked about, any cheaper than a deposit advance product? And we already know a deposit advance product is challenging for consumers to manage. And then another colleague raised the technology question, I think because she was fresh on the heels of having done a systems conversion for a newly acquired credit union. And she said, well, how are they going to handle all the new systems that would be necessary in order for really to make the systems efficient? And will people have a concern about what happened with healthcare.gov? Is it going to be a concern that that's going to be the kind of rollout and not a more effective rollout? So these are some of the questions that were sort of being raised. I think that people who are delivering the services are sort of primed to talk about the challenges, but I think one of the nice things earlier today was hearing about the opportunities and the kind of reach that both the personnel resources and the real estate resources, the sort of reach that the Postal Service has, giving a real opportunity to reach a lot of populations that otherwise just don't have geographic or other kinds of access. So I want to introduce the panelists who will what we'll do here is they'll each give a short presentation. I have a couple of questions I'll ask, and then hopefully the audience can ask some additional questions. And so first on the panel is Michael Scanlon, who is a partner in the Public Policy and Law Group in the Washington, D.C. office of the global firm K&L Gates. His practice concentrates on the financial services, maritime, postal industries, administrative procedure, and litigation. Next up will be Philip Tabita, who is senior staff at the American Postal Workers Union, AFL-CIO, assigned to negotiations and special projects. And Phil has worked on union administration, contract administration, collective bargaining, arbitration, outsourcing, postal policy, and regulatory matters. Next we'll have James Gattuso, who handles regulatory and telecommunications issues for the Heritage Foundation as a senior research fellow in its Rowe Institute for Economic Policy Studies. And from May 1991 to 92, James also served as Associate Director of the President's Council on Competitiveness. This is sort of his second run at Heritage, and when he was a policy analyst, he was responsible for a broad range of additional issues, including telecommunications, transportation, and antitrust policy. And lastly, we'll have Michael Crew, who is the director of the Center for Research in Regulatory Industries at Rutgers University, and is also a distinguished professor there. His principal research interests are regulatory economics, the economics of the Postal Service, peak load pricing, and the theory of monopoly. His current research includes the economics of Postal Service and public utilities economics. And so we'll start off with Michael. Yep.
Thank you, Bill, and thank you to Pew and to Susan for inviting me to participate. I think this is an important discussion on really two very critical issues. One, financial inclusion, and two, the financial viability of the Postal Service. Before I get to my remarks, I just want to say that these are my personal views, not necessarily those of my clients. But I also want to thank the OIG staff for doing the work and putting out the paper. I think it is an important paper, and I think today's discussion has kind of fleshed out a lot of the issues that really need further exploration. That's predominantly what my remarks are going to be about. I think that the OIG paper is one that's part of a series that are all kind of variants of the theme that in the face of what is permanent secular mail volume declines, what is it that the Postal Service can do? What new mission can the Postal Service pursue to ensure its financial viability going forward? Stated another way, what is it that the Postal Service can do given its employee base and its infrastructure? What new mission can it take on? And I think it's important as we think about postal banking in that context that there are other perspectives on that we need to think through and think about in terms of financing and positive and negative externalities. One is, do we still need, in the face of mail volume declines, the same infrastructure and the same workforce going forward? And if so, how do we finance it? And I think one of the things that we've been talking about throughout the day is that the Postal Service is more than just a mail delivery company. Although it is, the U.S. Postal Service is, in fact, a world-class logistics and delivery company, especially in the final mile for both letter mail and parcels, which is an area where there's tremendous growth opportunity in the future. But also the Postal Service plays kind of an important role, and I know the Commission has done some work on this with the Urban Institute and others, in terms of the role it plays as an economic anchor for lots of small and rural communities that otherwise would be underserved. That's one social mission. What we're talking about today, I think, is whether or not the Postal Service should take on another social mission, which is helping to promote affordable access to financial services and financial inclusion. And in terms of whether or not that's a worthy goal, of course it is. That isn't really the question. I think the real question is whether the Postal Service is the right entity to take on that role. And if so, can it make money doing so? And I think that really needs to be addressed if this really is something where it's a win-win, where we can both solve a pressing social issue and help the Postal Service become more profitable. That truly is a win-win solution. If it's not, however, it's something that I think we need to think about. What other financing, what other subsidization do we need if this is an important social goal that we want to address? And more to the point, if it is an important goal we need to address, I think it's incumbent upon policymakers to say, how do we do that in the most efficient way? And I think we need a lot more analysis in terms of whether or not the Postal Service really is the most efficient channel to provide that. The OIG paper, I think, makes a number of points, and we've heard some of them here today, that the Postal Service is really, in the OIG's view, it's an ideal fit for the Postal Service to take on this role, given its infrastructure, given its experience, given the public trust in the Postal Service. And from the OIG's perspective, this is something where potentially there's a significant profit opportunity. I think the white paper talks about this as a $9 billion potential opportunity. And I think when we look at that, additionally, the OIG says this is something that can be done under existing law. And I know that Chairman Goldway spoke about that a bit. Taking those issues in kind of reverse order, in terms of existing law, I think it's incorrect to argue that the Postal Service can get into some of the types of services that are outlined in the white paper, particularly credit services or advanced deposit services, without a change in existing law. A change would be required. The 2006 law, the Postal Accountability Enhancement Act, was explicit that further diversification was prohibited. And so some statutory change would be required. As Chairman Goldway mentioned, there are some other services, in particular money orders and now potentially gift cards, that have either been approved on a permanent or provisional basis as postal services. But those approvals are contingent upon the fact that those services are deemed, correctly or otherwise, to have a close nexus to the mails. And I think that really isn't something that you can make a comparable argument with respect to something like, for example, small loans or other type of credit services. They really are distinguishable products. In terms of the issue of public trust, I think that's something the Postal Service is and should be deservedly proud of. It's been hard-won and earned over many, many years. There's no question that the Ponemon Survey annually consistently ranks the Postal Service at or near the top of federal institutions in terms of the trust people have in their letter carrier and the Postal Service as an institution. I think an important question to look at, however, and perhaps some of the experiences in Foreign Post may be illustrative, is whether that trust as a public service, as a mail delivery company, is portable when they start to get into other non-core businesses and adjacent private markets. And I think there is a real concern on behalf of those postal stakeholders who rely on the system to be an effective communications channel for business and personal transactions and commerce, whether or not a dilution of that trust would have some lasting harm to the Postal Service. And I think those issues need to be further addressed as it gets into things that it doesn't have the traditional competence that it has in physical mail delivery. I think when you talk about the notion of the profit opportunity here, I'm dubious that there really is a $9 billion opportunity here, particularly when we're talking about serving underserved markets. I think one of the areas that the paper really needs to address, or further research really needs to explore in much more detail as policymakers consider whether this is the direction we want to go, is what the real revenue opportunity is here. I think that traditionally there's an understanding that serving underserved markets is difficult in part, and we've heard some discussion about it this morning, because these tend to be consumers that have relatively fewer assets. There are lower margins on the products and services that they're interested in, and they tend to be higher cost. And so I think all of that needs to be factored in as we talk about what the Postal Service cost would be to serve this market. I also think as a separate issue, there's some important issues to address because the Postal Service still enjoys a statutory monopoly on its letter mail business, what those cost allocation rules are if the Postal Service starts offering banking services as a competitive service. There's a requirement under existing law that's an important protection, which says that as the Postal Service competes in non-core areas in competitive products, it has to cover its costs. It can't offer competitive products at a loss. There's some obvious competition policy concerns that raises. I think a more realistic argument, let me just touch on one other point in terms of postal experience. The Postal Savings Bank, I think, is an interesting historical reference, but I think it's hard, or it seems unlikely that a service which was terminated nearly 50 years ago, that there's any real residual institutional competence from that experience, which is not to say the Postal Service couldn't build it up again, but I think we need to contextualize that appropriately in terms of how ready the Postal Service is to step into what really is a new line of business separate and apart from where it really has its expertise and competence. So I think a more realistic argument for why the Postal Service should get into banking services is one that I think Chairman Goldway kind of intimated, which is that the Postal Service has significant fixed costs, both in terms of its labor force and its infrastructure, in part to satisfy its universal service obligations. And I think a more realistic argument is that anything the Postal Service can do to bring in some money to defray those costs benefits the Postal Service to the extent you're going to keep that network in place. But that's a very different proposition than saying this is something where the Postal Service can compete and be profitable in. And I think if you think about offering banking services, the Postal Service offering banking services, as a competitive product, as a profit center, it's hard to view the Postal Service, its assets, as real assets as opposed to liabilities. Two examples. One, the Postal Service employees enjoy significant wage and benefit premiums relative to comparable employees in the private sector. And that's certainly true with respect to the wages and benefits paid to most bank retail employees. That's an issue that really has to be addressed and really isn't really explored in terms of the paper. Last, I think that what we need to think about going forward in terms of as we kind of try to tease this out a little bit further is, again, is this really a profit center? Is this a social mission? If so, I think the answers in terms of how you finance that and how you structure it are really very different conclusions. And I just don't think enough has been done yet to really separate those issues and decide exactly what it is that we're really targeting. With that, I'll take any questions at the end.
Good afternoon. The American Postal Workers Union supports the Postal Service entry into postal banking. There is an unmet need and a market failure. 68 million people are underserved and spending about $89 billion in alternative financial services. Postal Service is well suited to serve this population. The Postal Service has a brick and mortar network. That network is wired for IT. It has a competent workforce. It has a public trust, and it has relationships with the feds and with UPU that will help it enter into financial services. And it's already involved in some financial services, and I wanted to talk for just a moment about money orders. The U.S. Postal Service already provides money orders, both domestic and international, and electronic transfers, and it makes money doing it for reasonable fees. In 2013, the Postal Service issued 102.5 million money orders, and the Federal Reserve cleared 101 million of them, valued at $22 billion, about $220 per money order. It costs the Postal Service just a fraction of a penny over $1 per money order to cover all attributable cost, which left 51.6 cents of you can't really call it profit, but it's contribution to overhead. So they made money, and they make money on money orders. And I would point out that money orders were designed originally for transfer of funds over a distance before we had anything like the internet or electronic fund transfers. And that was one of the core missions of the Postal Service, of promoting commerce and tying the country together through commerce. Today, the money orders were designed basically for the unbanked, because most people were unbanked at the Civil War time when they started money orders. Some of that still exists today in that you, for example, cannot purchase a money order with a check. You can, or with a credit card. You can only purchase it with cash or with a debit card. One thing that indicates that the intent is really to try to service the unbanked with the money orders. Unlike ICE's opinion expressed this morning that a workforce suddenly becomes incompetent and inflexible when they elect to form a union, the postal workforce is competent, flexible, and well-trained. Currently, the retail associates handle a variety of complex transactions. Some of the rates and classifications and the customs regulations are in themselves complex, and they do passports and other things which can become complex. And every year, they take a class and get certified on BSA. That's something that Walmart told you that only their customer service desk will handle, that the regular people can't handle it. Every clerk is trained and certified every year in BSA, and they, unlike the cashiers at Walmart, follow the rules and complete the Form 8105A reports for financial transactions of certain values. And currently they cash checks and money orders. So they do a lot of these transactions already. In the PRC docket, N 2011-1, we took a look at the types of transactions at various postal stations and branches. This was a docket where the Postal Service was proposing to consolidate or close a large number, thousands of postal stations and branches. And we found in the analysis that we did that in neighborhoods, post offices located in neighborhoods with lower income, less home ownership, less auto ownership, that the most numerous transactions at those post offices were money orders. It was above any other kind of sale that the Postal Service did. And one of the things we were arguing in that particular case is that in deciding the value of a post office to a neighborhood and a community, you should look at how they use it. And we found in those areas that had depressed economy, lower incomes, that they were using it to get money orders. So the money orders already served to a certain extent that unbanked population, and it shows that the Postal Service has a connection with that population and that we should be able to expand that. We think that while we think the Postal Service ought to jump in with both feet, we think it is possible to start modestly building upon current offerings that are low risk and require little capital. The reloadable card has the opportunity to be tied to government benefits, tied to bill payments, tied to check cashing, savings, and mobile apps. So it's a good start. ATMs and kiosks are other things that the Postal Service, especially with its high-speed internet access at virtually every post office, could be offering. So I wanted to conclude with a remark from a study done by researchers at the UPU and the World Bank. They concluded a study in 2013 by saying that we find that post offices are relatively more likely than traditional financial institutions to provide accounts to individuals who are most likely to be financially excluded, such as the poor, less educated, and those out of the labor force. So we think the Postal Service should jump into financial services and postal banking.
Let me start by stating the obvious. The Postal Service needs a new line of work. Now, there's no denying mail is a shrinking business. Now, a lot of times this is lost in the debates over the financials. We've had a couple of speakers now talk about the retiree health benefit fiasco. It's a fiasco no matter how you look at it. But even when you don't count that, USPS has $30 billion in losses since 2007. Still stands at about $15 billion. But putting financials aside, the real problem is shrinking mail volume. And that has nothing to do with retiree health benefits, with budgeting, with accounting. It's just pure numbers. Volumes are down about 25% since 2006. First class mail is down about a third since 2000. And the trend shows no sign of stopping. Now, this is something I think we all know, but it's important to put this in context. The Postal Service, without change, may not survive in the long run. This is an existential crisis for the service. Now, it wouldn't be the first. It needs a new business model. And it wouldn't be the first to get a new model based on competition from the internet. Fujifilm is now a chemical company. Southern Pacific's land assets morphed into Sprint. You know, this has been done before. It can be done with the USPS. The question is banking the answer? Is financial services the answer for the Postal Service? And I have to say that even though I would love to see this as clear sailing as some others have, I'm skeptical. Now, Senator Warren says that this is a win-win-win-win situation. I would say that's maybe 2 or 3 more W's than I would put on that. I'd have a few L's in there somewhere. Now, I won't go over every argument that has been presented, but let me just talk about a couple. One we've heard a lot about is the fact that the Postal Service used to do this, that there was, for most of the 20th century, a postal savings plan. But that plan, again, this has been covered during the conference, that plan was extremely limited. It was probably an anachronism by the middle of the century. Once federal deposit insurance came into play, the demand for postal savings accounts shrank considerably. Deposits were never very large. By the time the system was closed, there were only about 400 million on hand in the system. It was not anything that was significant even for 1966. And if I can add, the target audience, target population for the program is largely low-income immigrants, was probably better served by the Bank of Italy, which later became Bank of America under A.P. Giannini. And so I think that it wasn't even and others like them. There were private immigrant banks operating at the time that probably contributed more than the Postal Service to that cause. The second argument is that the Postal Service has branches everywhere, that it has in its assets this vast system of retail post offices. Now, it is vast. 27,000 was the count I came up with. I didn't count them individually, but that's what I found. But banks have well over 90,000 bank branches. Now, we've discussed this over the course of this conference, and I think there's a real question about whether those branches are in the right places. The Pew study indicates that maybe they are not well positioned to help the poor. I think that some other numbers may contradict that. But what surprised me is no one's looked at or discussed whether the unbanked are actually hurt by a lack of convenient branches. And the FDIC in 2012 did a study on this. And they found that of the unbanked, the grand total of 1.4% said lack of bank hours or location were the reason for them being unbanked. 1.4% said bank location or hours. Of that, only about 40% said location was the most important problem. So we have well under 1% of the unbanked saying that location is a problem. So no matter where these bank branches are, no matter where the post offices are, this is not the solution to the unbanked. It's hard to see the Postal Service making money on these services. The arguments seem instead to be aimed at putting under the Postal Service jurisdiction a social obligation, which I think would involve more federal money, or not more, but federal money. It's a bad way to do a cross-subsidy. When you have a cross-subsidy, you need someone to subsidize and someone to provide the funds. If you're subsidizing on both ends, it just doesn't work. So I'm not saying that this is an idea that should be totally rejected, but there are vast reasons for skepticism. And also, I think, as we found today, the definition of what financial services is makes a big difference. If we're talking about ATM machines, it's a no-brainer. I think that would be an almost riskless, if not possibly not very high revenue approach. But if we're talking about full banking, or even banking as far as what is described in the IG report, especially the extension of loans, extension of credit, then I think we're facing significant risk. So a note of caution, of extreme caution, not rejection at this point, but we should move carefully. That's all I have.
You're up.
I'll jump in.
I take this with me.
Oh, it's there. I don't need it. Okay. You can borrow it. Okay.
Can you advance?
All right. So, all right. Well, oops, shakes a bit. The usually this one isn't long enough for me. You set these up for people who were shorter than I. Okay. Okay. Usually I tell a joke when I give a talk, and in class I always tell a joke, much to the dismay of the students. But today I'm going to spare you that, because I've heard one of the best jokes I've heard at any conference, and it was so well told, there's no way that I or even Jim Campbell could top it. So, postal banking. We've gone through the day on postal banking, and by the way, congratulations for surviving so long, and thanks, Susan, for you obviously did a great job putting the program together to keep the many survivors, and thanks to your staff for treating us so well. So, well, in the course of the day, a mixed picture has emerged of postal banking. There was a certain amount of agreement. I think Darrell Isa did concede that there was some sort of social problem here, and it's going to cost money. Whereas Elizabeth Warren seemed to think that, oh no, this is something that would pay for itself and make money. Maybe I'm a little bit closer to Darrell on that one. I think it's a social problem. And banking is very much a mixed picture. The UK situation is a weird situation. The UK divested its banking in the 80s. It used to have a post office bank called a Giro, and it divested that in the 80s. And then when we had the UPU report, we were told that the UK Post Office was providing these services, basically through banks and others, but they were providing these services. And I'm not sure how much we can learn from the UK, because the UK has this rather strange situation. I'm not aware of it anywhere else, but it may exist, that the Royal Mail and the Post Office network are two separate companies. Royal Mail's privatized into the business of letter and parcel delivery primarily, and in the Post Office is in the business of running the postal counters. And many of these are all franchise operations. They're not owned by the Post Office. So I'm not sure what we can learn for postal banking about the UK case. Now, Sweden used to have a postal bank when Sweden reformed and was one of the first countries, if not the first, to eliminate the monopoly. It basically got rid of its postal bank. Germany's bank began in the 90s, but they finally got out of that business in 2012. Now, everyone's mentioned the Italian success story, and it is a success story. And to me, that's one of those paradoxes that I still am not able to explain. I don't know when anyone will ever explain it. It's a great success story because it really only began, I think, in the early 2000s under the guy who just left as CEO, and it became, as you can see, a great success. So if U.S. Postal Service could come up with something like that kind of profitable diversification and at the same time address a social problem, that would be win-win. But, you know, I'm a little bit skeptical. Now, oops. It doesn't want to go that way. Ah, there we are. Now, typically, you ask the questions. Well, I'm now going to ask a question. One gentleman at the back is not allowed to answer this question, but everyone else may answer this question. Should be able to answer this question. Anyone recognize this? Anyone recognize it? This is Jim Campbell put this up earlier today. That he's the gentleman who wasn't allowed to answer. That's what he is. He was a little bit shocked the fact that he was called a gentleman, but otherwise he was pretty good with the idea. So you've seen this already. Talk about having your thunder stolen, right? But it is supposed to be part of a recap. And you can see the Post Italiano, if you can find it here. It's so small. Oh, there it is, but there's so much. All this financial services. And the person who presented this in Italy at our recent Postal conference, Silvia Spinazzola, she has subsequently wrote a paper for the conference, and the big point that came across in her paper was trust. Trust seems to be really important, and I think one thing we've established today is that trust is certainly an asset of the United States Postal Service. That's what you have to do. You've got to point it at that thing, and that's how it works. All right. And see, that's just a repeat of it, because I thought it was clearer than the other one, but whether it, yeah, maybe it's slightly. That's all that is. Okay, well, this is the last one. Let's sort of, United States Postal Service and postal banking. Well, I don't think that the United States Postal Service is going to embrace postal banking. 1 minute, okay. For all sorts of reasons. One, it's an agency structure. And because the agency structure, there are not great rewards for innovation. And the other thing, it's got a pretty set policy right now. It's effectively 3 policies, and the 3 policies are cut, cut, cut. And so it really doesn't fit in with any of the 3 policies it has right now anyway. Also, as Mike alluded to, where are the scope economies? Where are the scale economies? Okay, I'm not sure about the market failure. I guess the market failure, these people are not getting served. It's a social problem. Important to have a trusted organization. There's this guy, Bernard Roy, which just says there, Roy in English. He's worked for Banque Postal. And he, in his paper, emphasized the importance of trust. Mike raised the point about teller compensation versus postal clerk compensation. It still might work if you had enough surplus capacity at an office, so that the guy was there a lot of the time not doing much, and then could fit in some banking as well. Maybe it's possible to have some pilot programs and some limited offerings. Maybe that would be the way to go. So with that, how about that? Is that a minute?
That is a minute.
There you go. I'm
going
to give you that.
Thank you. So thanks to Michael and the other panelists. And I have a couple of questions that I wanted to pose, most of them just generally to the panel, and some of them may be more specific. And maybe I'll start with a specific question and maybe give others an opportunity to respond as well. And I wanted to address this to Phil, because earlier in the day there was a lot made about the training issue, whether or not staff in postal offices in the Postal Service could be trained to deliver, particularly if you had a model that's more like a postal bank, can they be trained to be able to deliver those services? And I know you spoke a little bit to it, and I wanted maybe you to respond, and maybe others on the panel as well, to talk a little bit about the training challenges associated with converting to some sort of postal banking and whether or not the Postal Service is up to it.
Postal employees on retail are fairly well trained. They get 80 to 120 hours of classroom training. They get on-the-job training. They get refresher courses. Rates are always changing. Products are always changing. And they have to adjust to that situation. So they are flexible, competent. One of the things about a workforce is when you offer a way into the middle class to workers, you get a nice queue, and you're able to hire, the best of the crop. And so Jack Potter got hired as a part-time flexible clerk, became Postmaster General. Donahoe was the same way, as well as many of the senior staff. People that are hired as initially part-time clerks are working our finance for us. They're in our IT department, they're in our accounting department. It's one of the reasons we have such low quit rates is because you can change careers within the Postal Service. And we hire talented people, and they're well trained, and they're competent. And I think that's one of the reasons why the Postal Service is a trusted institution, because we get a whole lot of good people. I think the kinds of work that retail people are doing it will not be a big leap for them to go into financial transactions. They're doing some now. So I think they're perfectly capable of doing it with minimal training.
Great. Any other panelists have a position on that question?
Not really a specific position on it, but it occurs to me that just as a thought experiment, look at it the other way. Would it be easier to train a postal employee to handle financial transactions, or to train a bank teller to take mail or take sell postage? And I don't mean to put down postal employees, but I think that the bank employees have a more complex job to handle there.
Yeah, the only comment I would make, I don't think we need to disparage the competence of postal workers. I mean, the real question is an economic question, which is it economic? Assuming the wage and benefit premiums of postal workers relative to retail bank tellers, is it economic to have postal workers take on that training and that new skill set? You could have a very expensive set of trainees. And if you look empirically at banks leaving from a number of these areas where they haven't been able to profitably serve some of these markets, and you layer on top of that, I think, much more significant costs that the Postal Service would face in trying to operate and provide the same services, it's more of an economics question than I think a skills or competency question.
Good point. I think speaking of that, sort of the economics question, a lot of the terminology that's been used has been about whether or not there's profitability or whether or not costs could be covered. And I wondered, particularly, when Michael and James spoke about the sort of need to, and others as well, about this as sort of a social, addressing a social ill and needing a subsidy. I wondered, and I'm sort of thinking, putting on my, I teach in the Springs cost-benefit analysis, is the right question about profitability, or if consumers are actually being sort of protected from some other kind of products, is net social benefit a better sort of economic question to be asking? Is that a viable question to ask about net social benefit versus profitability?
Yeah, I think it's an important question to raise, and I think it's part of what the discussion today is about. I think what you need to look at, though, is that the Postal Service, and we've heard it several times today, doesn't receive any material taxpayer funding. And so when you talk about whether they're positive externalities or negative externalities, I mean, the Postal, having a ratepayer finance system pay for that, the postal system only works to the extent that it's still a viable communications channel, predominantly for commercial business mailers who pay the bulk of the freight. And if what happens is, set aside whether the Postal Service turns a profit, if the costs of that system, either in terms of preserving excess infrastructure and costs to take on new social responsibilities, or if those responsibilities are additive to those costs, if the mail becomes less affordable over time as a consequence, mailers will leave the system, and then you run into the same problem you have today, where the system can't finance itself, and then ultimately the only one left to pick up the pieces at that point would be taxpayers. And so, if this is a positive social externality that benefits everyone, then I think it's worth asking the question, is it appropriate to only ask ratepayers then to pay for it, or should we think about some other funding mechanisms as part of that discussion?
You have an opinion on that, Michael?
Well, I guess I'm sort of not generally in favour of of additional subsidies. That's clear, as most economists are that way. But we have a social problem here that is probably, I think my conclusion after listening to various people today is the social problem is maybe bigger than I thought it was when I started when I started to think about this. I get Elizabeth Warren pointed out that 10%, these folks earning who average income about $25,000 a year, these families spend 10% of it on just these kind of financial services from these payday loan companies, check cashing places, and so on. And that's the same as they're spending on food. Well, my reaction to that was, wow, that is pretty serious. Only $2,500 a year on food is that not? You're certainly not living high on the hog if you're only spending $2,500 on food. And I'd much rather see them spending less on the financial services and eating better. So it certainly is it is certainly a social problem. Well, the way she put it, I thought. Now the question is, can you make it? Can we solve this financial problem and basically cover its costs? And I suppose if we had enough scope economies, if there's a sufficient, if the trust is so important, it could become successful. I mean, the Italian experience, I still don't understand why it was so successful. The papers that we've got really don't tell us why. So I think that's why I came out in the end saying, well, I would. What about trying a few, perhaps some pilot programs to see how these work out? But I certainly do not. I certainly in agreement with Mike that we do not want to see wholesale cross subsidies from letters to this postal banking and so on. Dan did say some good things about the Postal Service. He's been working on it a long time. He's learned quite a bit about it, and he said some good things about it. One thing he didn't say, which is, I think, a really good thing about the Postal Service, is that mostly its products are pretty good value for money. They're cheap compared to almost anywhere else. A stamp here, a forever stamp is a real bargain. So we should never forget that we're getting a pretty good deal out of the Postal Service. And Mike, who works for the mailers, wants to make sure this kind of good deal continues, which makes a certain amount of sense because we all gain from that.
Phil, did you have?
Yeah, I think that it's an important enough issue that we should deal with it, but I'm skeptical that any subsidies are necessary. When you look at the Postal Service network and you look at the potential business that might come in, I'm not convinced that you need to do much in terms of an increase in that network. I don't think you need new buildings. I don't think you need new high-speed internet. I think you've got all that stuff in place. And if an employee now does more transactions at the retail window, and there's room for them to do more transactions at the retail window, your marginal costs are just minimal. And the benefit should be to the mailers as well. If in fact you're using the same personnel, same buildings, same network, and you're bringing in additional revenue, then that's going to help the Postal Service be healthy, and that will help the mailers and rates in general. So, unless somehow the business is so big that the Postal Service is instantly overwhelmed and has to start adding a lot of cost, I don't think there's going to be a problem. I think it'll be a revenue generator and help everybody.
I don't think this is a situation, and we tend to drift into this too often, I think, of thinking of this as a case where you have the Postal Service on one side and a vast mass of predatory private sector financial firms on the other. Within the private sector, sure, there are a few predatory firms, there are a few fraudsters. I think by and large, there are firms that are offering service for value to the public. And even if you put aside the payday lenders, you have the credit unions, who certainly can't be accused of profiteering. And you have Walmart and hopefully other entrants coming into the market as well. So rather than just focus on the Postal Service, why not make it easier for all firms to get into the marketplace? I mean, Walmart got slammed back pretty hard, 6 years ago when they tried to get a bank. Why should we do that? Why should we keep them out? Shouldn't we encourage them to get more involved in offering financial services? Shouldn't we encourage other people to get in? And then, maybe if anything, as a government role, perhaps it's public education, so they can tell the good providers from bad providers. The Postal Service part of it is only a very small sliver of this whole picture.
I was going to raise, I wanted to give people in the audience an opportunity to ask questions as well, but one last question that I did have was that I found in the presentation about international models, pretty compelling, the sort of, stair-step graphic and also the associated chart that sort of showed that as you went from sort of a simpler sort of cash, merchant model along the continuum to a postal bank, that you saw greater impact, greater sustainability, and was just curious about the question of if there is a model that will work, where along that continuum, or if there's a model that will be, work from an economic sort of operational efficiency sense, where along that continuum do you guys feel that we need to be?
I wouldn't mind the Postal Service going into full-service banking, but as a practical matter, that's not where they're going to have to start. That would require, a lot of cultural changes, attitude change at the top of the Postal Service, and it would require some legislative change. I think the Postal Service can start and can do a substantial amount of business and a substantial amount of help if they start by expanding their current financial services, essentially going where the money order was this hard copy document that traveled over distance and help commerce over distance. Now, today, we need it to be digital. And I think that they can do things that essentially digitize that money order with, as I mentioned, with something as simple as that reloadable card. You can tie that to government benefits. You can tie that to savings. You can tie that to making purchases over the internet and a whole lot of different things. And I think that will be very helpful to this unserved community. And it can bring in substantial revenues to the Postal Service. And it's simple. It doesn't require a lot of capital. And I think they can get started that way. I think the idea of the platform where you perhaps have offered to other providers the opportunity to use the Postal Service as one of their outlets, I think that has a lot of potential too. I'm not sure that that requires a lot of capital either, but you have the partner who's probably going to come up with the capital if it does.
Right.
And I point out the Italian Post is kind of an example of this. When they jumped into this, one of the things that they got were some government contracts, where they essentially were providing the benefits to people through financial instruments for the government. They made partnerships with banks who then started using the Post as well, and it grew into a very big business very fast.
My concerns about all this are mostly that the claim benefits have been vastly exaggerated. It seems to be almost a free money attitude. All you have to do is make minimal changes, and you'll get this wave of formerly unbanked customers that'll give you $10 billion. And I think that's just not going to happen. That there are other competitors out there, that there are other reasons people are unbanked, that there are limitations to what the Postal Service can do. That said, I'm not necessarily in favor of restricting the Postal Service from getting involved in these things. If there's a red line, I would draw that at the extension of credit.
Okay.
I think once you get into extending credit, then you're putting the U.S. taxpayer at risk, even if only indirectly. And you're getting lots of questions about how they do this, what their standards will be. So, but otherwise, I think it may be a waste of effort, misdirected effort, but I wouldn't ban it.
Gotcha. Michael, do you have thoughts about?
No, I mean, the only comment I would make about the international examples, I think they're helpful, obviously. I mean, there's probably, a lot the U.S. Post can learn as it looks at this, whether it chooses to pursue it or not. I mean, but I do think the context is important. In almost all of the examples cited in the OIG paper, for instance, the liberalized markets, the posts are no longer government agencies. They don't enjoy a statutory monopoly over their court mail business. They're actually now private companies. And they actually are real depository institutions, which are subject to all the generally applicable banking laws that any other bank would be. And those that have been real profitable haven't been focused only on the social good of served and the underserved. They're actually competing in the market for profitable banking and underserved markets. And I think in part they're explicit they need to in terms of generating any positive contribution. So I think that is a distinction from what, where we started, which was, can we address the social need that we've identified and at the same time generate significant revenue for the Postal Service to help close the revenue gap? And so I think really they're not really apples to apples in that sense, but there's a lot to learn from there. In terms of where to start, it seems to me the conversation this morning with the bankers and the credit unions, one place is if the Postal Service does have a location in some of these communities where a bank doesn't, but is willing to lease some of the space to a bank that has the expertise, that already has the services up and running, presumably the Postal Service would get some revenue from the lease. Clearly they have statutory authority today to offer that. And the consumers who are currently underserved would have enhanced services. So that seems to me one place you could start.
Michael.
Well, yeah, the critical thing is really, can you find any scope economies here? I think if you're going to make it's going to cover its cost. I don't think really a lot of scale economies, maybe some scope economies. And the analyzer that talked this morning said, well, the facilities that they've got are not any good for retail. And I guess what he was alluding to is the fact that many post offices, you've got the retail counter, and then you got behind it, you've got a sorting place, a sorting facility. And these days, almost no sorting is done at that level. It's done through automation, and the mail carrier gets almost all of his mail set up in walk sequence for him. It's done through this machinery. So there may be space that's going a begging that could be converted fairly easily to retail space. I guess there's also a possibility it could be leased out. But So I'm not sure I completely buy the notion that the facilities are not going to be able to handle the banking and financial services.
Yeah. Okay. Thank you. I wanted to see if the audience had any questions for our panelists. Looks like we have.
Sheldon Garin, Princeton University. I wondered, since a lot of you are focused on the business operations, you didn't really talk a lot about the idea of economies of scale. And I think throughout a lot of the day we have assumed that there's going to be just a handful of customers, the very poorest of the poor. But if you set up even a prepaid card with affordable rates that allowed transfer functions, I think you would find that there would be a vast youth market. I mean, if you think about how young adults move around, college students move around right now, if they're not part of Bank of America or a few other very large banks, they have to pay ATM fees. Their parents need to transfer money to them. My guess is you'd find a number of middle-class people. I'd be one of the first to sign up because it would be a way of transferring money to children because, in fact, that's very hard to transfer to a family member if they're outside of your own bank. And so I'm just wondering, if we assume that you might actually get a larger market than what you think, wouldn't economies of scale kick in and this could be quite promising?
If someone can get the economies of scale, yes. But why
it's happened everywhere else.
Why would it be the Postal Service that wins those economies of scale?
Because it's always happened. With all these other systems, you always get vast economies of scale.
But with a prepaid card, I don't see any particular asset the Postal Service has that banks don't have, credit unions don't have, Walmart doesn't have. It's a very competitive market, and yes, if you get the vast majority of the market, you have scale, but I don't see why they would get the majority of a prepaid credit card, prepaid card market.
That research study that I concluded my remarks with, it actually shows that in 60 countries that they looked at, they looked at people who had accounts with traditional banks, and they looked at people that had accounts with the Post, and the overlap was bigger than those that just had the Post. People go to multiple institutions once they get banked. They go to multiple institutions and they shop for the best deals, for the best purposes, and the evidence is in those 60 countries that people are using both systems. So it is possible, if it kicks in, there could be economies of scale. I think if it was that successful, there'd need to be economies of scale for the Postal Service to make it work. I think it's a smaller operation. You don't necessarily need that.
Michael, do you have a response to that?
Economies of scale. You've got economies of scale that have a certain degree to them. Most firms, firms have economies of scale to a certain level. And then you have the natural monopoly, which is everywhere decreasing average cost. The way economists looks at economies of scale is looks at the decreasing average cost. And with the national monopoly, it's everywhere decreasing average cost. Now, what drives scale economies? Well, scale economies are driven by things like indivisibility and fixed costs and low marginal cost. If you have low marginal cost and you have high fixed costs or sort of indivisibility, you're going to have that decreasing average cost. You can have that. You're going to see scale economies work. And I'm not sure I see that here. What I do see, though, is I do see the possibility that there might be some scope economies if you've got unutilized facilities and you can put them to, and this use turns out to be the best use you could put them to in terms of the surplus you'll generate, then there might be some scope economies there. I don't think scale economy is a big driver. It's clearly a big driver when it comes to mail delivery. It's a huge driver. It's clearly a big driver when it comes to electric utilities. But I don't think I see it with
retail banking.
One of the main sort of criticisms of Walmart entering banking, and I worked at it at my firm, and I've read every legislative, argument against Walmart. I've written 3 papers about it. The problem that the banking industry saw, and the reason why it was dead in the water before anything happened, was that there was a fear that Walmart would use economies of scale and scope to underprice banks, make such a high profit that they would do essentially to banking what they do to everything else, right? Lower the prices, drive the competition out, and then become the monopoly. And so, that was the argument. There were others, obviously. There was these anti-competitive concerns against Walmart. And so they did not allow Walmart to have a bank. These very same groups now, in opposing postal, so there's 2 things. Now we're hearing from the post office, well, Walmart can do this, but the post office can't, right? You were comparing before post office employees versus bank tellers. Why not post office employees versus Walmart workers, right? If Walmart workers can do it and underpriced banks, why can't the postal union? The other question, going back to James, is a lot of these people that were opposed to Walmart owning a bank are now opposed to the post office owning a bank by saying, or operating as a bank by saying, well, Walmart can do it. So I'm curious, James, why would you prefer Walmart to do it as opposed to the post office?
I'm more concerned about the post office because the post office, the postal service, can get the power of government to support it. That ultimately it's backed, whether we say so or not, it's backed by the taxpayer should it make an investment that fails. It can use its power to, and I believe that it was in your paper, you suggested using the IRS to collect bad debts. That's something that Walmart can't do, fortunately.
Yeah.
It can direct government deposits to its prepaid credit cards or to whoever it wants, potentially. I mean, there are all sorts of ways that the Postal Service can use the power of the state to its own advantage that other private competitors cannot do.
So it's a privacy concern and not so much the backing of the, you're worried about people's rights being violated.
Not necessarily privacy, but it's an artificial advantage that the Postal Service would have.
Now, there was another part of your question, which was about why not postal employees if Walmart employees can do the work. I didn't know if anybody wanted to respond to that part of the question.
I'm happy to respond. I mean, I think the issue is the same from an economic standpoint is, could the Postal Service competitively, would they be price competitive or cost competitive? Given the wage and benefit premium the Postal Service employees are paid, they're not going to be in a head-to-head competition with a retail bank teller. My guess is Walmart may pay its employees even less than a retail bank teller, which would just exacerbate the disadvantage the Postal Service would have structurally to try to compete for those same markets to be profitable. Again, it's a separate issue if you say you're somehow financing this, or your aim is not to turn a great profit with this. But if you're looking, can the Postal Service profitably enter these markets where others have had trouble, they do have some structural impediments that Walmart or the banks wouldn't have.
Could I just completely try and answer this question that you raised, Mariska? The idea that these guys thought, well, Walmart is going to beat the hell out of us, if you put it bluntly. And that's probably would in some instances. I mean, there was a paper written about called the chain store paradox, where he was basically they would price such to drive the competitors out and then take your prices back up again. Good old style predatory pricing. So you can see well there might be a concern there. But I think really the issue is, and you didn't actually say this, but I think this is what I conclude from that. These guys that were against Walmart coming in, the same guys that are against like the Postal Service coming in, because they want to preserve their market power. That seems to be the issue.
One more question?
Yeah. I'm not sure it's a question. I just wanted to let you and the audience know that when I proposed the forever stamp, as history shows with all other kinds of reforms, I got a lot of pushback from the Postal Service. They had all kinds of reasons why it wouldn't work. stamp as legal tender. We won't have track of what our obligations are in the future. It'll cost too much money. We won't be able to differentiate between years. They had all kinds of reasons why it wasn't going to work and it was going to be too expensive and people wouldn't like it. Customers, they were used to it. And of course, it turned out to be very popular, saves them money. They admit it's the best innovation, customer innovation, retail innovation that they've had in the last decade at least. And it wasn't rocket science. It was being done all around the rest of the world. And I think the same point can be said about expanding financial services. It's not rocket science. You have well-paid, unionized employees all over Europe who are making money for their posts by expanding their work and including some form of financial transactions with it. And Phil pointed out that even now, those financial transactions that the Postal Service has with its well-paid unionized clerks make a larger contribution to overhead than much of the advertising mail that the Postal Service is desperately trying to hold on to in the system. So if the Postal Service was really being businesslike and saying, what's my most profitable operations within the system that I want to maintain and expand, it wouldn't be some forms of their flats and catalogs. It would instead be, let's do what we can to advertise and make more deals to expand our money orders. But they haven't done that because they have a mindset that retail is a burden, not an opportunity. And they share some of the same biases that you do about if you have a high-paid workforce, it can inevitably be too expensive. And one of the reasons we're in this room today, because we have this divided economy with people who are desperately poor, is because we have this mindset that if you pay people a reasonable middle-class wage, that's not profitable. So therefore, you have to race to the bottom, and you have banks, and you have Walmart, and you have payday loan people who are paid less and less and less, and more people who then can't afford to use banks. And one other thing that I wanted to talk about, which we didn't talk about today, which is another reason we came here, is there are a lot of predatory practices going on within the banks and within those products that they're developing, these loop cards and debit cards, that a postal service offering a sort of straightforward card could challenge. And so it could really help just straighten out some of the predatory practices that are happening in existing banks, which I think would benefit everybody as well. So I'm sorry if I
well, maybe
tangent, but I think these are, and they may be, the fundamental policy arguments, as Tom Davis said, we're a very divided country, so we look at these things differently. But I do think the evidence is there. It's not rocket science. Postal services around the world are doing this, and for the most part, they're doing it well. Give it a try.
And maybe I can sort of frame that into a final question. Thanks for those comments, which is, I think, one point in there that we have focused, and I probably got us off onto that start on the challenges, but the promise here of being able to offer straightforward products that do provide some security to consumers if we were to be offering them by the Postal Service. Is there agreement that that would be something that would be possible? Likely?
It'd be possible. I mean, just in terms of the international experience, what I was struck by Jim Campbell's point that almost all these situations that have been successful involve cases where the Postal Service involved had already been reformed in some way, if not privatized, corporatized, or had some other major reform that they underwent first. So I'm not so sure that the international experience is directly applicable. That said, again, I'm not ruling it out entirely. I think that the question Chairman Goldway raises brings up the question of to what extent should the Postmaster General be free to implement his or her strategies for managing the Postal Service? And I don't think they should have an absolute free hand, but I think that's through some deference so that you have some responsibility and accountability for the result. You know, I don't know what rule you would apply, but I am concerned, and less coming from the Postal Regulatory Commission, but I'm more concerned about Congress stepping in and mandating a different direction, whereas they've done for a long time, restricting those options.
We are about out of time, but I was going to give Phil, do you have a last word?
I do think that that offering those products would be low risk, low capital, and offer the opportunity of the reward to service this unmet need and the opportunity for the Postal Service for revenue. And I think it's a low risk opportunity. I think should be taken.
All right. Thanks a lot.
Hi, Travis Plunkett with Pew. I'm back. You saw me at the beginning of the day. Now you're going to send me or see me at last thing at the end of the day. Thank you to this panel and, frankly, all of our speakers and panelists. I'm not sure I have total clarity on exactly what policy issues need to be addressed going forward. We clearly have a diversity of opinions on both the proper role of the post office here, even on some of the facts on the ground in terms of what questions would have to be answered to develop a consensus here. But the presentations and the panels were uniformly excellent, and we appreciate participation of all the speakers. A number of people have asked what would be the next steps for Pew going forward on this issue. So I'll start with the short term and move to the longer term. We will post video from the conference and materials that would be specifically the presentations this morning on the National Public Survey of Attitudes that we commissioned, and the slides that you saw on the geographic analysis of proximity of the financially underserved to banks and to post offices. That material should be posted within 24 hours. When Alex Bertreau finishes his paper in the next, I'd say, month or so, we will certainly notify participants and post that as well. Within 4 to 6 months, we expect to have a report summarizing the proceedings, the major themes, unanswered questions, and policy implications, which we will distribute to you all, of course, and post as well. We, as has been mentioned several times, do not have a position on the larger question. We thought we could contribute to the discussion, the policy discussion in the field by holding this conference. Whether we get involved in the future will depend on our assessment of what we've heard today and our many conversations with a number of you, examining both political feasibility and the policies at hand. So unclear at this point whether Pew will take a further step in getting involved in this issue other than to provide information on the discussion and the debate. So in terms of next steps, that's where we're headed. Synthesizing this conference, as we heard, there were several efforts on the last panel to do so. Major themes is a real challenge. I think we heard universal agreement on one thing, which is that the problem of financial inclusion, the problem of serving the approximately 65 to 70 million Americans who are financially underserved is a serious problem. And I'll note that we heard that from Chairman Issa, from Senator Warren, and from many other folks as well. Michael Crew even told us that he wasn't clear that it was as big a problem as it may appear to be. So now, in terms of the two goals that have been offered for an involvement by the Postal Service in offering more financial services, both to serve the underserved and to increase revenue and stabilize funding for the post office, we heard either disagreement or lack of consensus. Let me try to summarize what we heard there. Certainly, when we talk about our bookends, Chairman Issa and Senator Warren, there was disagreement on whether the Postal Service is the right messenger, the right place to solve the problem of financial inclusion. So there was strong disagreement there. But when you start to dive beneath the surface and talk about some of the practical questions, there was disagreement, but there was also some consensus. So the extent of revenue generated for the Postal Service, if they get involved, what we heard is that, well, it depends on what model is used. Alex Bertrot described 5 different potential models. The most difficult being sort of starting a bank from scratch. Many of the models involving partnerships. Next question, what products could be offered? Although there was disagreement in terms of legal authority there, we actually heard some consensus on if you started somewhere, what products might be offered. So Chairman Goldway offered us, I think, a very helpful overview of the legal framework and a roadmap for if the Postal Service began somewhere, where would they begin? With existing financial services, with money orders, with expansion of money orders into the electronic realm, and with international transfers as well. And made it clear that some of the financial services and products that were being discussed, her view was there was not legal authority right now to pursue that. So I think we have some consensus on what the core, if you began this process with the Postal Service, what the core products would be. I think we will need to, in our conference proceedings, very clearly indicate that people like Jim Campbell questioned timing. Do you start with diversification, or do you start with modernization and reform and follow that with the diversification? Jim Campbell also made it clear that in other countries that he's examined and that Accenture examined, diversification might involve other products beyond financial services rather than financial services. There was obviously disagreement on the extent of an investment or subsidy that would be necessary by the Postal Service, with Senator Warren saying basically she didn't see that there would be a subsidy, and Chairman Issa saying, well, let's see, we'll need to rebuild the post office from the ground up, I think was his quote, in talking about the breadth of sort of restructuring and subsidy that would be necessary. I think Alex Bertrot was helpful on this question, pointing to France and talking about the fact that from his point of view, his analysis, inclusion in France, financial inclusion in France, could be accomplished without the subsidy that the French government had required. And Michael Scanlon pointed out that the law simply doesn't allow the USPS to lose money. So a subsidy might not be a relevant question here.
In terms of products, I did hear a consensus. What I heard in general was if you're going to start somewhere, you start with transaction products. You start with the products that the chairman identified as likely places to begin given the legal framework. Possibly move to savings products, although I will note for the record that the Inspector General did not deal with savings products or recommend savings products at all as a place to begin. And there seemed to be pretty clear agreement, pretty clear consensus that credit products were not a good place to begin for the Postal Service, that the regulatory issues were much more complicated, and the potential risks to the post office was much higher. And we heard that from a number of quarters. So there was some consensus there. Now, on the question of demand, a variety of perspectives, with Sheldon Guerin, for example, talking about the poor, the young, and others flocking to postal financial services, and others disagreeing with that notion, James Gattuso in particular, saying that he didn't see evidence based on research he'd looked at that there was going to be significant demand for additional financial services at the post office. The Pew Research shows that there was interest by people who were already using alternative financial services if you remember the question, if the costs were lower than currently offered in the market. But as Alex Horowitz pointed out this morning, that interest was confined mainly to a fairly small number of people who were concerned about the issue, and that most respondents didn't really have an opinion one way or the other about the post office offering financial services or not. We did see, though, that when presented with sort of the two different points of view on whether the Postal Service should get into financial services or not, that the majority of respondents did line up with the basic arguments behind the Postal Service offering financial services. In terms of regulatory issues, I mean, we heard a number of them. Let me point to one that got some attention but not a lot of attention. And that is the question of regulatory oversight. So we heard from Doug Hong with the Consumer Bankers Association that from his point of view, the Postal Service should be subject to the same rules as banks and credit unions. I think that the Inspector General seemed to think, based on the model that they proposed, that very little had to change in the way of regulation because a partnership was the likely, first step, the platform that he talked about with financial institutions. One would assume then that the regulatory structure would remain more or less as is because you'd be regulating the people who were partnering with the post office, the banks and the credit unions who were participating in, who were tapping into the platform, and not much would change. That is a question that I'm going to flag right now, though. Obviously, it depends on what you do, but assuring sort of the twin goals of this idea, both financial inclusion and revenue for the post office, without undermining the quality of the products that are offered, Senator Warren touched on this as well, is a real challenge, and oversight of those products to ensure safety and transparency is obviously very important. Okay, so that is my quick synthesis of the major issues. As I mentioned, we will be putting out a report. Before I finish up and finalize, is there anything that, significant that I missed that any of you who have hung in there with us all day would like to throw out to flag for us as we start to synthesize this in our report? Yes.
The slides that were presented here by the other, but besides the Pew slides, will they be posted or somehow?
Oh, thanks for asking. I think what we're going to have to do, we have control. You know, we can make a decision on our own slides. We will talk to each of the participants. If they would like to do that, we will do it. Okay. So I want to finish with some thank yous. A number of people were involved in organizing this conference. It went off without a hitch. I have heard very positive feedback about the information we heard. So I want to thank Aaron Bongard, standing in the back, who helped organize, take charge of the logistics, along with Kristen Schulte. Where's Kristen? Andrea Risotto has helped us deal with communications and the media. And you've all heard from Susan Weinstock, who helped organize all the sessions. Thank you very much, Susan. Thanks for coming. We look forward to talking to you about this issue in the future.